1%. We're going to get a live report in just a little bit about all of the action from Brussels later this hour.
Read all about it. It's like, man, this is no way to run an org. I was trying to cobble it all together for what it meant. It has to do with Parliament, but each individual country, the whole thing. I mean, you got things happening in Italy that were significant, in Austria. So you've got the overall EU, but then you've got all the individual players.
Spain and Italy, they maintained kind of their party lines. It was France that was a big shocker, especially.
Well, Italy was already pretty far right, and there's a big fear of Marine Le Pen and calling a snap election. Normally, that galvanizes people that are worried about where she wants to go, and then they say, "Okay, we didn't really mean it," and then you come back a little. Now, I don't know what it means.
Her party got twice as much in the EU election.
I don't know what it means for Helmut Kohl and Francois Mitterrand. I don't know whether those guys are...
I don't think they care.
I don't think those guys are in trouble. Well, you don't know. They could be looking down on us. Still talking to Joe Biden off and on.
Macron's move, he's able to do that because even if his party loses in Parliament, it's not going to change his position. He'll still be the president. It just
who really got massacred was the Green parties across the board. And nobody's going to...
In Germany.
Net zero anytime soon. Did this GameStop thing, how do we sum it up? I got nothing? Is that basically what he said? It's almost like
insanity.
It's almost like the emperor. It's almost like the emperor. You could say, "Oh my God, he's buck naked."
Well,
Kitty.
It's also because, as you mentioned on Friday, Andrew, he got lawyered up.
He did.
That'd be pretty
And he also was.
They have clothes for him.
He was acting like. Oh, I mean, did you watch? It was just like watching a train wreck of a situation.
What's he gonna do? Is he gonna say, "Here's why GameStop is fundamentally going to improve"? He's got nothing. He's got what are those 8 balls?
He had his 8 ball.
What did that say?
He was talking
what did
about
it say when he
talking
looked at
about he basically reiterated what he was saying 3 years ago. He was back on the same thing, but the first 15 minutes were so insane that I think any kind of like semi-sane person was watching this thinking, what is going on here?
He went in, and people said he's going to come out a billionaire, and as it turned out, he lost $250 million, essentially. Now let's talk. Check out the shares of GameStop. The stock plunged. I don't know if he ever had the quarter. Paper profits plunged by 40%. 40% on Friday after the company announced that sales dropped significantly in the first quarter. Said it was selling more stock. Investors weren't impressed by a live stream by Keith Gill, a.k.a. Roaring Kitty, who appeared on his YouTube channel for the first time since the meme stock craze of 2021. He reiterated his previous investing thesis, but offered little new reasoning behind his large stake.
They're in the transformation stage here, and what could they transform into? You know what I mean? There's a lot of question marks about that, understandably so. But essentially it becomes at this stage of that second part of the analysis, this transformation part, it becomes a bet on the management.
And Gill said he doesn't have any institutional backers and said the GameStop positions that he has shared are his only bets. Shares of GameStop were halted multiple times during his stream. It's kind of like a Pied Piper thing with a lot of followers. What does this mean for
the
regulators or E-Trade? No, what does it mean for people that were looking at it seems to me now they can say this is gonna take care of itself. I think that's what they're probably saying.
Solo operator.
Huh?
Solo operator.
Yeah. It's like, enough said. If you guys want to, you individual investors, do what you want to do. But
I also think there are hedge funds and others who are just following this, thinking that they can sort of surf on top of these other, some of the retail and everything else. Yeah.
Which way?
Well, at this point, I don't know. But I think there was a moment, obviously, last week where they thought they could surf on top of them on the way up.
Really?
Clearly.
Even though they're the ones that he's trying to squeeze.
Different ones he's trying to squeeze.
I don't think he's actually trying to squeeze. I'm not sure any of the theses we've had about this have anything to do with anything.
Yeah. What was the other thing? He had the 8 ball, and there was something else I read that just seemed funny, that it was like bonkers, right? Sort of. Yeah.
All right, on this week's Squawk Planner, The Fed takes center stage, beginning a two-day policy meeting tomorrow. Before the Fed's rate announcement on Wednesday, we're going to be getting the latest read on inflation from the May CPI report. Then you've got producer prices that are due on Thursday morning and import-export prices on Friday. It is a light week for earnings, but we do have a few reports of note. You've got Oracle reporting tomorrow, then Broadcom on Wednesday, and Adobe reporting on Thursday.
Meantime, Apple kicking off its developer conference that's happening today. The company expected to lay out its vision for integrating artificial intelligence into its major apps and features. Apple also expected to show off new software for its Vision Pro headset, Apple Watch, and Apple TV platforms. This is going to be a very big day for folks to understand what the future of Apple is going to look like, and I imagine these shares move around as a result today as well.
And Elliott Investment Management has built a stake of nearly $3 billion in Southwest Airlines, plans to push for changes. Reports say Elliott plans to engage with management, but no other details were available. Southwest stock price has fallen by more than half in the past 3 years. What year was that?
1980.
Because half the people we're talking to weren't born yet.
Yeah.
So they're like,
What are you talking
what's
about?
wrong with these people? Fine.
All right,
okay.
welcome to our heads.
Yeah.
Tesla shareholders vote Thursday on whether to reauthorize Elon Musk's pay package. Over the weekend, Norway's sovereign wealth fund said that it will vote against that pay package, citing concerns about the size of the award, its structure, and how it fails to mitigate key person risk. Tesla approved the $56 billion pay package back in 2008, so did the shareholders, but it was voided by a judge in January. Norway's fund owns about 1% of Tesla, worth about $8 billion at the end of last year. The fund voted against the pay package in 2018. So at least it's not one of those situations, Andrew, where they vote one way back in 2018 and then say, never mind.
Yeah.
I guess the institutional versus retail is going to be an interesting question.
It's huge retail.
Yeah.
50% retail. So we'll see what ultimately happens. I mean, if you focus on Twitter or Reddit, you'd think that the retail is voting for Elon, but I don't know. We'll see.
And we were joking about E.T. the movie. That may have been a long time ago, but Steven Spielberg is still relevant.
Oh, yeah.
Well, we'll see just how relevant, but he is very making the big video.
You're trying to bring this back to Bob.
No, I'm not bringing it back to him, but he is doing a big. We'll see. But I mean, he's still as visible as probably more visible.
I think
than he was.
he's a bigger cultural icon now.
Right, exactly. So we're isn't it? What did we say it was in the 80s? So
83 maybe.
82.
I'm thinking
So is that 40? That might be 42 years or something. And that little kid has been in a bunch of movies with Leonardo DiCaprio.
Coming up when we return, Apple kicking off its developer conference today. We're going to tell you what to expect from Apple's artificial intelligence strategy next. And as we head to a break, here's a look at shares of NVIDIA. Under pressure a little bit ahead of the open as it's 10-for-1 stock split taking effect today. Squawk Box comes right back.
That's 120.
Welcome back to Squawk Box. Apple's Worldwide Developers Conference kicking off today. The company expects to lay out its vision on how it's going to be integrating generative AI into its products. And joining us right now with a preview is Daniel Flax, the Neuberger Berman Senior Research Analyst. So tell us, what is your best guess at this point about what we're actually going to see, and how much of this is a make or break day?
Good morning, Andrew. I think we'll see improvements to Siri. I think Siri will become a lot more valuable. I think you'll see areas like the camera, the video, summation around your calendar, messages, and a whole host of other products, features on the platform get infused with a little bit more intelligence. It makes it valuable. I do not think it's a make or break day. I do think the key here is Apple laying out the tools for the developer community, and it's really those developers who build on top of the platform that makes this broader ecosystem vibrant and contributes to install-based growth, which ultimately drives revenue growth for the company.
How much better or worse do you expect whatever these new products or features will look like to be relative to what's available, for example, on an Android phone right now?
I think it will be in line to a little bit better. And I say that because where Apple's able to differentiate is really its ability to bring the hardware, the software, and the services together in a fun, secure, and private way. And this ability to deliver that user experience contrasts a bit with Android, where there are many good devices, but Apple's able to unify it, and it does so across its broader product and services ecosystem, and that's what's particularly valuable in my view.
What is your expectation on what we're going to learn about either some kind of partnership with an OpenAI or potentially with Google and Gemini?
I think you could see something from OpenAI today. I think Google, which remains both a competitor and a partner to Apple, I think they're going to continue to have an important role to play in search on the platform. And of course, Apple is going to continue to innovate and invest in its own offerings, which in some sense compete with OpenAI and Google. So it's a combination of things.
Do you think it's going to be a paid-for service? Meaning, one of the reasons that I've been not skeptical of what a partnership like OpenAI would look like, but thinking that, Google has paid a fee effectively to Apple. It's unclear whether OpenAI is in a position to pay a fee to Apple, and likely actually the reverse, which is to say that depending on how it's supposed to work, you'd think that Apple would have to pay a fee to OpenAI. Apple doesn't like to do that. Dan? He's frozen. The question was either that good or that bad that he decided that he would freeze himself.
You either stumped him or he's like, this guy.
This guy.
Yeah, I can't. I mean, I'm not even going to try
back?
that.
I'm back, Andrew. I think what you're going to see is Apple is going to pay, is unlikely to pay anything substantial to OpenAI. We'll have to see how the traffic goes. What you're seeing, though, is Apple's ability to distribute to over 2 billion users on its broader platform, over 1 billion on the iPhone, is what's particularly valuable. The key here, though, is the user experience. OpenAI has, I think, an important role to play in the broader tech space, and Apple will partner with them. And I think Apple will give users choice if they want to do more with Google as well. It's very, very early, and so what we're looking to see is how the user experience evolves and whether that drives growth.
The reason I raise it on the OpenAI piece is if the service works as well as you'd want it to, which is to say that you'd be able to, move your calendar around and get deep into certain apps and do all of it by voice and everything else, and it's actually leveraging OpenAI to do that, it means that there's no contact back to OpenAI, so it makes it much more complicated to try to, for OpenAI in the future, if you will, to be able to monetize all of these folks. The old model was you get to monetize these people because you have this massive platform. They're going to go back to your site, and on your site, you're going to be able to do something with them. In this case, in an AI world, there is no going back, and that becomes the sort of challenge to the model.
For OpenAI, I think they'll get access to aggregated data. I think Apple will work to ensure the privacy of its individual user data. I think there's still value to OpenAI in terms of its ability to get the volume of data to improve its models and its experience. The difference with Apple is that users, your comment earlier in terms of the monetization, Apple monetizes through the device sale. They also sell incremental services on top where they add value. And so I think that model for Apple will largely be intact. And for the providers like an OpenAI, like a Google, I think you'll continue to see that play out in perhaps a little bit of a different way with generative AI. But ultimately, it's about a little bit of value for those service providers from the data.
Okay, Dan, we're going to leave the conversation there. Thank you very, very much for joining us this morning. And be sure to catch CNBC's full coverage of Apple's developer conference. That's going to be running throughout the day on our broadcast. Scott Wadden will be live in Cupertino. He's going to have the kickoff and key takeaways. That's going to happen at 12 and 3 p.m. Eastern time this morning, or today, I should say.
All right, when we come back, former President Trump pledging a tax cut if he is reelected. We have the details right after this break. And later, Moderna CEO Stéphane Bancel will join us, first on CNBC. Squawk Box will be right back.
C.
Former President Trump speaking at a rally in Las Vegas yesterday. He said his administration would eliminate taxes on tipped income first thing if he is reelected. A spokeswoman clarified that Trump would ask Congress to eliminate taxes on tips. Much of Trump's 2017 tax cut package is set to expire next year unless Congress steps in to extend those cuts or to rewrite the tax code.
Meantime, USA Basketball won't include, this is so crazy to me, Caitlin Clark in its 12-player roster for women's competition at the Paris Olympics this summer. Clark telling reporters she didn't feel any disappointment with what she viewed and many viewed as a snub. She said she's excited for the girls on the team and will be rooting them on to win gold. When asked about the Olympic decision, the Indiana Fever head coach said that Clark told her, "Hey, coach, they woke a monster." Clark didn't need extra motivation. On Friday, she scored 30 points in just 39 minutes of playing time against the Washington Mystics. That included a rookie record tying 7 3-pointers. But can we just say that it's totally nuts? I mean, it is nuts. If you're trying to build the franchise that is American basketball, I can't even rationalize in my head how you could ever get to this conclusion.
She's definitely in the top 12. I don't know if she is in the top 5 yet. And you know, the way you start and you watch the greatest college athletes in any of these sports when they go into, whether it's the NFL or MLB or anything you go into, it takes some time, and she's not great yet in the WNBA. She will be.
This is a snub.
I know.
This
is probably
there's no other way to describe it.
No, she's in the top. Definitely in the top 12.
Choose to do this, and if this is supposed to showcase American basketball, if that's
Andrew,
what this is about.
If it's about money and visibility, you're right. If it's about picking see, I say she's definitely in the top 12. I don't think she's in the top 5 at this point
She's had
yet.
a rougher entry in, but I think the bigger issue is the lack of her team's support in the situation where she got shoved down recently and nobody came to her.
I've watched some ESPN, and these guys, they definitely call it exactly like it is, and we know what a lot of it is about. And they harken back to Larry Bird. When Larry Bird came in, and you didn't know whether you liked Larry or Matt, and there was initially some tension between those guys. They became lifelong friends. But at the time, it was like, you know, Larry. It is a sport where, I mean, African American or black people are great basketball, and he was like
people coming in, and
it is.
But is Kathy Engelbart, who runs the WNBA, and Adam Silver just going, "Oh my God, this is just one of the missed opportunities of life"?
I've been pulling for, but until this game on Friday,
she has not scored as
she hasn't been
12 points,
great
15 points,
yet.
17 points.
And when that foul, I could see it as a flagrant foul and
flagrant foul.
and a cheap shot. And then again,
and ball was out of play.
I know, but it looked like there was a little floppy maybe, and also. Welcome to the.
Did you? It was
welcome to the NBA. I don't immediately take it as.
But it was welcome to the WNBA.
Exactly.
It was not an immediate response from her team, like where you go after them. Bill Maher said it right, where with a guys team, you play hard against guys, but if somebody attacks a guy on your team, you all go after.
I mean,
that didn't happen here.
I really can see both sides because it's like she is why everybody's talking. She is why everybody's talking about it right now. Yeah. But she can't sit there and just play by her. There are great players that were already there that maybe didn't get as much.
I get it. But
and just having, and it's good for everybody. That's the thing. But I would be a little bit miffed if I had been working my ass off.
This is basically like poking the sleeping giant. Okay,
well,
this is going to motivate me. Yeah. This is going to bring me on. And she's done it before, so.
She probably she's in the top 12, you think. But that's a big statement to make about someone who just left Iowa to be in the top 12. And a lot of people just want her there, but you want money, you want people to show up, you want ratings on TV, put her in. But is she really as good as the other 12?
Clearly, the head coach doesn't think so. Right? That's you, Jesse.
All right, coming up, a shake-up in Europe. Following EU elections yesterday, we'll take you live to Brussels for the latest Squawk Box, not for the latest Squawk Box. For the latest, just the latest whatever. But Squawk Box will be right back.
Good morning and welcome back to Squawk Box. We are live at the NASDAQ market site in Times Square. The futures this morning under a little bit of pressure. Dow futures are down by about 120 points. NASDAQ futures off by 28. The S&P futures down by 11.5.
As you probably have heard by now, far-right nationalist parties gaining ground in yesterday's European Union elections. The results prompted French President Emmanuel Macron to dissolve Parliament and call for snap elections. Sylvia Amaro joins us now from Brussels with the latest. Good day, Sylvia.
Good morning, guys. Indeed, these latest European elections have showed a strong support for far-right politicians, and this is very clearly the case in France, where the party of the French president, Emmanuel Macron, lost significant amounts of support. To give you an idea, the far-right party, led by Marine Le Pen, obtained about 31% of support, whereas Macron only obtained about 15%. As a result, Macron called for a snap parliamentary election, and this volatility is putting pressure on French assets. We are seeing the main market, the CAC 40, down by about 2%, French lenders moving as low as 8% as well, and the euro is also trading lower against the US dollar and the British pound.
Very good. We will. So we got more elections to watch. Not, I didn't know we were supposed to be watching this closely, but now I can see. And obviously, the question is this kind of a anti-globalization sentiment that might be present everywhere in the United States as well?
It is present pretty much everywhere, and it is putting a pressure on certain policies. For instance, what we are expecting from an economic perspective over the next 5 years is that the 27 EU nations will be a lot more focused on industrial policy. There's a general feeling here that the EU needs to do more to compete against China and against the United States, in particular in the wake of the US Inflation Reduction Act. But there's more. The European countries are also expected to be spending more on defense, exactly because they believe that they cannot fully rely on the United States for security. And no doubt that the upcoming US election will also have ramifications for European policies going forward, guys.
Very good, Sylvia. Thank you.
It's kind of fascinating. It's a reaction to what's happening here, especially the Inflation Reduction Act. We knew at the time it really angered a lot of our allies because it's spending here that they weren't able to do there. The European Union, while it does have the euro, doesn't have the ability to have the same sort of fiscal spending that we've had here.
In the interview we had with Peter Huntsman last week, one of his main points was the deindustrialization of Europe at this point. It's been sort of, and it, if you're gonna get everything you need from elsewhere, it can, then you get a war like Russia and Ukraine, and suddenly you don't have any of the stuff.
The energy dependence.
Energy,
is
exactly.
a huge part of it too. When we come back, Moderna's combination vaccine against COVID and the flu showing positive phase 3 data. The CEO, Stéphane Bancel, will join us first on CNBC. That's right after this break. We'll talk more about it. Also, a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back.
via Peacock.
Welcome back, everybody. Moderna out just moments ago with data from its phase 3 trial of a combination flu and COVID-19 vaccine. And joining us with more on that right now is Stefan Bancel. He is the CEO of Moderna. And Stefan, it's great to see you. Why don't we talk a little bit about these results? We knew that you were working on a combination of COVID and flu. First of all, what's the point of putting the two of them together? What's the benefit?
Good morning, Becky. Yes, we are very excited about this new phase 3 data of a combo flu plus COVID. I think a lot of benefits, of course, first for consumers. I don't think many people like needles, and so if you want to be protected against flu and COVID, you can just get it in one shot. I think a huge value for public health leaders and payers, because in today's world, especially for the 60 plus, you know, it's becoming complicated. You need a flu booster every year, you need a COVID booster every year, and now you need an RSV booster. So it's a lot of things to remember, a lot of needles. And so we think that the market is going towards combination. It's already the case in the pediatric setting where you have a lot of combination vaccine. And we think that's going to be helping a lot of consumers, doctors, and nurses, where you know there's also labor shortages and the payers. So I think everybody's winning.
The data today that you're releasing is that it actually generated a stronger immune response. What's that mean? It was more effective to put the two of them together than to do them individually?
What it showed is that against flu, we benchmark ourselves toward the best flu vaccine available today, Fluzone HG, and we show actually a little bit better in terms of the antibody level. And in terms of COVID, is actually our next-gen COVID product, which we announced a positive phase 3 a month or two ago. And so we're showing it's actually better than the COVID vaccine available on the market today. So people are going to be way better off to take our combination product as early as the fall of 2025.
I guess my reaction when I heard it is I'm less afraid of needles. I'm more concerned about the reaction that my body has with some of these vaccines. They make me physically ill for 24 hours or something. If it increases the immune response, does that mean I'm more likely to get a reaction like that where I don't feel good, or maybe I feel worse?
Actually, no. If you look at the data, it's exactly the same side effect profile when getting each vaccine independently. So that is why we think it's a very good trade-off for consumers and doctors.
You know, last year we saw a huge decline in the number of people who wanted to get COVID vaccines. I think it was an issue for you. It was an issue for Pfizer as well. How much do you think there will be an uptake this year? As we've gotten further out from the pandemic, fewer and fewer people feel the need to even get one of these. They've been exposed to it, and they don't think it's nearly as serious as it used to be.
Yes, it's clearly less serious than it used to be, and thank you for all of the benefits we have. But if you look at the data, in this season, the season that started in October of 2023, that's finishing right now, there's actually more than 400,000 people in the US hospitalized because of COVID. I'm not talking pandemic, I'm talking just this season. It's more than flu, and so I think there's a lot of work to be done by companies like ours, by doctors, public health leaders, to make Americans realize that while the pandemic is obviously over, the virus is not gone. And people have actually a higher risk of getting hospitalized because of COVID than because of flu. The virus keeps evolving. As you saw last week, the FDA picked a new strain for the update of the vaccine for the fall. So I think we just need to keep the education so people realize they need both protection against flu and COVID. And again, I think this combination will make things much easier. People don't have to remember which vaccine did they get. They just get the respiratory update for the year, and that will prevent a lot of hospitalization and deaths.
The hospitalizations, is that mostly among elderly or people with high comorbidities?
Yes, indeed, elderly and people with high comorbidities.
So it's not necessarily something for the entire general population.
That's correct. Our key target here is the people 60 and above because of age being a risk factor, or of course people that have comorbidity factors as you described. We should not forget that one of the challenges for mid-age adults with COVID is long COVID. As you know, there are millions of Americans that got long COVID, and millions of Americans are out of a job because of long COVID. So it's still an issue that exists with COVID that does not exist with other, viruses. And so if you look at some of us that are pretty close to it, the reason I get my vaccine every season is not because I'm scared of being hospitalized. I'm 52, but I have no known comorbidity risk. Is because I do not want long COVID.
Right, right. Stefan, while you're here, let's talk about a couple other issues that you all have been involved with. One is the data came back with the Moderna Merck skin cancer vaccine that showed a survival benefit. Not just a survival benefit, but also a failure of recurrence for people who were taking this along with Keytruda?
Yes, we are very happy last Monday, just a week ago at ASCO, to present the new data and the survival curve. And what is exciting, as you say, Becky, is that you have, close to 2 out of 3 people on our study that have no distant metastases, which is if you get melanoma somewhere on their body and it's surgically removed, they do not have 3 years after any distant metastases, which, as we know, it's metastases that drives deaths. It's really the primary tumor of a cancer. And so this data is really exciting. We're going to be talking with regulators to consider an accelerated approval because now we have the proof of durability of protection. We're also building a big factory in Massachusetts for that. And we believe this is going to be applicable, this technology, to many other cancers. We're in phase 3 for lung cancer, prostate cancer, soon bladder cancer. And so that's going to be a big paradigm change in cancer, we believe.
Yeah, that's huge. Obviously, we care a lot about what you guys are doing with cancer and want to hear more. The other big news you have is your genetic liver condition treatment got into the FDA's pilot program for rare disease. And I think that's pretty exciting, too, just the entire pilot program. What you hope to do with rare disease, which often gets left behind because there's not a big patient population. So it's not necessarily been something where medicine companies in the past have thought, okay, this is an area we want to focus on.
Yes, so one of the beauty of Moderna technology is we can get mRNA into the liver, and because the liver is such an organ to produce protein for all of us to stay healthy, there's a lot actually of rare disease in the liver. As you say, sometimes it's only a few thousand people, some ultra-rare diseases maybe a few hundred people, but those patients have no hope, those parents have no hope for their children, and we want to change that. We are very happy now that we have kids, up to 3 years, every 2 weeks on the Moderna medicine. We've seen a remarkable impact in terms of their hospitalization rate. And so we are very pleased that the FDA saw that this data is very exciting. And through this new program, is going to help us accelerate those drugs getting to patients. So that's a third modality. If you think about Moderna, there is, of course, the infectious disease vaccine that we've spoken a lot about. We've been used today of a flu plus COVID combo, cancer, and then, of course, the rare disease. So 3 strong pillars of medicine and growth for the company.
Stefan, thank you. We appreciate your time and the update. Stefan Bancel of Moderna.
Okay. Coming up, economic showdown. We're going to talk to Stephen Moore, our senior economic advisor to former President Trump, in just a bit. And Jason Furman, who served in the Obama White House. That's coming up in the 8 o'clock hour. You don't want to miss it. We'll be back after this.
50% off.
Welcome to Squawk Box. Shares of Saudi Aramco rising slightly overnight. The company conducting a secondary stock offering. The price at the low end of the announced range. It's set to raise about $11.2 billion for the state oil company. Reuters reporting that the demand for the offering topped $65 billion, and Aramco placed over half of the sale with foreign investors. Take a look right now at the price of crude. You're looking at WTI. It'll cost you $75.63 by the barrel.
All right, coming up, we're going to talk about GameStop and that live stream by Roaring Kitty that occurred on Friday. That's next. GameStop shares. Right now, they were rebounding a little. They are, and that's a lot. I mean, for GameStop, it's not a lot, but it's up about 9% pre-market. We'll be right back.
Now.
When it was all said and done, GameStop shares plunged on Friday after the company announced its sales dropped significantly in the first quarter and said it was selling more stock. In the pre-market, I think you can kind of see it. You can see it on the chart. It had run up, remember earlier in the week, to like 40, and then in the pre-market, it looked like it was going to go up 50% from there or more. When it was all said and done, it was all the way back to 28 today. It is up a little bit to around 30. All this happened after a live stream by Keith Gill, aka Roaring Kitty, failed to rally retail traders to his cause. Joining us now is the Axios reporter, who's been tracking this story, Hope King, Axios senior business reporter. It started with such promise for people long on Friday, Hope, and then that surprise announcement when results were released, I guess presumably to get things ready for an expanded stock sale. That started the momentum down, and it was hard to stop that, and the live stream did not seem to help very much.
No, good morning, and thanks for having me back. I mean, first of all, I'm also sad that we're going to get shorter days. But that aside, you know, it was really a story of fun versus fundamentals on Friday. So the fundamentals, as you mentioned, the company coming out early with the results of its first quarter, going up against everybody who was just trying to watch what he was going to do. And at the end of the day, as of Friday, that story that he tried to tell on his live stream didn't win folks over. And of course, we're seeing a little bit of a rebound in free market. But to me, that was really the big story, was that on Friday, at least, because we know how the story changes day to day with the stock, the fund did not win over the fundamentals, given the business is still in that very drastic turnaround strategy.
Just sort of going over a lot of the things he's been saying all along, Hope, about GameStop. I mean, 3 years ago, I guess you could buy some of it, but we've had now another 3 years of performance from the company. Are those old bullish sentiments, do they still work at this point? I'm not sure that they do, and I wonder if this is going to be a much more short-lived meme stock craze this time.
I think you're right. I think the analysts that you've had also on your program, you know, have gone into this. I mean, this is a retail business, and we know that retail has pockets of strength right now and pockets of weakness, and you know, they're really trying to improve the relationship that the store employees have with the customers coming in. You know, you've got Ryan Cohen in as of September. You know, that was really his main thesis on Friday, Keith Gills, was that he believes that this guy is not a doofus, right? That he said that. You guys also at the beginning of your show talked about how it seemed pretty insane, the whole live stream. And by the end, you know, as he saw the stock close down nearly 40%, he admitted, like, he's like, I'm a little cuckoo, right? Clearly I'm a cuckoo, and all of you guys are, and crazy sticks together. That's been the retail story a little bit with the stock, but with others as well. You know, you and I talked about this with the Reddit IPO as well. People who are, people who understand businesses like a Reddit or like a GameStop, like they feel like it's something they can get in on for the lulls. Everything the internet touches, right, turns to lulls, and that's really what you saw in the comments too, that were rapidly going into that live stream. At one point, there were like 644,000 concurrent people tuning into that stream.
I'm watching right now. I didn't see it, and it looks like fun, I guess. But there's the 8 ball. It is a little bit crazy. How many times can you go back to the well with, yeah, I'm crazy and I'm buying and it's going to go up 40%? I don't. Sooner or later, it's like buyer beware. It's not going to keep happening, is it?
No, I totally agree with you. I mean, if you look at his Twitter account, his X account, like, he only posts memes, right? His last one as of 10 hours ago was a screenshot, a little clip from the movie Batman: The Dark Knight. So, you know, even at the beginning of his live stream, over 50 minutes of that live stream, I mean, a big chunk of it was just him laughing uncontrollably at himself, looking at his own image as he put Band-Aids all over himself and, you know, trying to reiterate
what
that
do you think was going on, honestly, when you saw this? Did you? I mean,
you know,
he only broke out the beer sort of 20 minutes in, but I thought maybe some beer had been broken out prior or something.
Agree with you 100% that he had pre-gamed before this. I think he was nervous. I think he was watching Andrew Left on your program with Scott before he went on, and I think you guys talked about, you know, him lawyering up before that live stream, and he made very clear points that he, you know, he's working alone, he's not working with anybody else, he's not working with hedge funds. I mean, these are all the things that people have been speculating out in the media. I think he's watching it very closely, everybody who's been talking about him, and he's been really trying to clear up the air in his own way about it.
Do you think right now, Hope, what type of fundamentals do you think GameStop would need to be worth $30 a share? Are we there right now?
I mean, I do not have the certifications to give you that answer, but I do think that, like I said, the retail story is a pretty difficult one all across the board,
Still
especially
worth $10
with
billion.
gaming.
Still worth $10 billion. I mean, it's, $10 billion. Nothing to sneeze. There's plenty of downside, I would think, if things don't improve.
Yes, and I think, but like, look at what's happening, with Microsoft, Activision, Blizzard. I mean, they're all going to the streaming model, right, for video games. So that connection, that in-store experience, has to be paramount at this point to get people back in the doors, outside of just the video games that they're selling. I think on the experience side. So I think, look, again, we'll see what Ryan Cohen has up his sleeve. But you can only, I think, be the Pied Piper, the Mr. Beast of this stock for so long before, people also say, you know what, I think I've lost enough. I think I'll try my hand at some other stock. I don't know. That's kind of where my head's at.
All right, Hope, thanks. It's a good shot you have, and it could be good for other people that look terrible shots on Zoom and stuff. You got your Axios logo on the screen. I mean, you're ready for a live show.
Room Raider that's a 10.0 right there.
Yeah.
Thank you. Well, I try my best for you guys. Thanks so much for having me.
We appreciate that. Thank you. See
The
ya.
backlight, the front light, it all works.
Yeah.
It is 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Got a bunch of big top stories this morning. A light week on the earnings front, but a very busy one for economic data tomorrow. Fed kicking off a two-day policy meeting on Wednesday. It's the latest look at CPI plus the Fed's policy decision, followed by Jay Powell's press conference in the afternoon. That's going to be widely followed. And then Thursday, the latest read on producer prices after the biggest month-on-month gain in April. Meantime, the world's largest sovereign wealth fund saying it's going to be voting against ratifying Elon Musk's pay package at Tesla's shareholder meeting later this week. Norway's $1.7 trillion oil fund, which is the 8th largest shareholder in Tesla, saying it's concerned about the size of the compensation package, its structure, and how it fails to mitigate, quote, key person risk. And then the news of the day, Apple's Worldwide Developer Conference kicking off in Cupertino starting at 1 p.m. Eastern Time today. The company widely expected to detail its strategy to address the AI wave sweeping across tech, including integrating in its suite of operating systems and a massive overhaul of its Siri voice assistant. And Scott Wapner will be on the ground to bring us that news throughout the day. Becky.
Thanks, Andrew. Let's take a look at the futures this morning. We are still under pressure, maybe not quite as much as we were an hour ago, but you can see the Dow futures down by about 95 points below fair value. S&P futures are down by 9, the NASDAQ off by 21. Let's get over to Dom Chu. He's been taking a look at some of the big movers in the pre-market. And Dom, what are you following today? Happy Monday.
Happy Monday, Becky, Joe, Andrew. A couple of the Dow components right now that are at least helping to prop things up in that downside move that you just highlighted are coming out of analyst calls for this Monday morning movers. So we'll start with the shares of Honeywell, which are right now just up about 0.5% or so, around 3,000 shares of pre-market trading volume. So the industrial conglomerate and Dow component is now being helped along by an upgrade over at UBS to a neutral rating from a prior sell. The target goes up to $215 from $175. It's a bit of a catch-up call, as you can see here, with the shares already at $208 at Friday's close. They think that their prior view of downside risks for Honeywell has diminished, and strength in aerospace provides a better backdrop for future valuations, so those shares catching a bit of a bid. Also, fellow Dow component Walmart, shares of the retail and grocery giant are up nearly about 1% or so, helped along by an analyst over at JP Morgan, an upgrade to an overweight rating from prior neutral. The target price also gets bumped up to $81 from $66. They think shares provide investors a good mix of offense and defense amid a softer backdrop for the health of the overall consumer. So those shares up about 1% or so. And we'll count things off with a check on shares of DraftKings, which are up nearly 1.5%, just around 10,000 shares of volume, getting some tailwind help from Morgan Stanley, which is calling the online betting company a top pick in the business. They think that the effect of gaming tax proposals in states will not have as negative of an impact as some fear, and more regulation could open the door for legalization of other future gaming and betting revenue streams. So you can see those shares up about 1.5%. Now, that's just part of the story. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers there can have more access to detail and context around Becky, some of those big calls. But a couple Dow components in the news. I'll send things back over to you.
Okay, Dom, thank you very much. We'll see you later.
Coming up, they had it ready to go, but I guess we went to, did you see? It's a Becky Quick. Scheffler wins. I mean, it has nothing to do with Tom's movers, does it?
No. Oh, yeah, that's video in case you jumped in.
I did.
wanted to talk to him golf, which we were talking
But they give
about.
it to
before we
you.
got
They give it to
it.
you so that doesn't happen. So I'm not gonna. But he did have his little baby with him. I think he's won like 5 out of 8 tournaments. If he wins the U.S. Open, it'll be the greatest run in the history of the game.
And again, seeing the footage for what was happening behind the scenes when he was arrested.
That's like,
crazy.
I'm telling you, it's like Barney Fife, that guy Gillis. Coming up, former FDIC chair Sheila Bair joins us. She says discouraging regional banks from growing through acquisitions is worse than a disease. And then later, CNBC and the National Retail Federation putting out the latest retail monitor, breaking down consumer spending for the month of May. We're going to have the details. Squawk Box coming right back.
We have a big week ahead for the markets with the Fed's 2-day policy meeting and a key inflation data number coming up in focus. For his take on the markets, we want to bring in David Miller. He is Chief Investment Officer and Senior Portfolio Manager at Catalyst Capital. And David, thanks for being here this morning.
Great to be here. Thank you.
All right, let's talk through what we're anticipating this week. You got the Fed meeting, you've got that big CPI number that's coming, and then, by the way, after that, we get the PPI number. Jobs number threw things into a little bit of chaos last week. It makes people kind of question and wonder where we're standing. How do you feel about things?
Yeah, I mean, that 272,000 non-farm payrolls on Friday, that was a pretty big number. People definitely weren't expecting something that strong, but it definitely is probably a pretty good indicator that the economy is doing a lot better than people were thinking.
Therefore, as a result, that means great news because the markets are going to continue to climb, or is it a concern that the market is less likely to get that Fed put, kind of things where you see a rate cut coming from here?
I don't see a Fed rate cut coming from here. I think you look at the CPI numbers, they're just too strong. You look at the unemployment numbers,
but
they're too strong.
If we don't get the cut, is it better to just have a good economy where things are continuing to hum along, or has the market been anticipating that there has to be a cut this year?
I think the market got that reaction Friday, and I don't think you really need the cut that people were anticipating anymore for the market to be able to hold up and do well. It's probably not going to be a rip-roaring market, but it can be healthy.
So you guys have $640 million in total assets. Where are you putting your money to work right now?
That's just one fund, isn't it?
The Catalyst Systemic Alpha Fund.
Yeah, you got it.
Yeah, so I'm CIO for the firm. We have about $9 billion. That fund's about $646 million. So in terms of that fund, what we're doing is extreme diversification. We have equity strategies, commodity strategies, currency strategies, bond strategies. You add the returns of all of them together, and that usually should probably get you a better output.
So diversification has been the play you guys have been moving with.
Extreme diversification, right?
What is extreme diversification?
So basically, most funds that I look at, they'll look at diversification as being like, we own 400 stocks. And 400 stocks is a lot to own, but it's actually zero diversification because it's 400 bets on the same outcome. If you think about it, if you can make money from stocks, but interest rates today are 0% in Japan, they're 5.5% in the US, why not also borrow in Japan at 0 and lend in the US and collect 5.5 and add the returns of multiple strategies together? That's our philosophy, but we go beyond just doing that with like equities and currencies. We do it with bonds and commodities as well.
You said the market doesn't need a cut. You mean in June, or do you mean in 2024?
I think even without a cut in 2024, even though it's...
Will there not be a cut in 2024?
I don't think there should be. If I were running the Fed, it wouldn't be my decision. I don't get how you get to a 2% inflation number if you're running over 3 now.
But you think there will be, but you don't think there should be.
I think more likely than not there will not be.
There will not be.
You think there's no cut in this calendar year? Just to pin you down here.
So I think it's 50-50 as to whether the Fed does it, but I don't think it would be a smart move. I think you're going to let inflation run hot if you do that.
But does this give you a lot more opportunities for extreme diversification? If you have the ECB cutting rates and the Fed standing pat, all of a sudden there's a lot more interesting things that you can find out there, I would assume.
Yeah, absolutely. There's always a lot of interesting things you can do if you kind of broaden your scope beyond equities or beyond bonds. And frankly, when the yield curve's inverted like it is, you can get paid to be short bonds. It's kind of a funky phenomenon. You don't normally think of being paid to be short bonds, but when the yield curve's inverted and you're shorting bond futures, that's what you're getting paid to do.
So what are your newest ideas in terms of different things that other people may not be thinking of and following? You guys are doing some pretty extreme things.
Yeah, so, well, the main philosophy that I think we have that's worked really well for us is something that would just be common sense when it comes to sports. You'd never see a coach for a team go out and say, you know what, you guys are great at offense, but defense is a waste of time. As long as you play great offense, you'll score far more points. No one would ever say that. And yet you see all these funds where they just have offensive strategies, but there's defensive strategies like trend following or commodity carry or currency carry where you can make just as much money as you can from offensive strategies. And if you add them together, you should be able to get much better total returns, but you should also get much better downside protection because things like trend following tend to work their best in bear markets. So that's kind of our philosophy is it really makes more sense to play offense and defense rather than choosing one or the other.
But I just mean, what's a new trade that you have on because of some of the changes we've seen? If the Fed hasn't cut rates, the ECB is moving on these things. You mentioned Japan is a very interesting thing. I mean, that's something that Buffett and Berkshire have been doing too.
So we're short bond futures, so that's been a big one for us, and it's worked well because you have a negative trend with bonds. You're also getting paid to be short bonds. If you look at the commodity space, there's a lot of commodities where you can get paid a lot for the storage costs of commodities with commodity spreads. So we're doing things like that, and that's been working
Like metals
as
and
well. Right,
I was
right.
just reading a story about that where they've done that.
Yeah, I mean, if you look, copper's been very strong this year. The mining production's been pretty weak, but there's also been increased demand both on the industrial side and the military side. If you look to the commodity markets in gold, gold's had a great year this year. So there's a lot of good places to make money.
All right, David, thanks for coming in today.
Oh, thanks for having me.
Appreciate it. Okay.
Coming up next, not letting regional banks grow through acquisition is worse than the disease. That's the message from former FDIC Chair Sheila Bair. She's going to join us in just a moment to explain. And then later, Senator John Thune is going to be with us to discuss the economy, border crisis, and so much more. Squawk returning after this. Welcome back to Squawk Box. While regulators are discouraging regional banks from growing through acquisitions, our next guest writes in a Financial Times op-ed that in order to compete with big banks like JP Morgan, just like Capital One Discover, could help boost regional bank competition. Joining us right now is Sheila Bair. She is the former FDIC chair and a systemic risk senior advisor. Good morning to you. And I will tell you, I was surprised to read this op-ed, Sheila, because historically, when we've talked about risk and we've talked about getting big and bigger and too big to fail, I've always thought you were on the other side of this, but this is a very interesting sort of twist.
Well, yeah, I am very concerned about concentrations. We do have too much concentration in the banking industry, but it's a very, very top. It's the JP Morgan Chases, it's the B of A's, this top four. And actually, JP Morgan Chase and B of A are starting to pull away from the other two, Citi and Wells, to provide even more concentration. So that's where regulators should be focused. Impeding regional bank M&A. We have a lot of regional banks. It's highly competitive. But they need scale to compete, and if you want a market-driven solution to some of this concentration, you need to let the regional banks get a bit bigger. And also, it's also regional bank M&A is important from a stability standpoint, especially when you get into times of stress. You know, the FDIC and other regulators have proactively worked with banks, weak banks to merge with stronger ones to help stabilize the system. So you're kind of taking that tool out of the kit as well.
It's typically almost sacrilegious to say, but I'll ask you the question. Do we have too many banks in this country? I mean, you always talk about local banks and the value that those local banks have to their communities and how important that is. But there's a flip side argument to say, look at certain other countries that have only a handful of banks. Where should we be?
Yeah. Well, I think the market should drive those solutions, and that we need to charter more banks too. We need to worry about regulatory complexity. I've been a strong advocate for strong capital regulation and liquidity regulation, as you know, but I think you can do that much more simply and less expensively from an administrative cost standpoint, which is also, you know, impair the ability of banks to start and grow because of these costs, which also benefit the larger banks. So I think that should be market driven. I think our system of multiple banks is more dynamic, it's more innovative, it's served us better than these other countries where you have highly, you know, huge concentrations and just a handful of small banks, large banks. Switzerland, you only got one now. So that's a very precarious position for the government to be in. So no, I think it's a good thing to have lots of banks. I think it's been a strength, not a weakness of our system.
Do you think that the prevention, if you will, of more mergers and acquisitions in the banking space is a function of the Treasury Department? Do you think it's a function of the DOJ and FTC? I just interviewed Jonathan Cantor and Lena Khan last week. I mean, you sort of have these competing interests. I could see a Treasury Department saying that maybe we should have more concentration, and I could see Jonathan Cantor or Lena Khan saying maybe not.
Yeah. Well, again, I think it's where you're going to be focused. Broadly, I support the administration's focus on increased, corporate concentrations throughout our economy, and a lot of that's been driven by super low interest rates. So some of the higher interest rates are going to be correcting for a bit of it. But if you are worried about concentrations in banking, and we should be, look at the top. To attack the regional bank M&A is just going to increase the competitive moat around these very, very large institutions we have already. So that's where you should be focusing. Higher capital would be one way to do it for the mega banks. Basel III seems to be bogged down. I think there's going to be substantial revisions before we see what happens there. But if you want to reduce concentrations, focus at the very top, not the regional banking sector. The regional banking sector is not concentrated.
Do you think there'd be a distinction between how banks and bank mergers would be approached under a Biden administration versus a Trump administration?
I assume so. Trump is so unpredictable. Who knows what would happen there? But I do think there is, yes, this is symptomatic of a broader policy initiative to attack corporate concentrations. And again, some of that I'm sympathetic to, but in the banking sector, they're focusing on the wrong place. The true concentration is at the very, very largest banks.
Can I get you to weigh in on what has been written about in terms of a very toxic environment at the FDIC and your successor, or multiple times later along the line, but his exit?
Yeah, well, I think it's tragic. It's heartbreaking. I have said I think it's this is hurting him. It's hurting the agency. It's time for him to exit. He said he will as soon as his successor is confirmed.
Should he be out of there though already? I mean, this idea that he's hanging around the hoop.
Yeah. Well, I do. I know. I think morale is very bad at the FDIC. They need a fresh face. They need a fresh perspective. They need strong leadership, someone who understands the operational side of it's a very complex agency as well as on the policy side. But they need that. But if Marty goes now, you're going to have a split board. It's just going to be paralysis. And I don't see how that's going to help the agency or staff morale either. So I think the solution here is for the White House to act quickly to bring in new leadership. Now, it's a problem because the place is having a lot of problems right now, and there's going to be job uncertainty, right? Because we don't know what's going to happen in the elections, and if Trump is elected, Mr. Trump's elected, all bets are off in terms of respecting agency independence. He can just fire everybody. So I think that is impairing the White House search.
But can we recruit you on a temporary basis? What are you doing this summer? Are you
No,
available?
that's right.
Are you available just
Well,
for the next 6
that-
months? We can just say it's a short term. You're coming in to clean things up, and then
Yeah.
somebody else will take
Yeah.
over, depending on what
Yeah.
happens after the election.
Well, that's very flattering. I don't think I'm the right person, but I do think that might be another alternative to look at a potential recess appointment. Bring somebody in who's strong on the operational side to help start, providing a fresh start. The FDIC is a great agency. I really get upset when I hear people say, "Oh, it's always been toxic. It's always been terrible." That is just not true. When I left the FDIC, we had a highly energized, highly professional, highly motivated agency.
So what do you think
It can do
happened
that
then,
agency
Sheila?
again.
What do you think happened to
I
this
don't
group? Is it
know.
really Marty?
No, because for years after I left, we continued. I was on the outside looking in, but rankings and best places to work remained high. I think there were tensions between him and Yelena McWilliams. I think that maybe was a distraction. And then, part of the problem was that we were having these incidents widespread at the regional level that were bubbling up. But some of them were at the headquarters level too, but people weren't responding. They weren't imposing accountability. And that kind of thing just starts spinning out of control. So you've got to be heads of these agencies. I know policy is fun, but you've got to pay attention to the administrative, the operational side as well, and make sure people are held to the highest standards. And the FDIC and traditionally has, and will again have very high standards of conduct.
If now you have a candidate you'd like to nominate right here?
Yeah, well, I wouldn't. I wouldn't say it publicly if I did, but I think that's the profile I think the White House should be looking for, and fingers crossed they're able to bring in somebody soon.
Sheila, we got to go, but I know what's right behind you, and I just think we should give you a promotion opportunity because people don't know that Sheila writes kids books. And she's got them right behind her. So I don't know if you want to tell us about either Daisy Bubble or one of the others.
Well, thanks for the plug. Yeah, it's called Money Tales. There's there's the two most recent ones. One's about asset bubbles and one's about price inflation topics. But yeah, I love it. I've been doing it since my first book came out in 2004. And since you're letting me do a little ad for Title I schools serving low-income communities, go on my website, moneytalesbooks.com. We've been able to raise money to make book donations. And if you can afford to buy them, happy for you to buy them too. But it's been a labor of love, and I think kids learn, but the parents learn too when they read the books with their kids. So it's a bit of self-education.
Is speaking the language that children understand something that you learned in Washington, or was it a good skill to have?
So making things very simple, especially sometimes with certain politicians. I won't, but my former boss, Bob Dole, when I was writing this, he tweeted that we should make. There's another one called Billy the Borrowing Blue-Footed Booby. It's about the perils of unaffordable debt that every member of Congress should be reading that. So,
there you go.
Like I said, adults
complicated
learn.
topics. What's the real quick age range for the books?
7 to 10. Grades 2 through 5.
That's perfect for Congress.
Yeah.
That's amazing.
And the Sorkin kids. Thank you very, very much, Sheila. It's great to see you.
Thank you. Great seeing you. Bye-bye now.
Coming up, CNBC and the National Retail Federation releasing the latest retail monitor, a breakdown of consumer spending and what it's saying about the state of the economy. That's next. The futures right now are not as bad as they were. Down 60 now on the Dow, off a little bit on the S&P. Squawk Box coming right back.
oil.com.
Activist investor Elliott Investment Management reportedly building a nearly $2 billion stake in Southwest Airlines. The Wall Street Journal reporting that it's making a push for changes to reverse the company's relative underperformance. Along with Southwest, Elliott is also looking for change at SoftBank, Texas Instruments, Johnson Controls, and Phillips 66.
Coming up, NVIDIA is set to start trading today after its stock split. Can the AI play continue its rise? We're going to discuss that. And then we'll talk jobs, the economy, and more with the CEO of ADP. Squawk Box, we'll be right back after this.
CNBC and the National Retail Federation putting out the latest retail monitor, breaking down consumer spending for the month of May. Our senior economics reporter, Steve Leisman, joins us right now. He has the results on that. Steve, good morning.
Hey, good morning, Becky. Yeah, the American consumer bouncing back strongly in May after a lackluster April, boosting spending in several discretionary sectors and really countering the narrative of a weakening economy. The CNBC NRF Retail Monitor, it uses real credit card spending data from Affinity Solutions, shows May spending ex autos and gas, that's our top line number, rising by 1.4% compared to just 0.3 in April. Year over year, it's up 3% compared to a negative number in April. Core retail sales, or what we call core, that excludes food services as well as auto and gas, rose 1.2 versus 0.4 in April. You can see the year over year up near 3% versus a slight negative in April. It's the sectoral breakdown that's quite remarkable here. Non-store retailers powering up by 2%, restaurants and bars 2%, food and beverage strong, clothing and accessories. Add into that, we're not showing it, but sporting goods and general merchandise also strong. Gas stations were negative, and building and garden supplies negative as well. They've been negative for a while there. This is the strongest of the 20 months we've tracked this data, and it's unclear if it's just a rebound from April or the start perhaps of a new consumer spending spree. It fits well with that strong jobs report we got on Friday. Now, if this number is repeated next week when Census releases their data, it's going to lead almost certainly to an upgrade in the outlook for second quarter GDP growth, and it's going to offer the Fed another reason not to cut interest rates. The monitor you can see here tracks along with the census's retail reports, though it's less volatile. It did not show as much weakness as census data did last month. But unlike the government report, our data, the retail monitor, not revised because it uses actual spending data. So the Fed's going to look very closely at this week's inflation reports. Got the CPI and PPI this week, but weaker consumer spending and jobs reports would give them more confidence that there's slack in the economy and less inflationary pressure. They didn't get that Friday, guys, and they're not getting it today from our retail monitor showing a strong consumer. Becky?
Hey, Steve, I think this is such a fascinating number because, again, this is on the data that people were actually spending. It's not just saying what they thought they were going to spend or something along those lines. How do you compile it all again?
So this is Affinity Solutions is our data provider. They get actual credit card data from, dozens of banks, and it's really billions of transactions that they put together. And they give that data to the economists at the NRF, and they crunch the data and seasonally adjust it. And it's a very new series, Becky. So, I'm watching it carefully. We did some beta runs on it before we went public with it back in November. But it's as you can see from the census versus our data, it tracks it, not precisely month to month. The census data, they use surveys and other things, and eventually they true it up with real data. This is all real data. There's no surveys involved here.
How come the government isn't doing something more like what you're doing with this? It seems like a better read than asking people surveying people on what they think they spend or what they plan to spend.
Well, it's a good question, Becky. I can tell you the Fed is doing something similar to this. They have a feed of real-time data from another provider. The census has recently announced that they're going to be incorporating more real data into their surveys. The government does these things very slowly, and sometimes I think that makes sense. Sometimes it doesn't. But they just made an announcement. I don't know if we pressured them or who pressured them, but we have some other sources on this. But more and more, we're able to get real-time data, Becky, on the economy, and it's just a question of how to use it, how to fit it into a way that makes sense and is consistent over time.
Steve, thank you.
Pleasure.
All right, up next, NVIDIA is now the fourth of the Magnificent Seven to split its stock since 2022. Can the AI play continue its climb? We're going to find out after the break. Swap Box coming right back.
com.
First trading day after NVIDIA's 10-for-1 stock split that took place on Friday after the market closed. Let's check on the stock, which is Unch. Joining us now for more is Chris Casso. He's a Wolf Research senior analyst. And there's so many other things that you write about, Chris, fundamentals, but does anything matter more than when you take a $3 trillion company and you do the split, and any gains you have from here, and we really do need to look at that in terms of where that puts the market cap, because, I mean, trees don't grow to the sky. We always say that. I didn't know, it was hard to get to $1 trillion when Apple first did it, then 2. And you got Microsoft and others, but $3 trillion, how much more is NVIDIA worth right now, given its future, would you say?
Well, I remember having this discussion when Apple bid $1 trillion with you, and it's still higher. And listen, it really comes down to the fundamentals, to what's their place in AI, where the content's going, and this is still a really good story here. And what I think is important is obviously the impact on AI and such, but NVIDIA's content is going up significantly, and this isn't a stock where the multiple has expanded over time. The stock is where it is because the earnings have kept pace. It's only trading at about a mid-30s multiple off of this. So it's been an absolute incredible run, but it has been absolutely backstopped by the fundamentals.
So you're on next year's earnings. What do you mean? It's like 35 to 1?
Yeah, that's right. And as we look, it's been our best idea for the better part of year and a half. Since October 22, we put it on a top picks list. Interestingly, the stock before the split, the stock is higher after the split than it was back in October 22 before the split. So it has been an incredible run. We did recently take it off of our top picks list and replaced it with AMD, just acknowledging the very strong run that it's had. And as you said, trees don't grow to the sky. But we are still very bullish on the fundamentals looking into next year because of the next product cycle.
Typically, it's a 25% move after a split like that. So, I mean, then you're talking about more than $3.5 trillion at that point.
Well, they announced the split on earnings back in May, and it's had a pretty strong run since then. Okay. So I guess I'd argue that it's reflect. If the stock was in, of course, the split doesn't affect the fundamentals, but right. It has had a strong run since earnings, and perhaps the split had something to do with that.
So all in with factor in competition and where we are in the adoption of AI and the use of chips for both of the segments that it causes, to set it up and to build it out and everything else. What kind of compound growth rate do you see for NVIDIA over the next 5 years for earnings?
Well, and things are moving very quickly in AI, but it's been running at revenue has been doubling, more than doubling year on year for the past several years as AI has taken hold. What I think is interesting in NVIDIA and semiconductors in general is that now we're seeing pricing go up too, and it's not pricing going up just because they're taking price and raising price indiscriminately. It's because at the end of Moore's law, if you want more performance, you have to pay for it. And AI is driving a lot of productivity in the economy, and this next generation of NVIDIA chips is much more productive. And the tagline, what Jensen Huang says is, the more you buy, the more you save. So what's happening is, and the answer to that question over time is difficult to quantify, but the extent to which AI drives productivity in society, NVIDIA is going to take the largest percentage of that because they're the ones enabling it.
Right. But if the multiple stays, I mean, it's not cheap. It's not crazy, but mid-30s, mid to high 30s is not cheap. The stock appreciation will maybe mirror the compound growth rate of earnings per share. Do you think You think it can grow at 20% a year for 5 years, earnings per
I
share?
absolutely do. Absolutely. That and
30%? I'm just wondering what.
I think growth rate in the 30s is a very very reasonable approximation on it. And again, one of the proxies that helps you to get to that number is, you know, generation on generation pricing for this next generation looks to be about 40%. And they're coming out with product every single year. In addition, they've expanded their networking portfolio, and going forward in AI, networking is going to be a much bigger driver of performance as well. So there's a lot of irons in the fire, pricing's going up, and obviously AI is doing what it's doing. So I think a growth rate in the 30s is absolutely reasonable. And again, with a stock multiple in the 30s, that you know, it's a peg of about 1.
There will be competition, obviously. I don't know who you think is a viable competitor, but are there any competitors that are in a good position that don't cost $3 trillion for the company, or aren't it in the mid-30s for multiples? How do you play AI besides NVIDIA, or do you, since everybody's still spending money, you know, with the future rewards, we don't know when they're coming, really.
Right. So it's one of the moves we made recently is that we put AMD on our top picks list, and that would be your alternative in AI. You know, the stock hasn't had as much of a run. The multiple's actually similar in mid-30s right now, but you know, it's a little bit of, you know, law of large numbers, law of small numbers. AMD has a lot to potentially gain in this market as a number 2 to NVIDIA. And our thesis on AMD is pretty simple. You know, they were able to get, you know, kind of a 15% or so market share in the x86 CPU market for many years with Intel, even when they were a generation behind, because the customers don't want one supplier to have, you know, 100% market share. And, you know, we think with that right now, AMD has less than a 5% share of AI. So, you know, there's a lot to potentially gain, and NVIDIA doesn't need to lose in order for AMD to win, which is why we put that on our top picks list more recently.
Okay. So you got a 125, you had, see, I went to MIT briefly, so you had a 1250 target, so it's a 125 target now?
Yes, that's right. That's right. And we got to get some visibility to where the numbers go.
Factored the, yeah, I came up with that. So that's not much.
Yeah, and you know, again, it looked like a pretty good gain at the you know, during
that when it was announced.
Yeah.
Okay, but you got a little less bullish based on valuation, I think.
Yeah, it needs, you know, it's a very well-owned stock. I am sure you don't have many people come on the program that they don't like NVIDIA right now. Right. But you got to get some visibility onto, you know, what's going on over the next 2 years, and things are moving pretty quickly. But the signs point in the right direction. We met the company last week with a number of investors. They sound very bullish about this new product cycle, Blackwell.
Got all the characteristics of it's getting pretty close. I mean, there's a word called Jensanity, which is what you get when you talk about Jensen Huang. He's almost a demigod in Taiwan, native, if he goes. So, I mean, it's all deserved at this point, no doubt. But we got to run. Chris Casso rhymes with Ted Lasso. That's what I'm told in the. You see that in the notes? Yeah.
Not queso.
Nope. Chris Casso rhymes with Ted Lasso.
There we go. Appreciate you getting it right.
There you go. Thanks.
Thanks.
Coming up on the other side of this, the CEO of payroll giant ADP talking wages, the jobs picture, and the state of the economy. And then later, Roaring Kitty returning to YouTube. Yes, and GameStop rebounding slightly after its 40% drop on Friday. The latest in the meme stock saga. It is all straight ahead. Don't go anywhere. Squawk Box coming right back.
back, everybody. A pair of jobs reports offering diverging messages on the labor market for the month of May. The government's employment report showing gains in non-farm payrolls that were much stronger than forecast, while the ADP report showed less than expected gains in private payrolls. For more on the changing labor landscape, we want to bring in Maria Black. She is the president and CEO of ADP. That's the global tech firm that specializes in human capital management solutions. And Maria, first of all, welcome. I know you're here to ring the opening bell today.
We sure are.
I was shocked when I found out it's the 75th anniversary of ADP. I can't believe you guys have been around that long.
Yeah, it is the 75th anniversary. We couldn't be more excited to be here ringing the opening bell. Personally, I'm incredibly proud. ADP has been at the forefront of payroll and human resources innovation for 75 years. Personally, I've been here for 30, so I've watched this firsthand really evolve, and it's quite remarkable. But it isn't just about the 75 years, it's really about the future of work as we chart the next course in the next 75.
I mean, it's kind of shocking what's happened to work over, let's say, 3/4 of a century,
Yes.
but maybe even what's happened in the last 5 or 10 years. You had the pandemic, you had a lot of people working from home, and now you've got AI coming into the workplace too.
That you do, and I think for us, we're watching all of these trends. So one of the things that's so unique about ADP's data, the unique data set that we have, is that we span all the way from the small business, so the pizza shop on Main Street, all the way to the most complicated multinational type of corporations. So we pay 41 million wage earners on behalf of our clients, 1 million clients across 140 countries. So when we think about that, we look at all these workforce trends, they're pretty remarkable, Becky. The workforce trends that we're looking at is the distributed workforce that exists, right? So access to talent globally, that's not a new thing. That really started in the 80s and 90s with global expansion. But today, as you just mentioned, post-pandemic, flexible hybrid workspaces are everywhere. So that's a big piece of what we're seeing. And then the other part that we're seeing across our data is the generational aspect. So we have 5 generations actively working in the market today. And obviously, as everyone is setting course as it relates to what that means in terms of being an employer and having to address all these 5 generations, there's a lot that we're seeing that employers are solving for.
It's kind of weird. We've spoken a little bit on the show about how different generations obviously look at AI pretty differently. You would anticipate that the youngest workers are the ones who are most open to seeing what's there. What surprised me with some of the things that you all have learned, though, is that most people who are 23 and younger expect that AI is going to drastically change their jobs and in some cases make a lot of what they do obsolete.
That's right, Becky. And so we have been doing a lot of this research. In fact, later today, we're going to release some of the things that we've studied as it relates to the impact and how the perception of AI per generation is really affecting people's roles as they think about charting the course of their futures. What's interesting to me, I mentioned the 5 generations, and that's absolutely the case. That's what we have today. But beyond that, Generation Alpha, if you think about 2010, those that were born in 2010, in fact, I have a 14-year-old at home, and I think about him joining the workforce, which legally, at the age of 14, he will never know work without AI. He will never, in our case, in the HR space, he'll never have to fill out a form for PTO and take a day off manually. All of those things will be facilitated through modern tools, in our case, through things like the ADP mobile app, where he will be able to, through natural language search, just be able to do these things. He'll never know work without AI. So certainly the younger generations, really at some level, whether you're a digital native or perhaps this next generation Alpha becomes an AI native, they will never know work without AI. And certainly the more tenured generations, how they are thinking about their roles going forward is slightly different. But a lot of that research we will be releasing later today, so exciting day.
I was curious how you think about the sort of upstart competition in your space.
Yes.
I'm thinking of Brex and Rippling and some of the others, some of which you integrate into, but others of which are sort of frenemies or something.
Yes.
Well, how you are the I don't know, the billion-dollar gorilla, the big whatever. You're the biggest player, but there are these other players coming in, and so do you look at them and say to yourself that these guys are acquisition targets one day? Do you look at their technology and say, I really like that, I wish we were doing that? Well, how do you consider this?
So I'll take the comment around being a gorilla as a compliment. I would say, again, having 75 years of payroll innovation, weathering so many various technology and innovation cycles, and certainly more to come as we just talked about AI. But to answer your question around the competition, we look at all of the ecosystem. So our clients today interact with so many various pieces of technology. Through our ADP Marketplace, we partner, as you mentioned, with a lot of these upstarts. At the very enterprise level, we also partner across the ecosystem. For us, it's about one thing that it's always been about, dating back all the way to our founder, Henry Taub, who founded this great company 75 years ago, which is solving for our client. And so with that in mind, he took a very simple business idea, he found a problem, he solved it. It started with one client. We have 1 million clients today. And so that really involves operating in this broader ecosystem where our clients interact. They interact with various types of technology, various things that help solve for the future of work for their employees.
Maria, I want to thank you for coming in, and we will be watching at the opening bell.
Yes, thank you very much.
Thank you. It is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, major European markets lower this morning after the EU elections. Yesterday's results appear to leave mainstream pro-EU parties in power, but far-right nationalist parties performed strongly. In France, President Emmanuel Macron dissolving parliament and calling new snap elections. Moderna shares are higher this morning. We've got new data from its phase 3 trial of a combination flu and COVID-19 vaccine showing it to be more effective than existing shots alone. The CEO, Stéphane Bancel, spoke to us earlier this morning on Squawk Box.
We think that the market is going towards combination. It's already the case in the pediatric setting where you have a lot of combination vaccine. And we think that's going to be helping a lot of consumers, doctors, and nurses, where there's also labor shortages and the payers. So I think everybody's winning.
And Apple's Worldwide Developer Conference begins today. The company is expected to lay out its vision for integrating generative AI into its products. CNBC will have complete coverage of today's event that starts on Halftime Report. That's coming up at noon Eastern Time.
Futures right now indicated a little bit lower. Let's get to Mike Santoli at the NYSE. Mike.
Yeah, hey, Joe. So we're holding near the record highs on the S&P 500. That was pretty much the rule of last week. It's continuing today. It remains, though, kind of a selective market, a little bit split in terms of what's working, what's not. That's visible here in the S&P 500 relative to the equal-weighted version of it. You see, this is off the October low after that correction last fall. And you see right into the peak here in late March. That was the last trading day of the first quarter. Everything was pretty much in sync. It was a very broad and inclusive rally. Since then, you're up a little bit less than 2% in the S&P, down near 3 to 4% on the average stock. Now, that was also when rates bottomed. Treasury yields on the 10-year, 4.2% in late March. That's been part of the story, but also just NVIDIA's strength. It's up by 30+% since that March 28 date. That's been enough to kind of keep the market cap weighted index up there. Apple also up like 15%. So I would say the trend is still strong, but it's a lower momentum and narrower breadth market. So two bellwether groups I like to track, and they've also been really in sync over the last couple of years, home builders and semiconductors. Big outperformers still over the last 2 years. Although, interestingly, even as rates have kind of eased back off their recent highs, home builders have struggled just a little bit here. The housing turnover is not really cooperating. However, semis, that's market cap weighted semis, obviously NVIDIA and Broadcom, a big part of that. Still two groups where it seems as if the secular growth dynamics are still being rewarded, even if there's a little bit of static in the near term. Now, even though there's been some volatility under the surface of this market at the index level, as I said, it's been kind of a grind and not really a surge or many swings. Yes, last week, 4 to 5 days, the S&P moved less than 0.2%. Volatility index, therefore, is very calm, but it's because there's so much of a split within the market that the index level volatility has really been restrained, and so you see traders not seeing much reason, going into June, even with these catalysts we have this week, to bid up the possibility of a very volatile market over the next 30 days, which is what the VIX measures, Joe.
Yep. All right, Mike. We know we're in June now. Sell in May did not work. You got any sayings to help with me here?
I have no good, little couplets to offer you there, but all I'll say is that for whatever it's worth, in June and July, you've had positive tailwinds in election years. That's something people keep trying to hang their hat on. We'll see if that works.
That doesn't rhyme.
No, it doesn't rhyme. I need a rhyme, like history. It doesn't repeat itself, but it rhymes.
Yep.
He doesn't have one.
Work on this.
I'll work on it, yeah.
All right.
Bye.
Thanks, Mike.
Coming up
June and
on the
July,
agenda
election years fly.
on Capitol Hill. Not bad. From the southern border to the race for the White House, Republican whip Senator John Thune of South Carolina is going to join us next. And then Biden versus Trump on the economy. We're going to have a debate set up with Stephen Moore, and senior economic advisor to the Trump 2024 presidential campaign, joins us, along with former Council of Economic Advisors Chairman Jason Furman. That's at 8:30 Eastern Time. Squawk Box returns after this.
%50 off.
Welcome back to Squawk Box. And now for a look at the Capitol Hill agenda, including the southern border, plus the 2024 race and more. I want to bring in Senator John Thune of South Dakota. Thune serves as Republican whip, the #2 position in the Senate Republican leadership. I want to thank you for joining us. Good morning.
Thanks, Andrew. Nice to be with you. Thank you.
You want to talk border first? You want to talk 2024 election? You want to talk about, we were talking off camera about who's going to be Trump's nominee? Or nominee, his VP, I should say.
Well, if you want to start first, why I think Trump's going to win, and that is because Biden is the president of open borders and high prices. And you look at what's happening at the southern border, and has happened for the last 3 years. Not only are almost 10 million people who've been apprehended or on the known got-away list on the southern border, but 362 people on the terrorist watch list, which is a national security crisis for this country. And the American people are going to hold Joe Biden accountable. So I think we've got a really good shot. Who President Trump picks as his running mate is going to be his call, but I think he's got a lot of good options.
What was your reaction to the guilty verdicts?
Well, I mean, I think that for most people, that outcome was kind of baked in. I think, if nothing else, it juices Republican intensity across the country, which you need in a presidential election. The middle of the electorate is going to make their decision on the presidential race, in my view, kind of on pocketbook issues, which is where they usually are. And so they're going to be looking at inflation, and they're going to be looking at the southern border.
Right.
They're going to be looking at energy costs. So I think that the things are stacking up well. That case, like I said, I think people kind of had already calculated what they thought.
But what do you think personally, and what do you think of the jurors that came to that conclusion?
Well, honestly, I think based on the instructions they received from the judge, that's probably where they were going to land. But I think that obviously, I believe the case shouldn't have been brought in the first place. I think if the Justice Department had wanted to bring it, the U.S. Attorney's Office, they would have. This is a federal election law jurisdiction, and the fact that this New York, prosecutor was dabbling in it, I think. Do you think the case against Hunter Biden should be brought? Well, I mean, I think he's obviously going to have to answer for the things that he's done as well. I mean, I think these cases are all that's a different, obviously, set of circumstances.
But do they have to answer? But the reason I raise it is because there's this question of which law we like, right? I mean, what's happened politically right now is that we've taken political sides on whether, there are folks who say, I want to be about law and order. You talked about the border. And then we say, well, we don't like, but we don't like this court. We like this court, but we don't like this court. And so that's become, I think, a real issue, no?
Well, I think, though, and again, I'm not a lawyer, but Hunter Biden's case, I think, is a federal case being tried in federal court. What they did with this, obviously, this is a federal election law jurisdiction, it's FEC law. This prosecutor got to that office with an agenda.
Well, how do you feel about the federal cases that are being brought against the president, the former president, which probably won't get brought before the election, or some of the state cases?
Well, I mean, I think obviously the courts are going to decide that. I mean, some of those cases are stronger than others, but nevertheless.
Does it bother you that those cases are not able to be brought before the election, so the American public could actually see what the result is of what a jury in the U.S. would think of this stuff?
I'm not troubled by it. I think I'm not surprised by it, honestly. I mean, I think that for the most part, those types of cases, you're going to have legal teams that are going to use and exercise all the options at their disposal, which is what Trump's lawyers are doing, and I would expect them to do that. If those cases end up not happening until after the election, I don't
This
put a
is
lot
with Hunter Biden. I think this is a big disappointment to conservatives in that this is such a. I don't think anyone else would have been prosecuted for that. So it almost looks like
for the gun case, you mean?
Yeah, but there's this mountain of other things. Yeah, the Texans and the influence.
But isn't that
the influence peddling?
You
just had 10 minutes with him. Can I just have 1 minute, Andrew? 1 minute before you're back on the bandwagon. You see what I'm saying, though? It's almost this is a diversion from the real stuff that involves his father. I mean, I have. As a gun rights person, I don't think drug addicts should have it, but you got to admit, if anyone needs a gun, it's probably someone who's going to those neighborhoods, buying crack. I mean, this is a stupid case to bring when you've got these other ones that are possible to bring.
Arguably, and I think the tax.
And if he gets acquitted on this, it's going to be, oh, you already went after him, and the president loves the love of him.
Same thing on the Trump case.
But that's the point.
Trump case.
Well, and I think
the Trump case, was misclassifying a crappy NDA to a porn star. You got Bill Clinton has 5 women, at least 5, 6. You want me to name them again? I'll name them for you
but
if
Bill
you want.
Clinton's not on the ballot right now.
Nothing happened back then when it happened. Nothing happened. People look beyond that.
There are now federal cases.
Those are federal.
Those are
the one that's already done.
The one that's already done. Not going to be able to be brought.
But the one that's already done was a kangaroo court, and it was a banana republic, and no one takes it seriously. That's why his poll numbers have gone up, and so have the predicted odds.
Well, I think if nothing else, that for the American people, what they want to have is confidence and trust that our judicial system, legal system,
well, they don't
works.
have it right now.
And I think that's the issue here. It smells of and is tainted by politics.
He ran on getting Trump on.
But that's tainted by politics, but the Hunter Biden one, I don't understand.
I said wouldn't bring the Hunter Biden one. I would bring the other stuff about the big guy and the 10% and the millions of dollars from China, millions of dollars
and why
from
think they're not bringing that case? Because they don't.
I don't know. No, I think they will.
Tax
That's coming.
Is to me the more compelling case.
Senator, let me ask you while you're here. You are running for a leadership position in the Senate to be the head of your party there. We haven't seen that because McConnell's been there since 2007 as the leader. What would you do differently? What would you prioritize in the Senate if you were leading up your colleagues there?
Well, right now, Chuck Schumer runs the Senate, And under his leadership, it's a place where not much gets done, and where individual senators have pretty much given up their rights to have votes on amendments or anything else. And he pulls everything up. The Democrat leadership is very hierarchical. It's a top-down type management style, and I think that if nothing else, just empowering individual senators, allowing the committees to work, and when bills come to the floor, open up the process under regular order, allow people to offer amendments. That's what we're supposed to be there to do. So, and I think, there's always in transitions, it's a natural pivot, and, a new generation of leadership needs to emerge. Senator McConnell has a tremendous record of accomplishment as a leader. If you look at the Supreme Court, a lot of people across this country, at least the people who support us, believe that that is a legacy issue for him. But he's moving on, and that means we've got to have somebody replace him, and I think I can do that.
If it's a bust in June at the debate for President Biden, will there be someone else? Is there a non-zero chance that Biden is not the nominee?
As you know, and you probably we all speculate about what might or might not happen. I think that debate is going to be a make or break moment for Biden.
Well, what would happen if it was a break moment?
Well, I think if he does well, then he probably calms the fears of a lot of Democrats around this country.
What if he doesn't do well?
Well, then I think they start looking. If you look at Plan B, it seems to me, I think
have to be Kamala.
They would have a hard time going around her, but I think they'd have to go around her if they want to win.
Can I ask you a border question? You voted against the latest bill on the border.
Mm-hmm.
How much of that, and there's a lot of people who say the Republicans who voted against that are voting against that so they can leave this issue open, in part to help galvanize the right, if you will, to vote for Trump. Meaning, had that bill gone and been passed, and there was bipartisan support for it, that this debate would be a different debate today.
I think that the reason to vote against it, in my view, wasn't that. It was the components of it. And our folks tried to negotiate the best deal possible. But you remember, you're dealing with a divided Congress, you have a Democrat Senate and a Democrat President. And so the folks who were in the lead negotiating this, in the end, the deal wasn't quite good enough. And the Democrats kept insisting that you normalize 4,000 to 5,000 people a day. Well, that's a huge annual number. And so I think in the end, it wasn't something that we
What number were you willing? But there's sort of like the perfection and the good. So what's the number you're accepting of?
I just think enforce the law. First off, the asylum laws need to be changed, and they were actually willing to negotiate on some of that. But the way that parole had been misused, the Remain in Mexico policy, catch and release, they're all things that we believe, if they just enforce the law, and the president has all the authority to do this. This happened on his watch, or he says, well, this immigration crisis or border crisis happened on the president's watch. It did, but it didn't just happen. It was engineered, it was orchestrated by policy moves and changes that he made when he took office.
I don't, you've still got, you still got, in terms of issues in Trump versus Biden on immigration, they can talk about it. The Democrats, the way that they're, I don't know what demagoguing it right now, they can talk about, but it's a 25-point difference.
Delta,
between Trump and Biden. People know exactly what happened at the beginning, all the executive orders that were reversed. And we know that, what's the total? Is it 3 million? How many people in the last 3 years?
Almost 10 million.
Almost 10 million people.
Yeah.
And how many with Trump?
And how many with, a fraction of that.
That's what I mean. So, and it's there for everyone.
It's the policies, which honestly is why I believe that if Trump wins and we get the majority in the Senate, there are things, obviously, it'd be nice to legislate and codify some changes so you wouldn't have this revolving door between administrations, but there are a lot of things that Trump can fix on the border as soon as he takes office. Now, some of it will probably get taken to court and litigated.
Sure, but would there have been no value in signing this bill now and then potentially incrementally fixing other aspects of it later if in fact you have that opportunity?
Well, you could make that argument, but then I think once you've codified and locked in a certain number that you're comfortable with, there was a lot of people who were very uncomfortable with that kind of a number and what that meant. We were condoning essentially.
But as a result, it's much worse now, and then you can tell the whole world how terrible it is all the time.
If you're talking 5,000 a day, you're still talking almost 2 million people a year, and that's just way too many. And so I think again, and the belief was, and honestly, this is part of the problem in the first place, is that a lot of our folks believed that even if we passed a strong law, that Biden wouldn't enforce it because he's not enforcing the laws that are currently on the book. And I think that is a.
Did you say even if you believe that, then it's not worth doing anything? Well, I don't understand. That's why I say it's political.
He said enforce current laws.
It's worth doing something when you have a president who will enforce it. And so, hopefully there will be something we can do legislatively. But a lot of this, I think, can be corrected by executive action and will be when the president, if the president changes.
Did you say who's your pick for replacing McConnell?
Who's the pick?
Who's your pick?
Well, that would be yours truly.
Okay.
Yeah.
That's what I thought.
Okay, Senator, thank you for coming in.
Thanks.
Appreciate it. Nice to see you.
Thanks. Yep.
Vote for yourself.
Yeah,
You
well,
should.
It's a secret ballot election, so I suppose I can.
When we come back, Roaring Kitty causing an uproar on Friday afternoon, but the comments from Keith Gill failed to spark a rally in GameStop shares. So are investors sticking with the stock this time around? We will get to that question next, right here on Squawk Box. Keith Gill's live stream on Friday brought some renewed attention to GameStop, but are retail investors really sticking with the stock this time? Kate Rooney joins us right now for more on this. Hi, Kate.
Hi, Becky. Good morning. Yeah, so there are some signs that individual investors aren't as committed to the GameStop trade if you compare what's going on to the meme stock's heyday 3 years ago. One point comes from Vanda Research, which highlights what they call yo-yo-like inflows into GameStop since the return of Keith Gill, aka Roaring Kitty, to social media, and then his live stream last week. Inflows haven't been as steady. For example, one day last week, they saw about 18 million of inflows, and then the next day it was just 3 million into GameStop. So 3 years ago, daily inflows were about 5 times what we saw last week. And then as Vanda put it, individuals may be showing what they call paper hands rather than the acclaimed diamond hands. If you remember that back in 2021, diamond hands are this nickname for those who would hold on to a stock without any plans to sell. It's not also just retail trading GameStop. Only about 11% of the turnover, which is a proxy for trading activity, has been from individuals. It was above 15% if you look back 3 years. And then Vanda points to high frequency institutional traders also front-running retail's efforts, and then performance data demonstrates that this is not turning into the widespread bullish phenomenon for the meme stock cohort. So that's one factor there. Some also have deja vu. If you think about the losses in GameStop since the all-time high, the moderators of Wall Street Bets, that infamous Reddit forum, which really was the poster child for online meme stock trading a few years ago, saying recently that they don't want the stock discussed there at all. They say people ended up bag holding last time. They say we'd much rather, I'm paraphrasing here, but you go do that stuff elsewhere. They say good luck, Roaring Kitty, but your whole shtick, as they put it, and then disappearance really effed up retail guys. Back to you.
All right, Kate, thank you very much. Watching this pretty closely. I mean, when you were, I take it, Kate, watching the live stream, what were you thinking as it went through? It was a little unusual, to say the least.
It was unusual. It was unusual. I mean, it was sort of a bit, you know, it was this exaggerated caricature of Roaring Kitty, this guy who used to give more serious monologues and his thesis about trading the stock. He showed up in a sling with Band-Aids. His hair was much longer. You know, he's drinking a beer during this thing. So it was hard to take it seriously in terms of any sort of analysis. But he did say that. He said, you know, I'm not a reasonable person. This is a YOLO trade. You know, he's doing this sort of for the fanfare and the attention, it seems. So that seems to be the whole point of this, is that he is trading here, putting on this massive trade, I would say, for the attention and for just the sheer awe effect of the dollar amount. But, you know, his stake is now grown into the hundreds of millions. So there's a little bit to take seriously there, just in terms of the dollar side.
It was a lot. We were looking, and it was a 38 GameStop as he was saying all this on Friday. This morning, it's up from where it closed on Friday, but at 29.33. Anyway, Kate, thank you. Kate Rooney.
Thanks, Becky.
For more right now on what regulators may be looking at when it comes to trades and GameStops, we want to bring in Firdos Altai, who served as senior counsel in the enforcement division of the SEC. And Firdos, thank you for being with us today. There were a lot of questions about what he might say on Friday and whether or not that would land him in hot water. From what I saw, didn't seem to be anything that would necessarily be a big red flag for regulators. But what did you think?
Agree. I mean, he's a smart guy. He holds many FINRA regulations. He knows exactly what he's doing. I saw the whole thing as a stream of consciousness. He's not telling people what to do. He's only discussing his personal opinion. That doesn't give regulators a lot of wiggle room with what they want to do.
Yeah, it's kind of hard to label him a market manipulator. He answered questions saying it was just him. He didn't have other people who were in it with him. That would have been something they would have watched very closely. And he certainly seemed to lay out and show what he was holding. I mean, it showed that he would have lost quite a lot of ground just as the stock went down, too.
If anything, what he's doing right now is setting up a perfect defense for market manipulation. He's giving regulators everything that he would use in his defense if they brought up a market manipulation. I think ultimately what they're trying to do is ban him. That's a very high bar for them to reach.
Ban him from ever being able to trade again?
I think so. I mean, that would be the only outcome, right? If he was charged with market manipulation, they'd be seeking a lifetime ban. They would try to get him out of the market completely. You see what E-Trade is doing. They're unhappy. However, they're getting the best press they've ever gotten. Their information is on every single thing he posts. So they should be happy right now, in a good position as well.
I didn't think about that this is free advertising, whether they like it or not. What do you just think about the retail movement in general? It's something that we saw the huge rise up during the pandemic. There's still a lot of active retail trading. And look, on Wall Street, people have always said they want people to be involved in trading. What do you think of this brand of retail trading?
I think it's fantastic. For the first time, individual investors are out there. They're out in front. They're learning from people. Now, look, meme stocks, there could be an SEC rule on meme stocks. Maybe they just don't like that. But retail investors are finally getting into the market. They're starting to understand what's going on. They're trading their own money. And that's great for the market. And if Wall Street wants to try to beat retail, they're doing that right now. This is a game. Wall Street is a game. And now regular investors are having fun too.
having fun, and I guess part of it is just getting people actively involved. What's the right way to go about this? Because you don't want to see retail investors who are left holding the bag if there's a big movement that is not based on fundamentals and things that we get tossed around. But look, people have thought that Wall Street was rigged for years and years anyway, and that the retail investor could never win.
That's true. I mean, but here right now, with these types of meme stocks, Keith Gill particularly, everything is public, right? Perfect information makes perfect trades. That is the baseline of economics. The more retail investors have actual information, the better decisions they can make. Right now, we're seeing retail investors act very differently from how they did back in 2021. We're also seeing the street act very differently. They're reacting to Keith Gill. They're reacting to the positions he's showing that he's holding and affirming that he's holding. This is what the market is supposed to do.
How much of it, though, is different than what day traders were back in the late 90s, early 2000s? I mean, it's one thing to be an investor, it's another thing to be a trader. And it's a lot harder to be a trader whether you're a pro or whether you're a retail investor.
Right, there's always winners and losers. Day trading is one of the highest risk positions that you can take. That doesn't mean that retail investors should be banned from doing it. Day traders have been banned, right? Because they know how to manipulate the market. They know how to affect a short squeeze. I think if what they're trying to do, if regulators are looking at what Keith Gill and other meme stock creators are doing, is what they're trying to do is find a rule that doesn't exist right now to control the market. We don't want retail investors left holding the bag, but they have perfect information about what could or could not happen with this particular stock.
Fernos, thank you. We appreciate your time today.
Coming up, Bidenomics versus the Trump economy on the campaign trail. Stephen Moore, Senior Economic Advisor to the Trump 2024 presidential campaign, and former Council of Economic Advisors Chairman Jason Furman, ready to tackle the nation's economic challenges. Next, Squawk Box, coming right back.
Humanly possible.
Wow. Have we talked policy? We really don't, with all the identity politics. Joining us now to debate the Trump economy and the Biden economy and future plans. Stephen Moore is a senior economic advisor to the Trump 2024 presidential campaign, the co-founder of the Committee to Unleash Prosperity. Also, former Council of Economic Advisors Chairman Jason Furman. He's an economics professor at Harvard's Kennedy School of Government. And wow, we're going to break some new ground here, Steve. If Trump were to regain the presidency, former President Trump, what are some of the planks of his plan? I'm seeing something about even further cuts for corporate taxes. Is that really being considered?
Hey, Joe, good to be with you, and good to be with Jason as well. Look, I think there's no question the top priority will be to make sure that those tax cuts that Art Laffer and I and Larry Kudlow and others helped put together for Trump, and we did it. There was a lot of controversy about whether it would work, and clearly it did. We had a boom in investment. By the way, I was just looking at these numbers, Joe. Corporate tax revenues have almost doubled since we cut the tax rate. I think there's a Laffer curve that says that kind of thing will happen. But then, it's not just taxes. I think there's no question we're going to have a very pro-American energy policy. We're going to head back to being energy independent again. We're going to drill for oil. We're going to use our clean coal. We're going to use our natural gas to lessen the impact that countries like Iran and Russia and China have over the world economy. And then finally, we want to get Americans back to work. We want policies that could actually help people get back into jobs, and not just jobs, but jobs that pay well. When you've got a problem, Joe, a lot of families today, middle-class families, have a hard time being able to afford to go to McDonald's, for goodness sakes. I mean, this has been an agenda, a 4-year agenda, that was really crushed middle-class families.
Jason, there are certain things that you probably wouldn't disagree with, I guess, but there are some things you'd probably like to push back on that Stephen just said. What would be different if the president wins re-election?
Yeah, I mean, Steve left out the biggest tax increase that Donald Trump is proposing. In fact, it's the only very explicitly worked out part of his platform that I'm aware of, which is a 10% tax on all imports and a 60% tax on everything coming from China. I was not a fan of the latest round of tariffs that President Biden proposed. But let's put some perspective on them. They were on $18 billion of imports. We import $4 trillion worth of stuff. So you're talking about 200 times the scope of what the recent Biden tariffs were. For a typical family, you're talking an extra $1,700 of costs. And then you add that to the other inflationary parts of the agenda. You have advisors to President Trump saying that he would fire Jay Powell within the first 100 days. That would set up a massive amount of uncertainty, court cases, and the like. Let's say he doesn't fire him in the first 100 days, but he just tweets at him saying that he's worse enemy than President Xi, which is what he did the last time he was president. One of the things that President Biden has done that I really respect has been to respect and strengthen the independence of the Fed, even while it was raising rates really rapidly. What happens if that comes to an end? So I think there's a lot of peril here. A lot of it can be expressed, especially in terms of inflation and tax increases on middle-class families.
Jason, do you, I think I asked you about the capital gains increase, and you really weren't that anti-capital gains that President Biden was talking about. And what about the taxing unrealized gains? Both of those, to many people, those are both sort of anathema to any normal economic thinking. Do you go along with both of those ideas?
I mean, they're both way better than any of the tariffs that we've just been talking about, Joe. But look, there's a lot of economic logic to taxing unrealized gains. Right now, one of the problems with the capital gains system is that it locks in your gains. It dissuades you from selling because you want to hold until later when you get a lower rate. That is a proposal that applies to a relatively small slice of people. We could argue what the right rate of taxing capital income is, and I'm open to a variety of things. In fact, I'd like to reform the tax code so we had permanent expensing and got rid of the interest deduction, more incentives for business investment going forward. But, we're going to need to raise revenue somehow.
What about the tariff issue, Steve?
Well, look, on the tariffs, I worked with Trump in his first administration. We talked a lot about tariffs. It's interesting because, when I've talked to Trump about this over the years, he's always said, Steve, I use tariffs as a weapon. And he does. And he's used it in my opinion. And by the way, I'm a free trade guy like Jason is. I don't like tariffs. But, it is an absolute truth that Trump used the threat of tariffs highly effectively in his first term. It was the threat of tariffs that got the European nations to pay their NATO dues. It was the threat of tariffs on Mexico that got Mexico to help secure the border. It was standing toe-to-toe with President Xi and saying, look, I'm going to slap you with a 40% tariff unless you start playing by the rules and stop stealing our intellectual property. And you know what? All of those things worked. And it's really interesting, Joe, because if you look at the tariffs that were applied by Trump versus the tariffs that have applied to Biden, Biden actually has higher tariffs than Trump does. So come on, that isn't kind of a fair thing. Now, one other point. This capital gains issue that you brought up is incredibly important to investors. Most of the people watching the show watch it because you're investing your money or investing other people's money. This would be an economic cyanide pill to the U.S. economy. He's talking about, and by the way, I'll give Biden credit. He's telling people these crazy things that he wants to do, like tax unrealized capital gains, which has never been done before in the history of this country. People would literally have to sell the farm to pay the taxes. And the capital gains tax would go up in the United States to roughly the highest in the world, higher than China, higher than Russia, higher than Europe. Like, how in the world is the United States going to compete with those high rates?
Hey, Steve, you also mentioned a report about what would have been added to GDP if a lot of the fossil fuel, whether it's executive orders, whatever you want to. I think that the Democrats would say we've never been producing as much oil and, I don't know why they'd admit that, because that was supposedly they didn't really want record production of oil and gas, but that is what happened. Is that in spite of Biden? How could it have been even better? What'd you say, 250, how much more would have been added to GDP?
We would have about $200 to $250 billion of increased oil output over the last 3.5 years if we just stuck with, a very pro-drilling policy. Now, you ask a good question. How is it that we're near an all-time record of oil production? Well, as everyone knows, we had the shale revolution that caused incredible productivity improvements. But the point is, when Trump was president, when he left office, we were energy independent. We were producing about 12.5 million barrels a day. And at that time, the price of oil was only $50 or $60 a barrel. Today, the price of oil is closer to $70, $80 a barrel. So when the price goes up, you would normally see a massive increase in supply. That hasn't happened under Biden. Why hasn't it happened? Because what was the first thing he did when he came into office? He killed the Keystone XL pipeline. Just a week or two ago, he took nearly 1 million acres of prime oil and gas land off of line in Alaska. I could go on and on and on with these things, but when you've got a president who says he wants to destroy an industry, and that's what Biden has said to the American people, I want to destroy the American oil and gas industry, that tells people don't invest in the industry. I can't think of any industry that would do better if Trump wins than oil, gas, and coal, by the way. We should be producing more of our clean coal as well.
What do you think, Jason?
First of all, let's talk about things like the so-called Inflation Reduction Act and the investments in clean energy. Those are investments that the big oil companies are out there defending because they're making a lot of clean investments as well. They're facing a lot of uncertainty in terms of those investments going forward if President Trump came back into office and fulfilled his promise to get rid of those subsidies for clean energy. That's one of the really important industries that we have in America right now. Second of all, Joe, you already went through it chapter and verse. We're the biggest oil producer in the world. We're a net oil exporter at this point in time. We basically are energy independent in that sense. But you're never energy independent from global events. Events happen around the world, and they are going to affect the price of oil here. That's true no matter how much oil we produce. You can never insulate yourself from the global price. I do want to go back to the tariffs because the main thing that President Trump tried to negotiate was an agreement that China would buy more of our exports, and they're not buying more of our exports. They didn't keep to that agreement when President Trump was in office. They haven't kept to that agreement when President Biden was in office. Moreover, I have no idea what Trump is trying to accomplish with a 10% tariff on every single import coming from every single country in the world. What exactly are we trying to do in terms of leverage? The one thing that Steve said that I agree with is that, yeah, I'm disappointed that President Biden kept that first round of Trump tariffs, which I think didn't work, added a little bit on top of them, but all of that is minuscule, 1/200th what we're talking about in a second Trump term.
I don't know, Jason, Stephen's backdrop, I don't know, man. It just, when he's talking about things, I'm not even listening to what he's saying, but I'm looking at that backdrop, and then with yours, you gotta get something like that, Jason. It just, did you see it? You know what I'm saying? It's better than remember when you were locked in that pod, one of those pods?
I know, yeah.
This is better than that, but look at, he's got the cap. I mean, it's just the gravitas.
He's just waiting to go in there and put those tariffs in. You can just see it happen.
He's going to be in one of those offices back there, he's hoping. Jason, thank you. Stephen, let's do it again sometime. You'll both come back and do it together again? You seem to like each other, okay? It's nice to see.
Absolutely.
Okay, great.
Coming up, Eli Lilly's experimental Alzheimer's drug up for discussion at the FDA. We're going to check out the prospects for the treatment and what this could mean for the stock next. Squawk Box returns after this. Welcome back to Squawk Box. Today, the Food and Drug Administration's advisory committee set to discuss and vote on the risks and benefits of Eli Lilly's experimental Alzheimer drug, donanemab. For insights on all of this, Jared Holtz is here. He's the healthcare equity strategist at Mihozo Securities. Good morning.
Morning.
So what do you think? Are we going to see this thing get approved?
I think so. I think this, I mean, it's been a long time coming for this company in Alzheimer's. I think we're finally at the precipice of an approval. I think the main point of the meeting, I think, is just to get everyone on the same page. There were some nuances with the trial. I think when all is said and done, it gets approved, we get a second therapy in this class.
When you look at the results of the trial, do you think that it's on the margins? Do you think it's a game changer? What is your real view here?
I don't think it's a game changer at all. I think we have one drug on the market that's doing 30 to 40 million a quarter, which is really not much, right, from Biogen and their partner. I think this is a nice additional therapy. We're probably still in the infancy stages of getting a treatment that works really well for patients to the point where they're excited, the physician community is excited. We just did a neuroscience panel a couple weeks ago, and the physician community up there was not all that excited about these current treatments, but I think we're at least getting closer.
Well, so that's the question. If the doctors are not excited about it, who's the use case for?
Well, I think the problem is, like, you got to have the patient come in or present with symptoms at a stage in which the drugs are going to work. So this is mild to moderate. I think in some cases you're threading the needle, and also the amount of times you need to keep on coming back for therapy is also an issue. For Biogen, it's twice a month, although they're pursuing once a month, and for Lilly, it's once a month. Right. So I think getting patients to some sort of infusion center is also an issue.
And then briefly, when you think about the stock, you think this is not a mover?
I don't think it's a big mover. I mean, the stock seems to be, it's a complete monster, just a real anomaly in healthcare. $800 billion company.
This is a tiny little.
I think it's a small deal for the stock. I think a full approval, stock is up a decent amount, but I feel like even if it's a limited label, maybe flat to down small.
But if we are getting closer to something that people are excited about, is this the building block? And I'm trying to compare this with technology.
It's a piece in the journal today that they compare it to the Sydney Farber discovering some horrible cancer that was so toxic to people, turned into chemotherapy and the accepted regimen. And this might be the very beginning.
If you're behind an AI, you can't catch up. Is it the same sort of thing with the Alzheimer drugs?
Right. I mean, there are a bunch of biotech companies pursuing it. It's a super difficult, therapeutic area, of course.
But is it the same thing where you can't make it up, you can't build off somebody else's base that they've built, or is this a different story when it comes to
Well, I think this might be a little bit easier than AI or even obesity, because you've got these powerhouses that have kind of captured the market and have already dominated. This less so. I mean, there really isn't an
Alzheimer's advance, not a cure-all. The donanemab promises progress. The FDA shouldn't hold out for perfection, and then they're going to say this is the beginning.
Right.
This is the beginning, and
agree. Yeah, I think there's so few.
But is Lilly in the driver's seat, or is it, we're going to get everybody?
I think you'll have, Biogen is currently in the driver's seat, although I don't believe that their lead is significant. If this drug gets approved over the near term, you're going to have 2 therapies now approved. And I think what I'm kind of looking forward to is if they can get these drugs into better modalities, like regular injections where you can do it at home, go to a doctor's office.
They're talking about it being a cocktail. This might not be the cure-all, but it may be used with other things that work on the underlying.
Agree. I think that's what we'll see here.
Okay. Jared, thank you.
You bet. Thank you.
Up next, a final check on the markets as we get ready for the opening bell on Wall Street. Squawk Box will be right back.
take a look at the markets. Joining us now ahead of the opening bell, Ryan Dietrich, Chief Market Strategist at Carson Group. After a great year last year, people thought maybe a reversion to the mean this year. So far, so good for 2024. More to come in the second half. Ryan?
Yeah, Joe, good morning. Thank you, and go Cincinnati Reds. As hot as the Reds are, the market's just as hot, Joe. You think about it, listen, May is usually not that great, and we just had a really good May. What I think people need to know, Joe, is that could be a signal, right? When you gain more than 4% in May on the S&P like we just did, June is higher 8 of the last 10 times, but more importantly, the rest of the year is up over 10% on average. It's double the at-any-time returns. That's just one signal, I get it, but Joe, we're still seeing clues. I've come on with you guys for a long time now, saying this is a bull market, but we're not changing our tune. We still think second half of this year is going to be pretty darn good.
The S&P next year is expected, in your view, to earn what, Ryan?
Yeah, well, this year they're expected to gain 11% right now. We think it could gain about 1% or 2 more, and even then you go into 2025. Then, I mean, gee, it's expected to be low double digits there. We think again a surprise can happen. I mean, people keep doubting this market. But again, what have we seen, right? I mean, just last week, Joe, on a pretty good upside, what happened? Put to call ratios go higher. Some of those sentiment polls became a little more skeptical. I mean, that kindling is still there overall for a summer rally. One more point, these 3 months we're in right now, June, July, August, in an election year, or last I checked, we are right now, usually are pretty strong. So we think a summer rally still makes a lot of sense, Joe.
You'd prefer earnings continue to rise, or you could prefer a little bit of softness that allows the Fed to cut, or you'd like both?
Yeah, wouldn't we like both? I mean, you think about it, though, we're seeing that, right? I mean, we're seeing the softness. Just last week, you look at the ISMs, right? The ISMs, like manufacturing and services, boat prices paid came down. Unit labor cost prices came down. So we're seeing some positives. And then again, the underlying pinnings of this strong bull market and this economy we're seeing, we don't see any major cracks. Other cracks, of course, there are some cracks. But overall, earnings are still strong. Inflation's coming back. We think the first cut will likely be in September and one more in November from the Fed.
There are people that say this is still, the breadth has not expanded enough, and you think that the soldiers come to meet the generals. You're not worried that this market's been propped up by the NVIDIAs and the Magnificent Sevens of the world?
That is a great point. And just 2 weeks ago, across the board, we're hitting new all-time highs or 52-week highs in various advanced decline lines. So yes, believe me, we'd like small caps and mid caps to participate more. But we think that's the case. We think that's probably going to happen. I know other guests have pointed this out, but you look at PE multiples, small caps relative to large caps are as cheap as they've been since the late 90s. They had a 13-year outperformance. I mean, it's going to start right now, but we do think small and mid caps probably do pretty well the second half of this year as things do overall expand.
All right, Ryan, we've got less than a minute left. We appreciate it. We're going to take a quick look around the markets before we go. Ryan, thanks.
Yeah, let's do that right now. Take a look at the futures. When we started the show 3 hours ago, you saw that the Dow was down by over 120 points. It's improved a little bit, but the Dow still indicated off by about 80 points this morning. S&P futures down by 11. The NASDAQ indicated off by about 45. And then you've got Treasury yields, which picked up pretty significantly on Friday. We had been below 4.3% on the 2-year, but then we got those jobs numbers that were stronger than anticipated. And as a result, you see the 10-year at 4.46 this morning. The 2-year is sitting at 4.88. Oil prices have been hovering right around $80. Now it's well below that, actually, 76.13. That does it for us today. We hope you join us right back here tomorrow. Right now it's time for Squawk on the Street.
Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanillo with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. We do set the table for a big week. CPI, Fed decision, Tesla's annual meeting, futures getting dinged a bit by some higher yields in Europe after Sunday's parliamentary elections. Our roadmap's going to begin with this big week on the street. Investors preparing for that batch of inflation data, another big Fed meeting on Wednesday. Apple holding its long-awaited Worldwide Developers Conference today, expected to unveil some new AI products to take on Microsoft and Alphabet, and we will continue to monitor Musk and that major Tesla shareholder vote as one of the company's largest shareholders announced they will be voting against the $56 billion pay package. Let's begin, though, with what we said will be a busy week for the markets, Jim. Fed, of course, in the middle of it, CPI tomorrow.
Yeah, I mean, it's odd because
It's June 10th. I mean, maybe it's before the end of the summer, but this is some week. And the Worldwide Developers Conference has been something that we follow periodically. This one has major import for reasons that have more to do with the new phone, but also with a sense of what happened to Vision Pro, which I believe there could be a business angle. I feel like I'm the lone believer in it, but I think it's exciting because we all kept our phones. I don't know anyone who switched to although Best Buy says that Samsung phone is very popular, but they never lost that, even though, so I think there's a loyalty involved. The Tesla, there's no loyalty involved. I mean, here we have a guy who's building a company, and it's heads in the Bears win, and tails he loses. I just find that it's unfathomable that this is a person who built this thing, and he's going to lose, I think. I mean, Bernstein had a really good piece.
Tony did write a piece today in which they suggest he won't get it, and that the stock could fall 5% plus if people are worried that he leaves.
Yes, and I think that's interesting is that Tony Taganegi puts in this very good analysis that the dilution that comes from him winning is horrendous, so you cut back on the dilution, but so what if he leaves? It was a very interesting piece because it did make it pretty stark that it looks like he's going to leave is the way I felt it, and that would be devastating. I mean, there is no Tesla without Musk. I'm sorry, there isn't. It's just nothing that I want to see. The Fed, I think, doesn't matter, although there are still people who are holding out for more cuts than I think are realistic.
We did see some forecasts trimmed last week. I know JP Morgan and Citi are now back to September, November. I think we only have a few firms that have no cuts. Jefferies, Mizuho, SocGen.
Right.
All first cut in 25.
I know. Well, if you go over Friday's number, it was a nightmare for the bulls, and yet it didn't seem to matter in the stock market. It mattered in the bond market. The thing I thought was most disconcerting is that there's this whole cohort that's actually, the jobless is growing, and it's the cohort in their 20s. It seems like if you make it to a certain level, you're good. If you don't, you're dead. And that's something that I think the Fed's going to have to be thinking about.
It was actually a really interesting quirk in the data Friday. Some say maybe it's a one-off, but has all kinds of interesting political ramifications if in fact it's actually happening.
It makes me go back to Larry Fink's incredible letter from BlackRock, which talks about this lost generation. Now, I thought that generation was going to be sitting pretty because baby boom inheritance. In the interim, though, they seem to be losing on the capital side. They're losing on the job, let's say the promotion side. And suddenly I realized we do have two classes. I don't want to generalize too much to what happened with GameStop, but there just does seem to be this generation that says the man is letting us down or the man is sticking to us. And I saw that in the Friday numbers, and I was like, wow, what happened to the upward mobility of a particular generation? And maybe Larry Fink's right that there's just tremendous disillusion.
Well, it's not just an American phenomenon. I know you took note of the elections in the European Union yesterday. Macron's going to have these snap polls. French yields sharply higher all across the continent today.
Yeah, I mean, it just seems like that there's a revolt against the current order, and the current order was one which said it was like a so-called Popular Front in the 1930s, and it was like, hey, listen, we're for everybody, but the right is saying, oh no, you're not. You're just for what we regard as being a period where we just spend a lot of money so that we can handle as many immigrants as possible. And I think that we see that here, we see that there. And I think that the difference is that they have snap elections and can do something about it,
Right.
where we have one every 4 years.
Right. Macron's definitely going to take his chances and try to teach Le Pen a lesson, but no guarantees later this month.
And this is somebody who's been on the fringe and is clearly not on the fringe. If anything, is now a mainstream vote, but not a mainstream candidate. It's just all over Europe. There seems to be a sense, all right, this thing is going too far. Let's pull back. But the pullback is by hard right. I mean, this is not like a right-wing old Republican.
No.
It's a hard right.
No. Some did argue this morning that the center right basically held, and that the far right is chipping away, but at the edges for the most part.
I mean, I think that would be the mainstream media's approach to it. Somewhat in denial. I think they're because I think that no one's used to having a right in Europe that is as close to that we've seen to the 30s, not to the 40s, and I think that we're all kind of like, are you kidding? But no, nobody's kidding, and there's just a note of rage in these elections. I saw rage, and I think the mainstream media does want to call it rage.
Right. All that said, Jim, I mean, it's not like we've been dealing with political uncertainty for a while, and we keep hovering just below all-time highs.
I know, and by the way, the bonds of all those countries are awful versus ours. I mean, a lot of time I hear that that we have such a big deficit that our bonds are therefore, that there's a great yield to be had and it's going higher. I don't know. I mean, I don't want to be in any of those European bonds.
Right.
But let's address the all-time high issue. I thought it was insane. I mean, I thought that interest rates are going higher, and Friday was a divorce of interest rates. That's not been the case, and it looks like today is a kind of a reckoning that we realize maybe we got a little too bullish on in stocks versus bonds is what I felt.
Right. We'll see. There is some discussion this week about very short-term seasonality. Back half of June's usually not too hot, whereas the beginning of July, fresh second half money comes in. Are you kind of prepared for that chop?
Yeah, I like that. I think we have to rest a little. Now, here's what I don't buy into, and I did a piece for the club. There were so many, the equivalent of get out now pieces, but they're couched. I mean, these pieces would just say, listen, the whole thing's been run by NVIDIA, or the whole thing's run by a small group. I hate that. You know why? Because if it broadens, well, you know what? There's a bad thesis, and you sold ahead of the broadening. Who says it won't broaden? Why does it have to narrow? Was it going to go down to NVIDIA, and that's it? I mean, no, you can't make that judgment. That's a faulty judgment. Now, let's say you add in the chaos of GameStop. Well, you know what? That's just, if David were here, he would say, Jim, that's a sideshow. You bring that up. Might as well bring up Southwest Air. And I don't think anything's a sideshow. I watched the presentation of GameStop.
Right.
And while the stock was down, how do I know it wasn't down? Because Ryan Cohen sold a lot of stock, and now he's got his own SPAC with a lot of money, and you want to be in that SPAC. Do I think that I make no judgments about what I saw in that video?
Really?
No, because I think that if you are a big Reddit follower, what you got is your pal having fun, because that's who we know him as, a pal. I'm not part of Reddit, so I don't know him as a pal. I didn't want to be judgmental because he made a lot of money. Maybe others did too. I hadn't thought that.
I guess Joe made a great point this morning on Squawk, and that is that, all right, this thing had a lot of viewers, right? 600,000 live stream viewers, and it got our attention, and we talked about it at noon. But if that happens again and again, don't the market's nerves get a little deadened? Doesn't it become sort of an eroding novelty over time?
I think that it would only be eroding if Ryan Cohen wrecked the stock, because the followers of this man are people who feel that Wall Street establishment must be defeated via GameStop, and we don't have as many shorts as we used to because they're afraid of the Redditors. Now, I respect the Redditors, Wall Street Bets, and I respect them because they got a stock up of a company that I think is not worthless but really bad. I mean, it's a moribund homage to hard video games, and now I look at that and I say, before I make a judgment on that, I say to myself, you know what? There's a considerable cohort that is amused, and that it's okay to be amused. We don't think so. We don't think that amusement should play a role in stocks. Well, maybe I'm just old. Maybe I don't see the fun in stocks.
But you're saying the entertainment value is part of the value.
Yes. That's better than I put.
This sort of this commingling of gambling and investing, right?
Yes.
For lack of a better word.
This changed everything. Robinhood changed everything. Remember, they got it. They made it fun. They made it exciting. They made it. I mean, look, if you go and you talk to Jason Robbins, okay? I think Jason Robbins would say, listen, my DraftKings is far more serious than their Robinhood. But Robinhood got away with it. Look at the breakdown of Robinhood. It's like crypto and options. But they got away with it. Why? Because, why shouldn't they? We had Gary Gensler on. He didn't say, look, I think Robinhood's bad for the market. I'm saying there's two tiers here. There's the old, which we all think is right because it represents trying to find a really good stock of a really good company. And there's the new, which just says, what the hell do you care about how good the company is? That's like a meaningless construct. Don't you understand momentum? Don't you understand the way you can take it to the man? And I'd sit there and I'd say, I want to judge those people. But who the hell am I to judge them? They won on GameStop for a couple of days. And I'm reluctant to say to that man who was at the left corner that he's a foe, but maybe he's an abstraction. But there are many people who say he's a folk hero, and we're losers. We're losers because we make a judgment of a man with a bandana and a beard. Now, I think Portnoy, whom I like very, very much, is a serious cat. I didn't find this man serious. But that's just a judgment that...
It is highly subjective on your part.
Yeah, that just shows that I'm like, who the heck am I? What, I'm an older guy who doesn't understand the new zeitgeist? Wait, look, I talked to a lot of Redditors this weekend, a lot of people who read him. And everyone to a man or woman said the same thing, which is that, man, you gotta start reading more. You gotta start understanding more. You represent the old view. And I said, well, what's the new view? Is there like a GameStop? I said, what is it? GameStop's not, doesn't matter. It's the old versus the new.
That doesn't mean you're going to turn your back on fundamental analysis.
Not at all, but I don't want to be as judgmental. I think that the new is not going to make as much money as the old.
Right.
But I'm not going to say the new doesn't exist, or the new is misleading, or the new are fools. The new are not fools. The new are angry, they're upset. I think they lose.
Sure.
But they're angry and upset, and I want to acknowledge that they're angry and upset. In the same way I want to acknowledge that the people in their 20s are the loser from Friday's number, and the people in their 20s have little hope, a la Larry Fink, and this man comes along and he's like, look, at least I'm amusing.
It's a really sharp point of view, Jim, having an open mind.
I just have been bombarded by people who just say, geez, are you just oblivious to what's happened?
Yeah, you don't want to be ever truly out of touch.
We're dumb money, and they're smart money. And I never regarded myself as dumb money, but in the eyes of these people, I'm as stupid as I'll get out. And you know what? What I'm going to say, like, oh, I went to a really good school? That means, God, that makes me really bad. Remember the scene in Dumb Money where he went to Northwestern? Don't mention that. That's elite versus not elite. My head is spinning, and it's The Exorcist.
That's a good way to kick off the week, give us viewers something to think about. When we come back, we'll get to Southwest getting a boost this morning on this reported stake out of Elliott. Take a look at the pre-market. Also get to a couple high-profile downgrades of some tech names like AMD and Adobe.
Very important.
When Squawk on the Street. Comes right back.
com.
Shares of Southwest moving higher pre-market following this journal report actually now confirmed that Elliott has taken a near $2 billion stake in the carrier, Jim. Calls for upgraded leadership, comprehensive business reviews. They want change.
Yeah, they do, and there's an excellent deck out if people want to see it, calling for a stronger Southwest. I mean, they embraced the idea that there's a lot of upside to Southwest and that it did well over a long period of time and kept the balance sheet during COVID. But everything else, frankly, is just underperformed, bottom tier of unit costs. A lot of empirical analysis of the operational meltdown and how poorly the company's been run and how it lost Wall Street. That it's losing employees, that it requires change. And I would tell you, Carl, my view on Southwest is that they won't be happy unless wholesale change. This is not minor change. This is not even what I saw in with Texas Instruments, where they kind of just got the Heisman. Like, I think this is basically a genteel group of people and a board that's genteel, and I think that Elliott believes everybody has to go.
A couple of questions here. There's a look at some longer-term charts. I think it's down 45% over 5 years. How do you separate their operational issues from what Boeing has handed them?
That's a great point, because I think that one of the things that we respect about Southwest is they've never kicked Boeing under the table. Never kicked them to the curb. But they did say they were going to hold Boeing accountable, and then they just kind of said, "All right, you know what? There's nothing we can do. We're lovers, not fighters." And I think that Elliott would believe, why weren't you fighters? I mean, you got to come to terms with what's going wrong. And this is like the great Don Budge, who was this tremendous tennis player. He said, listen, when things are good, don't change a thing. When things are bad, be willing to change anything. And they're not willing to change anything. So you've got this set mindset, which is a kind of a religious cult. And they come in, and I'm sure that Southwest is going to say, hey, guys, we appreciate the fact that you're a large shareholder. We're not changing anything. So I think this one could get a little, this could get raucous, okay? I don't want to say ugly. I want to say raucous. I think the only difficulty is I know I don't want to sound like what I say about Pat Gelsinger, but they're very nice. And I have confronted Mr. Jordan many times about how can you do this? And his response is, you're right. Bob Jordan, CEO, you're right. I mean, we haven't delivered. We're going to deliver. And then, there's a really bad page. I mean, no, I'm sorry, a page that shows you on page 29 of all the interviews that Bob Jordan has had with us, of which many are with me, many with Phil, where he just keeps saying, listen, it's strong. I'm very proud. It's strong. And the biggest problem is we had a great 23, Bob Jordan told CNBC, and it was awful. We had a strong first quarter 24. It was awful. And one of the greatest lines is, this is again page 29 of the deck, Q1 24. We had a strong first quarter despite the financial results.
Is there something else?
This is a stock.
Right.
We had a strong first quarter. We lost a lot of money. We didn't do well, but that doesn't matter. So I think the painful thing here is that you really wish Southwest well, because I think when we have them on, whether it be Gary Kelly, Herb Keller, or Bob Jordan, you really want them to get it together. And Boeing, you could blame Boeing, they didn't, but that in the end doesn't matter. They didn't deliver. And this document is filled with a disconnect from reality, which is what they call it. Leadership has ignored calls for change and entrenched views. And the board, they view, I believe, as incredibly lightweight. There are people who have done a good job in life on the board, but maybe they're not the right board.
Interesting. It is funny how we always look to them as a highly simplified model, one type of equipment, a hub and spoke, a corrective force on pricing for the industry at large, right? And those were all positives.
Right, but they're saying, listen, a lot of that is out of date. That it's obvious that something's not working. The idea that they have been the leader empirically says is false. And it hasn't bolstered profits. So whatever they're doing, I think Elliott would say it's not working when it comes to finance. But I think that quote is so important. When it comes to finance, that's not mattering enough. And it matters to shareholders. And I think that what Elliott says is, you know what, I think you run a good airline, but you got to make money. You got to make more money than you're doing. And I would totally respect their view. I think they're right. I mean, the company's stock has been awful, and the company's how it's viewed on Wall Street is awful. How it's viewed on Main Street may be okay, but what matters is, in the end, they've got a good balance sheet, and they've done very poorly, much poorly than every other airline. So it's like, let's say it's a football team. It's like, listen, guys, you used to be in the playoffs every year. You have not even been in the first part of your division. Don't you think we need change?
I know, and it's not like you can blame the backdrop of travel demand.
No, you can. As you mentioned, travel demand's as strong as it's ever been.
We'll get Kramer's Mad Dash countdown to the opening bell. Get one more look here at the pre-market on this Monday as we get set for, as we said, high-impact week of trading. Stay with us.
Okay. Good morning, retail traders. Get more done with Monday.com. Everybody's talking about the kitty cat. They said people aren't as enthused as GME as they was because of his thing. But I don't know. I think people are stuck in it, going to have to bring it up some. But if it don't move here in the next couple of days, could be looking for a better price. I think he lawyered up's what I do.
Got some action in the semis today as
His
Morgan
video.
Stanley makes some calls, resumes coverage of Broadcom and cuts AMD down to equal weight. Jim's going to give us his take on that and this downgrade of Adobe over at Melius in just a couple of minutes. Opening bell
What I mean-
in about 4 minutes. Squawk on the street. Stay with us.
What I mean by lawyered up is that he just made a couple things clear, that he makes mistakes and that he's not telling anybody to get into the trade, and that he's looking at it as a long venture, which usually once it has the next pop, that's long enough. But he didn't say much anything else. He didn't want to say too much because regulators are on him, eyeing him right now. Every move he makes and every move that other people make with him. So it's really kind of a dangerous trade, but it's still going to be, if you know how to scalp pump and dumps. To me, it's just a scalping trade. It's not something you want to hold or day trade unless you break a certain resistance. And I've got 37.10. for GME. I personally didn't like what he did. I think he could have done better, but he's not stupid. He probably put a lot of thought into it. I think he was a little bit shy and didn't know how to handle himself because he had so much attention brought onto him. He was shocked to see so many people watching his thread the other day. So it'd just be fun to watch him. Right now, the 200 SMA on the hour has to hold. If not, I've got $20 and 22.79. We hit my 26 one that I had up here, 26.11 Friday. I had it off this here double bottom, so we got a double bottom with a higher low. And if we build momentum above 30.45, we should be able to get it to 37. But I think there's probably better stuff to be trading. I'll watch it. They're more or less flat. We're just 61 points in the red. I consider that flat these days, 50. Because the market's changed so much. I mean, if we were down 60 points 15, 20 years ago, we'd be in a panic sell. Oh my God, we're going to have a red day. Now we got NVIDIA on watch. Oh, the bell's already rung. Wow, that was fast.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
That didn't take long at all. So today's red, PLTR, Adobe, down $10, Adobe. PLTR is moving a little bit. Watch Adobe, it hit my first support. Cohen maintains a buy on Adobe. Price target 625. They had to get that out there. Someone else got 510 price target, which sounds more better. Citigroup has 529, lowered the price from last time, keeps a neutral rating. It's definitely oversold. I mean, I don't know if it's oversold, but it's definitely down 50% or more for the year. And we're squeezing between my low support and the 200 SMA. CRM. Mara's under 20. Where'd you go, Mara? Mara's under 20. We got NVIDIA at 120. Uber The Donald's up 47 cents. CRM's up 71. Just got an alert on NVIDIA. Ready, set, go. This is their baby now, remember. McDonald's was down last week. Tesla down 45 cents. We have a triple bottom on Tesla. Did you see the chart I threw up this weekend? Yes. Not on CLS, CLSK. U.S. moves closer to imposing tariffs on Asia's solar panels following. They've got to stop this frickin' tariff shit, man. Our dollar ain't going to be worth a crap if they keep it up. People just ain't going to want to do business with us. We're not the leading country anymore. They just got to stop it. Google got some volume. It's down 85 cents. My business always suffered when a Democrat was in office. Always. Let's see what Google's doing here. So the 11th strike. SPX is consolidating yesterday's or Friday's low. SPX. We got the gap down, which I appreciate. We got a couple hammers. I think we'll end up going up to the upside. We gotta just wait though. I'm gonna wait. A little bit longer here. Hurry up. The SPY 534 strike. I'm watching. SPX, Lotto, support to hold is going to be I can put that over here. Just got the entry right there. The 43.50s. The 53.50s if we don't drop. I'll get 3 of them. Can get them here at 320. Maybe. And we breached support, so I don't know. I think I'll wait. Might have to look at a put. Yeah, that was a gap down right there. That's not. We'll go for it. What the hell? $3. There we go. Break it. Kind of can't make up its mind right now. Remind me to never work for the IRS. Well, they were at it this morning. We got so many different personalities up there anymore. They hire anybody off the street. A bunch of wackos. Okay. Back to 3 here. Google has a Head and Shoulders right around 171.50. If it drops another $1.50. 171. Oh. Can't go much lower than this. We breached. Well, no, we didn't. Hold on here. Come on. Bring it back up. That's the 1, 2, 3. Everybody hear me good? YouTubers, can you hear me okay? SMCI also moving. Bring it back up. Yeah, you can hear me. Google's starting to reverse a little bit here. We stay above the 9. Let's see what GME's doing. A lot of kids trading GME with no experience. One guy says he's a genius. I wouldn't say that. If he's a genius, he probably should have never got on YouTube there. SPY has a fallen wedge. SPY looks like it's getting ready to squeeze. Yep, it's ready. Resistance 534.70, 534.32. No, it's not more of a fallen wedge. It's same kind of flag, more or less. Well, it's, yeah. Kind of broke out. Break it. Should have grabbed 3 more at that 285 area. That'd have been a smart move. Apple has a nosedive here. We've got a snake. Oh, damn. Okay. Watching the video. We can do this week or next week. I'm going to look at next week's 120 strike at 3:30 for NVIDIA. Go, baby. Go, baby. And the SPX at 380. 3 white soldiers. Oh, I just farted. Hey, little sister, what is going on? White wedding, yes. Damn it, Jim. God darn it. Can't think straight. Mondays are always a little rusty, especially when you don't know. 390. I love this game. $4.40, go baby. Just hit my first resistance. Scale out, just. Good job, Mike. Let's see if we can get that other resistance level. We might hit the 200, but 534372. I could scale out here, do it, and have a few left. Yep. Got 130 on the contract. And I've got a few more left. I meant 430. No, not 100. But I could get 100% if we break the 534372. And everything's going my way. NVIDIA hit the 63. NVIDIA. But it's just not gaining much. Here we go. Break it. I tell you what, them people at the IRS, God. I've been there since 11. They are spoiled brats. They get a kosher job and they act like children. We got NVIDIA has a tweezer bottom on the 1 hour. Wow, we've already been here that long? No way. That had to have been huh. NVIDIA has a tweezer bottom on the hour time frame. Jim says, is it worth all that typing anymore? Nobody listens to you. Nobody listens to you. Tweezer bottom, see it? I'll be right back. I gotta talk to Nancy in the bathroom.
You're seeing leverage accumulation on the long side in this stock, and I like how it's set up.
I do too. I still got a week,
When you have
2
a
weeks on my
short
Intel, a week.
Crushed his Intel. You know, the upside looks like it could, you know, the dream is alive. But so then how do you know kind of when to go, all right, that's a good enough bounce. Let me get out of here, because anytime this thing has gotten any kind of bid, it's looked a few times like it's coming back into the fold, and then it gets sold right back off.
Well, again, it's the way I play. So a modest move in the underlying, a modest move in the stock would produce big gains in the right option. Now, if you look for the last 10 years, 25 is a super support. That's the bottom over the last decade. So I'm looking at the 25 call for January. Your guys had to double check that I was going with the January option. Yes, it's a January option, 7 months at a time. The September option is only $75 cheaper, so why not buy the time, even if I may not need it? So it's setting myself up for success, giving myself plenty of time for this stock to make a comeback, and I always use that bullish divergence. The volatility on this stock is essentially down at the year low, even though the stock's at the year low. So that means that the options are cheaper in relative terms, and that's a healthy sign of a sentiment shift. Any short covering here can get this stock on the move, and a move to the 40 level, which is the halfway point of the year's action, a move to that 40 level, these options gain 100%.
Yes.
All right. So going in the
But I ain't that far out.
$5,
Yep.
which gives you
more than $5, almost $6, my friend. Depends on where we are right now.
we're up 30, 50. All right. So you're in the money, and you're buying a hold. And I mean, Jan, you got plenty of time on this, so this is like a second half little comeback trade.
Right, and the idea here is even if the stock does nothing for the next 3 months, you can see where the September is trading. You know, this option would depreciate $75. So it's a way to be in position, a way to identify the bottom with that bullish divergence, that sentiment shift, and we've seen that over and over again. You know, let's just go back to something, you know, like pick a BABA. Nobody loved BABA. It made that same bottoming, and that's the sign that the fear has lessened and that the shorts are running out of strength. I'm seeing that same thing here. Now, this may not be the exact bottom, but guess what? I've got 7 months of time to be there with a limited risk position. That allows me to sleep well.
All right. Where do you cut your losses if it makes a new low?
Well, with any option, you can put in a stop loss at half of what you pay, because mathematically, that's oftentimes either the market's gone the other way or you're running out of time. Time is not part of this equation. So, you know, again, 25 for me is a super support level. I'm just gonna see where we are in the next 3 months, and then use time to make the decision if we haven't seen the move. Because again, we're $5 in the money. It's like being long from 25.
Okay, there it is. Alan Nuckman with the Bullish Intel Trade. All right, you're wading into the waters on this one, because this has been the most hated stock. So
this is how to do it. I love being hated.
All right. Well, okay. I'll give you big props if it hits. Thanks, Alan Nuckman.
All right.
Chief Market Strategist, bullseyeoption.com. All right, we'll keep talking some tech when we come back, and still in a theme of tech companies have been under some pressure this year. Hasn't been quite the same for Braze after a big run last year. The software business has turned around. It's caught a little bit of a bid from last week's earnings. It's trying to hold it, even with numbers that beat expectations and beat the previous guidance. The shares are down about 20%.
Video
on the year.
390.
We'll be right back with the CEO.
So we got NVIDIA. The SPY looks like it wants to stay above the 200. I've got some SPX from 3. I could bail out here, but I'm just going to hold this a little longer. I think we can get to the 200. If we do that, this will be worth about double. I'll be able to get out around 6 or 7. And the video's at 4. Keep going, baby. SPY getting double topping. Turn the TV thing down, yeah. Ha 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 ha. Exit idea. SPX at 410. I think I put my cabbage cakes in the oven a little bit too long, but I'm gonna still eat them. They're a lot better on the grill, on the stove, in my iron skillet. Come on, break it. Break it. We're at a double top resistance. It could easily come back down and create a lower low. Or we could break out and hit this next resistance and run up to the 200. If we break, no, God, don't do that. Go up. Oliver. Oh, look at this guy.
Opportunity to accelerate our investment into the Australia-New Zealand ecosystem, and that was born on the back
got
of a
lipstick
long-standing relationship that we had with a reseller that is you shouldn't expect.
I think he has
our growth
lipstick
to
on.
necessarily come through inorganic in the future. We obviously will look for strategic opportunities as they arise, but the story of Braze,
You're using your man
as
voice.
as we're sharing it right now, is an organic one.
So how do you guys approach the AI stuff right now? Walk me through what kind of impact that has, as it seems like in many ways you could probably harness this if you're trying to expand, if you want to do it in a way that requires maybe fewer employees than you would have before, if there's efficiency there. But I can also see where if I'm trying to start a business, I might be able to just run some code or have some person kind of plug
your
some
haircut
stuff in,
sucks.
that gives me some of the customer experience.
You make a
solution
hippie
that
look
might
like
pay
trash.
Braze for. So is there any disruption element at all where you have to compete with what people might be able to do more single-handedly?
Yeah, so I think that actually a big part of the promise of Braze has always been that you take a less kind of technical, or at least someone that's not, a programmer, and be able to give them
Totally
the opportunity
embarrassed.
to build out sophisticated logic that's going to run their customer engagement programs. And so in Braze, we are primarily used by marketing end users, but we actually arm them with a platform that we have called Canvas, which is a visual programming language which allows for them to
he's not a stock
design
picker.
the
Okay.
customer journeys and design
Relax.
kind of being a companion to those customer journeys to help shape them through messaging. That's fundamentally what we do, and we did it to the tune of sending multiple trillion messages last year. But within that, if you're going to send trillions of messages and have them be effective, you obviously need automated decision-making capability. And so Braze has been investing in AI and machine learning for our entire history, and we continue to find new opportunities to incorporate it into our platform in a way that is quickly adopted by even non-technical consumers of our product and users of Braze. And so that's been it's fantastic for us.
You
With
got
the
some
underlying
business.
capabilities of AI and machine learning gets more sophisticated as the state of the art continues to advance. It also becomes more generalizable, and that actually has important implications, because when you look at the diversification of Braze's customer base, we work across a lot of different categories. Working with media brands like Max or Webtoon, looking at people like Canva or DraftKings, going into the QSR space and working with Yum Brands, or in health and wellness, we're working with like Headspace and Life360, or financial services with Venmo and Chime, etc. When you think about the diversification of those verticals, the task that AI and machine learning has to do also needs to be generalizable. And so one of the really exciting things that's been happening with Gen AI and these more capable agents more recently is that the breadth of tasks that we can trust them to do in an automated way has also been expanding. And when you put that into a platform like Braze, you have people that really understand the business problem, the marketers that are using it every day. We arm them with more and more advanced automated decision-making capability, and that lets them then scale their efforts to have substantially more
that's
impact.
NVIDIA.
And Braze is absolutely the tool that they use to do that.
Now, as a result of the developments from Gen AI over the last year, have you had to go in and kind of reprogram? Like, if I'm a customer and I'm using Braze platform, I'm using the tools that you're describing there, when I'm giving an input to create something, is that going through the software that you guys have built, or do you have to partner with the Gen AI leaders, the Alphabet, Microsoft? You guys have, is there a financial relationship there? Do you have to pay for the ability to use these OpenAI style tools, or are you saying you just built in your own version of this in-house?
Yeah, so it's a combination of things. There are places where we're using the kind of API available foundational models from the likes of OpenAI. There's other places where we have trained our own models, and then there's other places where we use machine learning and AI approaches that are not Gen AI oriented, right? And so when you look out across the entirety of our predictive and intelligence suites, when you look at Sage AI, which is the kind of umbrella that we put over most of our intelligence features. There's a lot of different approaches that we're taking, whether it's just statistical approaches to be able to do what, I refer to as automated decision making, to kind of remind everyone that the goal here is to get a job done, right? We're trying to make decisions automatically and efficiently. And sometimes the statistical approach is sufficient for that. Other times we're going to want to use, different machine learning approaches around like neural nets, or being able to do different coefficient analysis, clustering algorithms, things like that. And then, more recently, obviously, things like transformers have entered the picture, and being able to do prompt engineering, or things like being able to use RAG, which we talked about with some features that we announced more recently. And so, there's a lot of different approaches. They all coexist simultaneously within the Brace platform, because there's a lot of different jobs to be done, a lot of decisions being made in every single moment when you're trying to decide the right way to engage with the customer during their complicated nonlinear journeys across different platforms through different times of day, when they're calling upon brands through their mobile devices, in these fleeting moments. You need to be able to make decisions rapidly in a diverse set of circumstances, and that means that we need to have a very versatile set of investments in AI.
The guy's smart.
Well, we'll definitely be following along.
He's
Very
definitely
interesting to
smart.
see how it unfolds. Appreciate your time, Bill. Thanks a lot for joining us.
Absolutely. Thanks for having me this morning.
Good stuff. Good to catch up. Bill
But
Mangus,
please,
CEO at Braze. Right,
change the color of your
So we're
lipstick.
moving a little bit here now, about 3% actually. So from an up after last week's earnings, and earnings that, by the way, analysts were showering with praise. I think 18 analysts on Wall Street covered Braze. Not a single one says to sell. One has a hold. So market's still holding on after shares have slid 20% on the year. Bill Mangus, CEO. All right, coming up, Chartmaster's got some analyst notes for us. Taking a look at the 3 up movers on the morning. Planet Fitness higher by more than 3%.
Maybe I turned down the other thing.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support.
He looks like your girlfriend.
That means a lot for my community and for every community.
Trading the trending names every day.
Oh, yeah, I don't like his haircut.
Ready for you, ready to go.
Not for a hippie.
Kevin Hicks. Catch me on Fast
And that
Money,
lipstick.
Weekdays at noon on the Schwab Network.
He's hard to look at, but he's smart.
Great. I started using
Looks are deceiving
so I
sometimes.
can easily invest in trends, like wearable tech.
Trends. All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets,
I know what I can do. I can grab a strawberry or two. That'll keep me occupied.
it is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
No politics, no noise. From bell to bell and beyond. Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Break it. Do-do-do-do. Lord Farquaad haircut.
Furman back up here, joining
King
us
of the
today,
Lords.
Kevin Grain, taking a look at some equities that are
SMCI new highs.
this morning. Planet Fitness, the biggest
Nailed the
winner
bottom.
last year. Jenny, we got an upgrade.
Nailed the bottom
Shares are up
on
like
NVIDIA.
3.5% right now. What's going on?
And they've rallied about 11% so far this month, so seeing a pretty good June so far. And Jefferies is only adding to the sentiment of upgrading shares to buy from hold. Price target of $100 a share, up from 62. And they highlighted that the shares have seen this pressure, but the company's current headwinds are now well understood. And they said that there's a more visible path to improving trends following the new CEO, the franchisee model adjustments, and of course those price increases as they did raise their baseline rate. I believe it was like the first time really in like decades in which they actually did hike, of course, that entry-level fee. But the firm does believe Planet Fitness's long-term opportunity is still attractive and the risk used to the upside at current share levels. They also do believe that this new CEO Colin Keating's perspective and existing relationships will serve Planet Fitness well moving forward. So this name actually has really strong conviction among analysts. There's 13 buys, 5 holds, and there's no underperforms, no sells. Average price target is 76, so slightly below where Jefferies is at $100 a share, but $100 is now the street high. So low is 61, high is $100. So the street sees some upside, and we've pulled back about now 3.5% on a year-to-date basis, but nice momentum we've seen in this name as of late.
All right. Yeah, and I'm curious to see how KG approaches the chart here because, Kevin, I can see like a long-term look at this, looking different than a short-term look. So what's the approach? How do you go?
Yeah, I would say look at the 1 year daily time frame here, Oliver, because we do see a little bit of a trend shift that is taking place, and we actually did see a nice little breakout to the upside today. And the technical term for that is this ascending triangle that we have at point B. So we'll start there and we'll go to point A, right? So point B, we're in this ascending triangle, making higher lows, but that resistance level was pretty much leveled out, and we actually had that resistance level sitting at around $68 before breaking to the upside here. And the reason why that's actually very key is because last year we were in a strong downtrend. We saw a little bit of a consolidation, and then we did gap higher, and that gap was between $56.50 to $62, and that gap was actually once again tested in March. You can kind of see that on the chart, hitting the lower end of that gap before trying to push higher here. That ascending triangle that we are seeing, that breakout to the upside on large volume, is very bullish for this stock, which is why I say, you have to look at this kind of time frame. We might see a little bit of a paradigm shift that's taking place. Now, when you're looking at the MACD is bullish overall. We have a bullish uptrend that is taking place here, and the RSI is also in a bullish uptrend, making higher lows and making higher highs on that. So I would not probably, this is more of a bullish chart setup than a bearish one. Look at resistance of around $75. Maybe some supply does hit the marketplace here, but this stock has been doing fairly well over the last, let's say, 8 months or so, and it's been able to maintain at least that $56.50 area, which is a very key area to note here.
Okay. Yeah, all right. So it's trying to make a move again. I didn't realize that Planet Fitness was still such a popular stock.
I didn't either.
I guess like the forget your membership trick is still working for them?
Yeah.
Isn't that the strategy? Like it's so cheap that people forget to cancel?
Because it's like $15 a month. I mean, I think I pay more for Netflix at this point.
It did, but it used to be even less too.
It used to be 10, I think.
Right, okay. All right, so Planet Fitness, reliable, I guess. 3%, chart looking pretty decent. How about DraftKings? Obviously very, very reliable, but did take a little bit of a hit, what was it, last week or the week before, about the Illinois potential taxation?
I know, classic Illinois, just messing everything up. That was my first thought when I saw that headline. But yeah, shares sank as much as 11% on the news that Illinois was basically like restructuring some of these tax benefits that would be obviously benefiting a name like DraftKings. But Morgan Stanley added them back to their picks in North America gaming and lodging list. $51 price target.
The video 450.
But it wasn't as positive as actually I'd say like the headline reads. They did mention these positive catalysts alleviating some recent pressure from, of course, those tax headlines following Illinois' move to a higher, more progressive tax structure. They do see capital returns being announced along with the company's second quarter release, which is due out
exit idea.
August. But they did know that free cash flow is still
NVIDIA double top.
And the company reiterating their guidance, even with this headwind from Illinois, shows that there's some strong underlying market growth. So I guess I appreciate like there's like two sides of the coin here. They are admitting that there are some near-term headwinds that DraftKings has to work through, but this name also trades at a forward PE of 376 times. So that's insane. And then that's, I think, betting on the expectation that we'll see more legalization, like that we'll see this really rampant growth. But I mean, there are still major legislative pieces of information that have to be passed for that to happen.
But in the meantime, they're literally willing to pay people and give them free bets to join the platform because they just know they're going to rake them over the coals for eternity. So
it works.
That's where it's at. That's the popularity right now.
It's them and FanDuel, pretty much.
Yeah, pretty much. These casinos that are trying to keep up are just doesn't seem like anywhere close. It's like DraftKings and FanDuel, true.
Because the interface that they use is so easy. Like if you've never ever been even involved in this world, anyone can bet on DraftKings.
Yeah, brings the learning curve way down. So, all right, which I think is why they're doing so well. Has the chart broken in these last couple of weeks a little bit, KG?
Yeah, I would say this is more like a yellow light, right? A cautionary chart, to say the least. It has been in a very strong uptrend for a fairly long time here, Oliver. This ascending channel that we have that's taking place here, which was an orderly buy. A lot of bullish sentiment that was taking place here, also kind of signifying...
Michelle's that better on your ears, honey?
What the price action
Can you still hear him talk?
The chart. But we did reach that $49.57 level, which was the highs. We did see that back.
YouTube, can you still hear the TV? I heard it was a little bit too loud. Let me know how it sounds.
Break through that,
If I sound too high, or I messed around with the volume when I recorded with Vegas this weekend.
200-day moving average, that red line, so that is going
It's better.
to be area for the stock to be able to hold. Then if it does not break,
Okay.
if it does not hold,
Right now I'm making some honey mustard sauce.
$32.20 as well as $45.95. But the 200-day is critical for trying to maintain this uptrend. If you're kind of looking at the MACD, it's in bearish territory, but we are actually seeing it hinge a little bit higher, especially when you're looking at the 12 EMA trying to cross above the 26 EMA. That is a signal that we have a oversold condition that may be at a point where we see a near-term bounce for the stock, and the all-clear bullish signal would be crossing above that zero line. And then for the RSI, we did bounce once again off of that oversold territory. Look for an immediate bounce potentially when you're looking at the price action for this stock. That 200-day is going to be once again very critical. Though breaking down from that level could cause a cascading effect when it comes to sell orders, unfortunately.
All right. One of the first times in a while, really. It seems like pretty clearly first time in a year that the chart has kind of been in question for DraftKings. So I'm sure a lot of folks are going to look at that and salivate at a dip buying opportunity, though. But it has been really hit here. It's not quite springing back as quick as it has in the past. Carvana, last one. Right? Yeah. Okay. Just making sure it's Monday. Carvana price target hikes. Here we go.
So the most Monday thing about Carvana is the fact that we're up 101% this year. We've pulled back about 17, 18% from its recent high, while still being 72% from its all-time high, which was $376 a share and 80 cents. So, I mean, that's just like the fact that we're off lows by 470% while still being off of all-time highs by over 70% is just ridiculous. This name's though short interest has actually come down quite considerably. It's only about 24%, which is actually fairly low for Carvana. But JP Morgan raising its price target to 150 from 130 with an overweight rating. And they mentioned all of these positive catalysts, like the fact that this used car market has seen this recovery year to date, driven by more affordability and temporarily better commercial auction supplies. However, they do see some lingering supply constraints, both cyclical and structural, that are likely to put the lid on any inflection in their unit sales over the next 12 to 18 months. So, I mean, to me, that's optimistic, but not as optimistic as you'd think, given the fact that they raised their price target. And they went on to say that they actually are sort of pivoting to prefer companies that have more visible or positive earnings revisions and overall just execution opportunities, but still named Carvana their top pick in the retail ecosystem. And amazingly enough, I mean, there's only 3 buys in this name, 16 holds, 2 underperforms, but no sells. This name trades at a trailing PE of around 47 times. I mean, that's almost double the specialty retail sector, and the consumer discretionary sector is like 36 times. So it's expensive, relatively speaking, while also like not consistently putting up results.
Well, that's the story of Carvana in a nutshell, basically. Market continuing to apply a quiet premium on it for whatever reason. All right, Kevin Green, this is like the steepest stair-step chart ever.
Yes, but it's from a technical standpoint, it's still fairly bullish here, to say the least. We had last year, we were...
Okay, I'm gonna go get my lunch ready. Them pies didn't, I mean, that cabbage pie looks better than I thought it did.
And broke that channel, tested the 200-day moving average, got fairly close. And then we saw this...
So that's what I'm having for lunch.
Not only from
I'll show you what I'm doing.
but that was at the same time that they did restructure their debt, which did kick off that fuel for the rally to the upside, as well as that short squeeze. Now, if you're kind of looking at it right now, that 200, or the 20-day moving moving average is a key area of support where it has been bouncing off of that. We do have an ascending channel line that is taking place as of right now too, so keep that in mind. And some areas of support, if we do break to the downside here, is going to be $90, and then the resistance level is going to be $125. RSI is actually fairly bullish, making higher lows on a relative basis over the last, let's say, month and a half. So that is actually bullish. And MACD, which is in a bearish formation, does appear once again that it does want to cross that 12 EMA, crossing above the 26 EMA, and it's still above the zero line, which is ultimately bullish. So once again, you can go back and forth when it comes to the valuations, but if you took the name off this chart here and you looked at the setup, we might be in a little bit of a bull flag consolidation in the intermediate term, but that bounce up to 20-day moving average could signal that we could push higher here.
Yeah, okay. I mean, look, don't be a hater, you know, like...
Our vending machine.
Yeah, exactly. Short at your own risk, man. We've seen some folks really get burned by trying to bet against Carvana, so even though it might kind of make you scratch your head a little bit, why the market loves it so much, that's okay. We don't have to figure that out. That's why we do the charts. Thanks, Jenny, and thanks, Kevin Green. The chart's still looking pretty good. And it seems like Plant Fitness also too, DraftKings. A little bit of an unusual dip there, but it's holding on. Thanks, Kevin Green. Thanks, Jim Horn. Little S&P 500 rebalance. Let's go to Renita Young for our developing story. We'll update on what's in our index. Renita, what's up?
Well, right now, KKR, CrowdStrike, and GoDaddy are all trading near their all-time highs. They've all hit all-time highs sometime today. On the news that they are going to join the S&P 500 in the quarterly rebalance. It's supposed to take place pre-market on June 24th of this year, so we're not too far out from that. It typically happens to make sure each index is more representative of its market cap range, but also allows these stocks, of course, to be part of exchange-traded funds and other funds that track the S&P 500, which could drive some short-term demand in these stocks. Now, these three companies are going to replace Robert Half, Comerica, and Illumina in the index. Illumina is planning to spin off its cancer test maker business Grail this month, but these companies of them, Illumina plans to be replaced, or it will replace GoDaddy in the S&P 500, or pardon me, the S&P Mid-Cap 400. And Robert Half and Comerica, they're going to replace Anywhere Real Estate and AdTrad Holdings in the S&P Small Cap 600.
All right. It's a little shake up, but generally good things for those that get included. CrowdStrike, I mean, really, really, really big one here.
Huge.
KKR, big too, with the big rally, but CrowdStrike in particular, because of the way it was, bouncing after earnings. This thing's now like still in the midst of a huge ramp up. Wow, check it out. Okay, thanks, Renita. Big rally there for CrowdStrike, up 9.5%. Amazing stuff. Market also, as I mentioned earlier, is firming up and showing some signs of risk on. Bitcoin flipped positive. NASDAQ flipped positive. Dollars cooled off a tad. Bonds still down though. Caroline Woods and Kevin Hanks with me here for check-in on the market action. So that move on CrowdStrike, Kev, look, getting in the S&P 500 is a big deal.
It is. It's a double-edged sword, though, right? You go up with the S&P 500, but you also go down with the S&P 500 if there's a global sell-off. That said, CrowdStrike is one of those cybersecurity names that have kind of established itself as one of the leaders for the way that they do cybersecurity. So it's a really good story for them, and it's probably, I would say, well deserved. They're in such an important category of the U.S. economy right now. They're one of the clear leaders.
It's KKR too. Look, both these stocks had already been trending higher.
That's what I made this weekend.
Story some years ago.
Cabbage pie with coconut.
Evidence of front running. Names that
coconut flour, coconut cream, coconut.
But I'm kind of surprised.
Everything had coconut.
That sort of tree hasn't been arbed away a little bit to some degree over the years, because it seems like, that's why these are doing what they're doing. Up 10%. So in a couple weeks, Carolina, they're going to get the flows from anybody buying all the big index funds and stuff. But it also, I think, generally helps too the market with a name like CrowdStrike, because it's like kind of pivotal in one of the key tech sectors and trends that people were wondering about a couple weeks ago. We kind of got a little spook in the cybersecurity trade, but it seems like CrowdStrike's bringing us back.
I think with cybersecurity, though, it has been a case of winners and losers for quite some time. I mean, we talk about cybersecurity as obviously it's kind of it's not discretionary on balance sheets because it's so important right now, but we've seen such a divergence in so many of the players. Even this earnings season, we've seen that. But CrowdStrike definitely a clear winner and definitely giving a nice boost to the S&P 500 today. Or I'm sorry, giving a nice boost to the NASDAQ today ahead of, it's not in the S&P 500 yet, but yeah, because I was taking a look at just kind of, this is a market that's not going a whole lot of places, but there's a lot, offsetting. So, for example, I was taking a look, CrowdStrike's the winner, but AMD and NVIDIA obviously weighing on the NASDAQ today for the S&P 500. Illumina getting the boot, that's weighing, but Southwest giving it a nice boost today on the story that we talked about earlier with the activist investor, and then of course the Dow getting a nice boost from Walmart and Home Depot, Honeywell as well, thanks to some analyst activity, but Visa kind of weighing on shares, which has resulted in Dow, NASDAQ, and S&P not going a whole lot of anywhere at this point.
Yeah, it basically
AMD moving.
Something down for everything up, basically. But the other movers are kind of fun. Southwest. I mean, what do you think, Kev? Is that going to be a big
Meta
deal
double topping.
to say that things could be better there?
Yeah, they want board seats.
Apple book out of a snake.
Southwest was generally known for years as a well-run, efficient airline. It was always important that they had gas ahead of time. They were well-run, but then they ran into that Christmas vacation debacle. I mean, it was caused by weather, which you can't predict, but they didn't handle it very well, and it kind of showed their
caused by weather, exacerbated by mismanagement.
Exactly.
I mean, I'm going to keep saying this over and over again.
Whole name and reputation under attack. And
If you have a good watch list,
is gargantuan,
which I have,
to a certain level, and airlines are that way as well. So
you can make great trades off that every single day.
Changing some leadership, changing the way the company's run. It's a fundamentally sound, well-run company, but it probably needs a little facelift and a little up.
It's like AMD this morning.
Yeah,
Huge gap down.
Of course, as we talked about earlier this morning,
Snake, falling wedge,
travel industry is
breakout, pull back, higher low, boom.
There's an underappreciated name, room for improvement. If there's a diamond in the rough, probably time to start digging for it.
In this world where capacity is tight, not enough planes coming out, established airlines might be the way to go.
Sure.
Right? Why don't we just take this one already here and make it better?
Yeah. Well, I mean, look at the Delta chart. It doesn't have to. The charts don't have to be as bad as they are for airlines. Another sector of winners and losers. But I feel like generally too. I mean, today and tomorrow, Caroline, we might be just treading water a little bit. This is a distinctly back half loaded week.
Yeah, it certainly seems to be the case. I mean, we do have the Apple's Worldwide Developers Conference kicking off a little bit later today. Apple under pressure ahead of that, but I think that we've really been anxiously awaiting Apple's AI strategy coming to light in that meeting. So maybe that could, kind of hold us over for a bit. But no, I think the real turning points, the real catalyst for this market will be CPI. And then, of course, the Fed and the dot plot, really, in terms of expectations for what the Fed's going to do through the rest of the year. That's really, I think, what's going to be the highlight. But yeah, it basically seems like treading water at this point when you take a look at the major averages. Not a whole lot of action, but there is quite a bit of news to hold us over.
True. If Apple gets above $200, makes a new high, then I think we'll probably be moving pretty quick. But we'll see if that happens as we get the afternoon coming into shape once we see the developers conference get going. Thanks, Kevin Hinks and Caroline Woods. Appreciate it, team. Thank you for joining Morning Trade Live. Trading 360 with the Club Pedalides is coming up next.
Oliver.
See you this afternoon. We'll talk some Apple then.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once a client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Man, Johnny, you always have to keep talking about the family, about mother. You know she's no longer with us anymore.
Our disruptor, Broadcom, after a bullish note from Morgan Stanley. And in our 360 round, the very latest on all the antitrust lawsuits from the DOJ, the FTC, focus on AI with NVIDIA, Microsoft, OpenAI in focus. In the meantime, taking a look here at the markets right now, the Dow's down about 104 points. The S&P and NASDAQ on track for the 3rd negative day in a row. Well, the NASDAQ's turning around here. That's up about 33 points now at 19,034. The S&P's down at 53.44, and the Russell is down 1/4 point. And we're watching oil and gold, which right now oil's at 76.68 a barrel, up $1.15. So that's moving after 3 weeks of declines. Gold pulls back a bit, 23.20, and Bitcoin
almost at the 200, Randy.
90. U.S. dollar gains a bit, 105.29. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on Schwab Network. We're talking about Southwest Airlines, some activity there.
$4.95. You think I should take profit?
Tell us about that.
Randy?
Nicole, I think they proceeded as a positive because, of course, this is a stock that's dropped now about 50% over the last 3 years, and they really have not been able to shake that December of 2022 nightmare of holiday travel that has since
The Donald has a knife.
their overall price action. So Elliott Investment Management has a $1.9 billion stake in Southwest, sent a letter to their board of directors criticizing their outdated strategies and poor execution. The reports of their stake-boosted investor confidence, which did send shares, as you can see, up 7% now on the session. But Elliott did say that
GME go boom boom.
to modernize.
I said it would.
In their December of 2022 operational meltdown, has
The guy made a big mistake.
a disappointing outcome for shareholders, employees, as well as customers. They pointed out that fact that we've continued to see this name lag overall the other major.
I don't think he's as bright as everybody thinks he is.
CEO
But
Bob Jordan, who has been with Southwest for decades at this point and has delivered some subpar financial and operational.
Did he just kept his mouth shut?
Disappointment. So
Would
under
probably
his
be breaking
leadership,
out.
They've experienced 7 negative guidance revisions in 17 months with rising unit costs and, of course, lagging revenues. It also does not help that, of course, this name has such a sizable exposure to all things Boeing, which, of course, has also had its fair share of turbulence this year. But Elliott
I would have never pumped it like that. I mean, I would have never got on there like that, looking like that.
And that most of these independent directors were recruited
Not knowing that
by their executive chairman, Gary
the
Kelly,
SEC's watching me real close.
There's also been some discontent from employees at Southwest.
I would have come out with some kind of idea.
This time, right now, definitely a needed change, and as we enter these very, very critical but also very busy peak summer travel months, I do think execution and their ability to be competitive is huge. So I think this is seen as a win, and at least at some degree of catalyst to change the tide that has been so negative in Southwest for now at this point years.
All right, Jenny Horn, thank you so much. And the
Jenny Horn.
Up arrows today. Appreciate it. Let's get some insights in the news shaping the markets. For that, we welcome in Andrew Brenner, Head of International Fixed Income Securities at Nat Alliance Securities. Of course, we have the jobs report. I mean, just to set up the big picture, we have the jobs report. There have been articles this morning, tepid, cautious, ahead of the Fed and CPI, PPI. Should we start from backwards? Your thoughts on the jobs report?
I thought the jobs report, the headline was much higher than the expectation. And as I read stuff both on Friday as well as over the weekend, there are a lot of discrepancies in the jobs report. First of all, the unemployment rate went up. The household survey was down 408,000. And then if you look at all the forward-looking numbers like JOLTS and other activity that Bloomberg puts out and revisions, it really looks like the number should have been a lot lower. And if you look at how the Labor Department calculates the number, I mean, the response ratio of the phone calls they're making is down to 64%. So I think the birth-death rate is off. Basically, no one's believing fully the jobs report, but it was enough to send rates back up 15 basis points, which means that we can't get through 430. So we're back in a 430, 450 range. It will probably test 450 on 5s and 10s before the week's out. So going into CPI on Wednesday morning, we're expecting a little bit better number month over month, maybe 0.1, and a little bit of reduction. If we don't get it, it's a surprise, then we're going to break 450 to a higher yield area.
Yeah.
But I do think that Powell is very cognizant of the employment situation, and I don't believe he fully believes the 272,000 number, and I think you're going to see that in his press report. So we expect the Fed statement to be somewhat hawkish, but we think Powell will be his normal dovish in the press conference.
And so with that, if the headline maybe seems a little hotter than it should be based on the household survey and JOLTS and all that, tell me about the cuts. When do you expect, are you expecting the 50 basis point cut at some point, or what are you expecting now?
I don't expect a 50 basis point cut for any reason other than a panic, and I don't foresee a panic right now.
Okay.
We've had to really move out our July idea, and we're not a big fan of September because we think it's too close to the election. So right now we're thinking 2 cuts, and we're not exactly sure when they're going to happen. Could be November, December. It could be September. July looks like July was 1 in 10, then it went down to 1 in 3, and now it's back out to like 1 in 12, something like that. So I don't see that we have enough numbers between now and the July meeting to bring July back into the time frame.
Right.
So, but I still think 2. and I do think we're going to get more cuts next year. Look, just to put in perspective, both Citi and Morgan Stanley over the weekend, Citi this morning, reiterated their 3 cuts for the year. So Morgan Stanley was September, November, and December, and I assume Citi's the same because they knocked out their July cut.
Right. Okay. So, and the point, and you answered it, was next year. You think they'll continue some cuts?
So here's a lesson to learn. We had a big pop on this little penny stock. I don't see any volume on this thing. None. Until that day. A little bit right in here. That's a turn off to me. It has to have real good news. If I want to take the trade, it'd have to have good news. So it goes off my watch list. Tesla's spiking here. I missed this trade just now. I would have probably took that.
Their outlook for July could change, but if it's a much weaker number and you get a second CPI number in the month of July and you get a couple of good PPI numbers and a couple of good PCE numbers, it could make things more interesting. But right now we're looking in the 430 to 450 range for 5s and 10s. You couldn't really get through 430. The question is, can you now hold 450? Right. And we'll see. Based on positioning, I see there are still some longs out there. There's still some shorts out there. The middle of the curve seems kind of flat, but the front end is more short, and the long end is a little bit long.
All right, that being said, I wanted to ask you about the market, talk about the equity market, which is hitting new highs. Last week, the S&P and NASDAQ kept hitting new highs. I know we're watching bond yields very closely. What do you tell folks who say, should I be investing in the market based on the economy or the moves from the Fed or whatever? Do you have thoughts for them?
The equity market is not looking at the rates market. Obviously, if they were, they've gone from 6 cuts down to 1 to 2 cuts. And we're setting new records. This is an AI-driven market. There's just tremendous amount of money being made. I believe the net worth in the last quarter, which the Fed announced on Friday, is up $5.1 trillion. And the amount of interest that individuals have gotten in the first quarter has gone from an average of 700 odd billion to almost 4 trillion. And that's from interest rates going from 0 to 1%. So that money is really going to the people that have money. Yeah. It kind of feeds the idea that Rick Reeder of BlackRock put out maybe a month ago now, that lower rates would lower inflation, which no one believed. There's one other thing I want to talk about. Speaking of BlackRock, which just reminded me, we listened to a BlackRock real estate report on Thursday. And the one thing that really came to mind, they're saying things are okay, we got everything reserved for, or whatever. That's their issue. But the thing that struck with me is their cost of capital is 210 basis points lower than it was 4 or 5 months ago. Some of that is the 10-year going from 5% to 4.30, which it was on Thursday when this report came out, and the other is 140 basis points cuts in spreads. This is the whole idea that spreads have been coming in, and this is some of the tightest spreads we've seen. Sure. So with 210 basis points of cheaper capital, things are going to get better sooner than people think.
Yeah, that's good news when you hear that, because that's not necessarily what everybody expected. So it's nice to hear it. Good.
Can I just talk about Europe for 10 seconds?
All right, you get a few seconds. Go ahead. Yes.
Well, what you had some bad elections in Europe over the weekend. So France decided to put in an election, and that's crushed French bond markets today. Last I looked, they were between 12 and 14 basis points higher in both 10s and 30s. And it's hit the Italian market, it's hit the Greek market, hasn't hit the German market as much. but higher rates, which has hurt the euro, which has improved the dollar. So we have to look at that as something that's going on. In CDS, credit default swaps for France, we're out about 10 or 12% when I looked first thing this morning.
That's a good point. I'm glad you added that in. Andrew Brenner, thank you so much. Great to see you at Nat Alliance Securities, setting up our week for us here. Thank you. Plenty more to come here on Trading 360. Up next is the big three. 3 stocks, 3 charts, 3 trades. Then Lichtenstein goes to the technical. Scott Bauer takes us through the trades for Salesforce, Nike, and Abercrombie & Fitch. Right here, Trading 360, Schwab Network. We'll be right back.
Do. Nike. More cowbell, please. Lily. Go Spy go. We did hit some resistance there. We could pull back to the 200 if it doesn't want to hold this support right here for a possibility of a buy signal. Now I have to say my cabbage pie, I give it probably a 7.
Fascinating. Nothing for you.
Yeah. Trying to figure out what I missed. I mean, it's not bad. Cabbage and coconut, I guess, might not mix too well.
And catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free. Welcome to Schwab Network.
The first thing when I realized I was a chef, the first thing I ever cooked was Bachelor's Living 101. I'd cook up some rice, and by that time I was a master rice cooker. I learned from the best, Mrs. Leong, and I went out and I bought me a can of chili. I put the rice in a bowl and then warmed up the chili and poured it on top. And from that day on, I knew I was a master chef. I think I would have turned that down. Go get me some hot water. They call me the master what? I missed that last word. Oh, yes. That is true. I'll bait anybody's hook. Okay.
As I've said numerous times, Nicole, that we have discussed, got to have that protection in your back pocket just in case. But I think you have to be cautiously optimistic right now.
All right, so
And you got a Snoopy on your back wall.
let's talk about
Okay.
When you look at Salesforce, you said this could be a short. You're looking at the top and the bottom. I guess it's been a little bit all over the place. So some of your thoughts, please.
It has been all over the place, especially since earnings, and we saw the big decline here. And the recent rally back,
The MU breakout.
in my opinion, pretty interesting opportunity for a fade. 248 and 245 just
AMD
above
hit
here.
resistance.
Those are real interesting spots that I think it's going to be a tough time for
Pull back
Salesforce
to
get
200.
through. And if it does fail to break above that, I love the short back to around the 230 level, perhaps even as low as 220 in the very near term. If the markets continue to rally and Salesforce is not a participant, this should be a really decent play to the downside.
I see. Okay, yeah, that's what he said.
Nicole did not want to hear that.
Short, and that seems to be your play. Let's talk, Ben, about the chart, please.
Yeah, the stock has struggled for a while right now, but if you look at the longer term, I think that we could be stacking up for something a bit bigger picture potential to the upside. So I'm going to push back on the short opportunity, but I can see what Scott's talking about in terms of 245 to 248 being significant. In fact, that's right where we recently...
Well, I've realized this show has a lot of beautiful women on it and a lot of nerds. So this would be a great place for me to work at.
Into the highs recently around 247, and how while we're off that peak, we're kind of still holding this upper level, forming a bit of a consolidation area, a bit of a range around this 243 level. So this is acceptance of the most recent run-up that we've seen, and again, that big move on the left side of the screen. Let's take a look here at another time frame we can pull up, which is, again, somewhat bearish here. So we've got the 5-minute, which is showing a bit of a bullish pattern, the 4-hour, which is showing a bit of a bearish pattern. So again, this is a stock that has been a little bit of a mess recently in many ways, not a real clear picture on the 4-hour. You are seeing a bit of a downtrend. So
gotta be kidding me.
Looked at off the end of May lows, and then again where we are at current levels, balancing around this 230
That ain't
level.
bearish.
This is why I'm thinking longer term, give the benefit of the doubt to the bulls. I think this was a key area that we just recently tested right around this 220 area. Middle of range we've been in for years. We're going all the way back to 2018 here, and this range that we've established. But here's what I like, and I've been watching this pattern quite a bit, Nicole. Hold that middle of the range, rally off here right now, build momentum to the upside, start to participate. As Scott mentioned, it has been a bit of a laggard, but gain some enthusiasm to the upside.
Hey, let me tell you something, Frankenstein. If we break to 63, we're going to go higher. If not, I don't see the 220, but I see the 221.55. But we do have a tweezer bottom here, Frankenstein, which we're going to break to 63. And you're going to find some resistance at 249.58. $250. But we do have a hard resistance at the 63 on the weekly.
All right, next up, we're looking at Nike here. And Nike, you said if it holds, maybe it could break out.
Yep.
1 year, it's down about 9%.
I'm up pretty good on Nike.
It's been a tough trade. They do have earnings in a couple of weeks, and I really think it's very close to making a decent move to the upside.
Yep.
May have some difficulties right around that 100 level, but there's signs of life in this stock here.
Yep.
If it can stay above 93, 95, 97 is the big resistance. If it breaks through, then we go. I believe then this thing is going to run, and not only can I think it breaks 100. 107 is where I've got my sights on that. I really think that we can go, and that is a gap fill. So that would be the longer term projection here. Near term, above 100, 107 to me would be the target. But again, with earnings a couple weeks out, this is a position I want to see working heading into earnings. If not, I would probably have to wait until after.
There's only a couple things wrong with Nike. and that they went woke. And number two is there's a lot more competitors out there now. I've never owned a Nike pair of shoes. I think I'm going to, though. I'm gonna get one just to say I got it before I pass away. And I can inherit them down to my cousins. Jim, you have a pair of Nike shoes that you've never worn?
Intermediate into a longer term time frame. High conviction on the left side of your screen. You can see the selling that came into play. We're talking middle of March. Stock was trending up around 108 down to 89, sideways since. Recently testing upper extreme of the range that we've been in. You can see this has stalled out a few times at this level, and it does appear as if we're starting to roll back over. Get back to 92, you open up a door for a retest of that lower extreme. So this is a key area right now. Again, a key retest of a range we've been in. Let's step back here from an hourly into a daily candle chart. So we're going to add a little time on, going all the way back to basically December of last year. And you
General Motors had a breakout today.
Right, again. With this daily candle chart, oops, hold on, I'm sorry, yeah, this was the one I had. Two areas of consolidation, that kind of L-type pattern playing out, similar to what we just looked at, where you get that weakness, consolidation, basically value in this instance is moving lower since December, again, end of last year, beginning of this year. In this example, we're talking about 92 being a key area, again, with the upper extreme here now that we're retesting. So that coincides with the gap, if you remember, that we saw back in the middle of March. One more chart. I got another time frame to take a look at here, and this is almost the exact opposite of the example that we just looked at, right? Where I was talking about how we're retesting the middle of that range that we've been in a bullish pattern, and if we get a lift off, we open up a door for a retest of the upper extreme. In this instance, look what's happening. We're failing.
You got a bull flag on SMCI.
This range. So again, just sort of opening up the door for retests of, well, I don't know, we'll see that pandemic low necessarily, but this is a stock that's under pressure here and continues to struggle. Earnings could be key, that's for sure.
Yeah, and it's interesting because as you talk about the struggle, Wedbush thought that this stock is in somewhat of a holding pattern, and noting that Nike will have an investor day in the fall. They haven't had one for 7 years. And so maybe they're trying to give themselves a boost there because there's no real major fireworks to give this name a boost. On the other hand, Wells Fargo has a 115 price target, which they've
I debated a lot of people about GME this
but still
weekend.
an overweight rating and a 115 target.
Nobody, none of them. I think I only had one person say, Jim, I think you're right. I'm not bashing. I mean, I was a lot more bullish on it before I seen Knucklehead get out there and do that video. Now everybody thinks he was a genius for doing that, and I sure in the hell didn't. I lost total respect for that kitty cat. And I'm not being fictitious or whatever you want to call me, but I was wanting to hear something. I didn't want to hear him say, well, I'm looking 3 years out. Chug-a-lug, chug-a-lug, chug-a-lug. I think he was trying to lawyer up and let everybody know that he has nobody in this. It's just him. And that because I really don't. The squeeze can still come. I mean, probably a lot of people made a lot of money when that last bounce came in, and they shorted the heck out of it. But I think if you just shut up and not, or at least come out halfway decent on that video, he could have probably had a nice run on this stock. Because I sure in hell don't think he's a genius. He's doing what every other trader does on Wall Street. When they get a CEO in there they like, they'll go ahead and buy it while it's cheap. He could have said that, and he kind of did. That he was following this Cohen guy, which was a bad reputation to begin with for what he did with Bed Bath & Beyond. A lot of people got stuck in that trade. And it was a crappy company. The last CEO, jumped out of a plane or jumped out of a story building, killed himself? Exactly. I think you're right. Bushy. I'm going to call you Ken. Ken Zoku. I think you're exactly right. He was sending a message to the SEC, not really to the traders, because he wanted to kind of clear his name a little bit. He lawyered up, more or less, because they know they're watching him. And any kind of little mistake, money can do that to you. It didn't do it to Sam Walton, but it can give you an ego. So now we broke a major support level on the weekly. I'm going to wait for this 2025 or maybe the 9, take it on at 21 and run it back up to the 200. He'll make his, 3 years, it might head back to $5 before it goes to his goal. Or it could, I don't know. I'm not too excited about it. I'm going to keep it on watch, just in case we get a big knife. Actually, I should be setting me an alert in here. Let's look at the 4 hour again. So I got an alert at 2025 on the 4 hour, and I'm going to set one above the 2279, which was my other support. Actually, could hit right here. And we're about there. 2445. Yep, that's what it's going to be. 20. Back to here. Johnny, are you talking about mother again? Hey, little sister, what is going on? That's a red candle. Could go up a little bit more. $24.60.
and we could talk about that more if you want. But I'm happy the day is finally here.
Yeah, as you said.
What is the day? Are you getting married?
To get in, particularly if they have a smaller portfolio. What we have seen, for example, TD Cowen put a 140 target on it, so they like it. We also saw Bank of America Securities maintaining their bullish stance. You talk about whether or not you should.
I like
buy
Nicole's
it today.
blouse.
You know the AI craze.
I mean, that's fashion right there.
And Jensen Huang have been the leader. Do you foresee how this could change, or does this continue in 2025 and beyond, right?
Sure. Well, timing is always an issue on these kind of stocks because, they've, for a good reason, gone, hyperbolic pricing.
Ladies and gentlemen,
they have the chip, the hottest idea in investing.
you know where my NVIDIA is? Oh my God, the SPXs are at $7.
We don't know how long. What still flagged to me is the unbelievably high gross margin. So when I bought these chips, the company only spent, I'm doing the math really quick, 23% of the price on the actual physical product.
Oh boy.
Great margin.
Randy, I've got 100%.
People aren't going to be attracted to this space given these
Randy.
margins. You are a fool. So
I'm a fool.
Other companies,
How dare you?
Other existing chip companies probably want to get in on it. But I'm also thinking that there are other to-be-established companies that also have a good idea on how they could make these chips better and maybe make them themselves.
It almost seems like, when you believe in a company and you see the moves that it's had, and I understand, first it had this moat, now it has this real competitive landscape, but AI has been a leader, and the question is not whether or not it will go up 900% again, but more so, do you see it going below 100? Right? So how much risk is there to the downside? If you bought it today at $122, how much risk do I face if I pick this up today?
I think you're facing a lot of risk that you don't really understand, and here's why. There are a lot of companies that are trying to do what OpenAI is doing and what Google's doing and what Microsoft is doing with OpenAI. But what if the funding dries up and the demand for these chips falls precipitously? If you look at what the other products that NVIDIA makes, they are good products, they are great products, but they are not, the hottest thing since sliced bread, apparently. And that is what I fear. In the long run, I have no problem saying AI is going to change our life, but I don't know when the lull is going to hit, and it will. If you look at the latest example of a technology that's had its issues getting to market, and it's actually kind of built on the same sort of computational foundation, it's autonomous driving. Now in 2016, whenever the news hit that cars could kind of drive themselves, most investors thought, oh, it's easy, 5 years and nobody will be driving a car. Well, they couldn't be more wrong, now could they? There's a few areas in which it's being used, but for the most part, people are not driving autonomous cars. They're not being driven by autonomous cars because it's a hard problem. And
I don't want to drive an autonomous car. I really don't.
Longer than investors think.
I like my hands on that steering wheel.
Caution for you.
It's great to see you. Kim Forrest at Boca Capital Partners. Appreciate it. At least, for those who are on the rah-rah NVIDIA team, at least you're giving us a balanced perspective from the other side. Kim Forrest, Boca Capital Partners, thank you.
NVIDIA is now at 535.
Take a look at Broadcom.
Randy.
Saw a bullish analyst note out of Morgan Stanley this morning.
I nailed the market today.
Details there. Also, an example trade. Trading 360. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Look at developing stories this morning. I'd like to bring in Caroline Woods, senior markets correspondent here on Schwab Network, taking a look at Apple's Worldwide Developers Conference. Kicks off today. We've been saying June 10th, June 10th. Feels like forever, and here we finally are.
We're finally here. Shares under pressure ahead of that Worldwide Developers Conference, which kicks off at around 10 a.m. Pacific time, because the pressure is really on Tim Cook to lay out Apple's generative AI strategy. This event has never been a real big mover to the upside for Apple. That being said, shares have really lagged its peers, due in part to the fact that Apple hasn't really announced a clear, direct AI strategy. So that's what people are looking for from this. Apple already uses AI for things like facial recognition to unlock your phones, but the expectation is that they're going to announce a bunch more features that all have to do with AI, including assistance with message writing, AI-enabled photo editing, AI image creation, text summarizing, new emojis, some new capabilities for Siri. They're not expected to take on the rivals with actual large language models, but there is an expectation that they'll announce a partnership with a company like OpenAI, similar to the relationship that they actually have with Google right now, so we'll keep an eye on that. We won't hear about the new iPhone until September, but you know, these AI features could be included in that. And I think the big question is, will these features actually translate into increased hardware sales? That's been Apple's issue, right? That they've had falling sales. There is talk that many of these features will only be included in the new iPhone, so that should or could cause an uptick in sales. So that could fuel kind of this upgrade cycle. I will say we've heard from some analysts, quite a few analysts ahead of this. Wedbush's Dan Ives, of course, is a longtime Apple bull. He thinks that this conference represents the most important event for Apple in over a decade.
Well, you should have never mentioned his name.
$30 to $40 per share to Apple's growth story. On the other side, Bernstein's Tony Saganahi actually has an outperform rating at $195 price target, but says that the AI functionality is likely to be useful and pervasive, but not necessarily revolutionary to what Google and Samsung have offered in their AI phones, so not necessarily as bullish as a Dan Ives. So, as I said, shares under pressure today, down about 0.8%, but we'll see if this conference can turn shares around, because it's only up, minimally 1.5% year to date.
Right. I'm looking forward to hearing all about the different features and how AI is going to make everything better. To your point, Tony Saganaki is still below $200, but I did see $275 from Dan Ives. Thank you, Caroline Woods. Thank you so much. We'll take a close look at Worldwide Developers Conference all day, all night, and tomorrow as it all breaks. In the meantime, how about a look at the disruptor today? George Sillis, senior markets correspondent, is here with us. Taking a look at Broadcom, Morgan Stanley resuming coverage on Broadcom with an overweight rating. Give us some details there. It's up 2.5%.
Yeah, I think Morgan Stanley, Nicole, is looking at Broadcom as sort of this stealth AI play that's, to them at least, the second best company out there from an artificial intelligence exposure standpoint. I mean, if you look at Broadcom over the last year, it's up about 80%. And this is a company that's essentially an infrastructure, software, and semiconductor solutions powerhouse. They integrate, multiple types of systems and technologies from data centers and cloud. They also have application-specific semiconductor technologies, and they also integrate all their enterprise storage and server technologies together. So it's basically the backbone company for much of what's going on from an AI data center cloud infrastructure standpoint. The other thing is they connect a lot of their wired and wireless infrastructure together. While at the same time, they actually have their VMware acquisition, which is another thing that Morgan Stanley is actually looking at. They're seeing some synergies, a lot of synergies going on with that particular
God, that was a beautiful call.
And that'll help them more compete with IBM's.
I'm going to talk about NVIDIA here. Vegas and I did a little video this weekend on NVIDIA. Now, this has been the bullish stock out there, okay? This has been nonstop. NVIDIA, AI, NVIDIA, AI this, AI that, NVIDIA. A constant, everybody's watching NVIDIA. Everybody should be watching NVIDIA. So they have a split today. It's number one priority on my list to be watching is NVIDIA because of the split and all the chatter. Just consistent. Now it got down to $117. Had a falling wedge this morning. That's expected after a split. Now it's not going to be like the Tesla split where it decided not to run no more. Because this one they love. They don't love Tesla, but they love NVIDIA. I mean, NVIDIA is the only thing. NVIDIA holds what? There's three stocks that holds mostly the market itself. Apple, NVIDIA, and Microsoft, I think, or. So they're not going to let this thing fall when it's so cheap. Now, the share structure, I don't think it means a thing in this stock. There's going to be more shares added, that's for sure, because of the split. But I don't think it matters. None at all. I got a target of 150 when it's all said and done. Yep, it definitely proved it. So when you get you don't, I've been trading a long time, you don't get a stock that just, if it wasn't for NVIDIA and AI, the market wouldn't be doing very well, and it's the whole sector's overbought, overhyped, but, I went through the dot-com era. When the internet came out, Al Gore, thank you very much for inventing the internet. Al Gore took credit for inventing the internet. And then he bought some kind of paper and sold it for $1 billion. And you don't hear anything talked about that. It was okay if Al Gore did it. It's okay if Al Gore's 8 or 9, 10 big mansions. He was the big. They all got rich. A lot of these politicians did. Off this here green energy crap. Hillary made hundreds of millions of dollars in speeches talking about green energy. $500,000 a speech, 300,000 a speech, and it lasts like a half hour. But you don't hear nothing about that. Heck, I get nothing for speaking. It's a nice call on SMCI, mannequin. Market cap nears 3 trillion on Nvidia.
Center, and James Chernowski, Senior Policy Analyst, Technology and Innovation at Americans for Prosperity. Thank you both for being here. I mean, right away our minds go to
Meta
OpenAI and
broke
NVIDIA
500.
and so on. James, I'll start with you. You know, when is it too much? I mean, we need to be cautious, but is there too much, you know, in the antitrust regulating?
Yeah, I think that's a great question. And at the end of the day, I think that is the risk that we're running right now in the country here, is that because we're having such a scrutiny on these big technology companies, that it actually threatens our ability for these very same companies and others to become competitive in the long run and continue the United States leadership in this promising technology. When we're looking at what's going on with this complaint here, this is just the latest trend of just a lot of repeat actions from these regulators.
What, $600 million out of that deal?
Microsoft, OpenAI, these companies are all leading, but they're not guaranteed by any stretch of the definition to go and remain the leaders
that's
in this
bad
promising
shit.
technology moving forward. There's a lot of robust competition here, and some of this might be just a bit premature, Nicole.
But it was okay for him to do that.
Look, Yael, I think you agree. It's risking our global competitiveness, you said. With China there.
I was talking to Magnificent about some hush money I had to pay off to a politician.
What we have here is a big ideology.
He said, well, she's not talking about it. Well, that's because they call it hush money.
Would love to reach the globe. They'd be able to love to bring their products to market all around the world. They're being kneecapped by our own regulatory agencies. They're being kneecapped by the DOJ. And you have the rise of Chinese firms that aren't going to be held or restrained in the same way. They're going to be much more commanded and controlled by Beijing and the Chinese Communist Party. So in this scenario,
damn
we're not
commies
for tech innovation in the United States.
It's amazing because, I mean, you talked about how it just expands unabated. And
You won't listen to me badmouth China.
Do they really surpass?
Because I love China.
Are you worried that we're really going to be left in the dust, or no?
I mean, the one thing we
SPX,
have here in the
woo!
United States is
SPX more highs.
markets.
Did you see that, Mike? Mike? It's at 1040 right now.
Affirmative.
I nailed that one. We's in the money. We's in the money. Oh yeah. Oh yeah. We got a followed wedge on SMCI.
Cooking over.
Windows. Me and my dad do the windows. He'd be proud of me right now. I own this big corporation called Window Please.
today. I thought for sure that we were going to stay in the red. We saw some weakness overseas. I thought that might play into our markets, but resiliency returns.
Yeah, we started there. The S&P and NASDAQ have rallied. That doesn't mean they're going to rally all day, and they haven't rallied that much. So the day's really certainly not over yet. But yeah, stocks open lower because why? Day 2 of dollar higher, yields higher. I thought Friday's economic data was a little bit of a tone change from what we were easing into. So the market's trying to figure out.
Put on what?
You got Nvidia split. Stock was down. Now it's up. Like I said, where we are at 11 o'clock Chicago time, noon Eastern, may not be where we finish the day, but pretty hesitant start to the week, even with dollar up and yields up.
Yeah, let's bring in our next guest. It's going to be Alex Coffey, senior equity contributor here.
Alex's coffee. Speaking of coffee, I might have one.
Made some good points. Nvidia now positive, so it's hard to take the market down when you got Nvidia up, Microsoft up, Meta Platforms up nearly 2%. So pretty quiet start, but at the same time, there's
this split. Let me tell you, this split on Nvidia couldn't come at a better timing because the market looked a little frothy to begin with. You've been hearing me. Damn, Nvidia's up 1,000%. We're up 1,100% we're up 1,200% on Nvidia in a year and a half. Well, we can't hold this much longer. I've never seen. Well, I've seen it, but I'm not in a company like this. 20% for a year is excellent. You're up 1,200%. Now I'm freaking out. But I'm not freaking out when I see this thing at 100. I'm going, damn, yeah, man. I'm encouraged. I don't care about the share structure on this stock. The only thing, you can't fight the trend. And you're going to knock on the door. Al, this is Al Gore. I want to thank you for that NVIDIA call. You said 150, and, well, I put all my Alzira money in that stock. I had $600 million of free money to kind of play with, and I went ahead and threw it in that NVIDIA call that you made there, and I made another $100 million. Thank you, Jim. You're welcome. Crickets.
A big event, right?
Mike says NVIDIA is worth the share price.
Valuations are not really cheap.
Jimmy says it's not.
On the RSI.
But he's right.
Deal with that. But do you look at that price and say, NVIDIA 122, I got to get in?
Yeah.
Might not be the great way to do it.
Well, we've seen everything today. Yeah, we've seen everything in that stock today. People bought the dip, the initial dip on the morning. Now maybe they're going to take some profits here. Stock's up nearly 1%. You mentioned that RSI relative strength.
Nobody's going to take the profits.
That's 75. That's
I did. Retail traders will.
We all know that it can go above 80. It can stay up at overbought levels. But Alex, when you look at this, and a lot of people go, well, if I had one share, now I've got 10 shares. It doesn't change the value of the company. I think that's just a lesson that we want to teach, and reflect on here for investors.
He says it doesn't change the value of the company. It's like my cabbage pie. I had one big old blob in a cake pan. It was one. And I'm going to cut it up into probably 12 different pieces. But the share structure does change. And that used to mean a lot at one time, but I don't think it does with NVIDIA.
Ahead of the split expecting quick upside. They don't get that. How quickly do they bail on those positions, and then does it become sort of self-fulfilling? This has been such a momentum-driven move that if you get momentum moving to the downside, does it quickly, kind of unravel? I'm not sure.
one thing's for sure as well, with 24.5 billion outstanding shares now in NVIDIA, which I believe is most of any company on the street, you should expect dampened volatility now because there's way more supply of shares. It's not one of those big, $1,000 stocks that the only way to participate is through options and spreads, and there's volatility around that. I would expect that NVIDIA, kind of settles in a little bit with that perhaps short-term risk to the downside.
Put up a 20-day, 1-hour chart in NVIDIA. 20 days ago it was $88. Post-split, $88.
What? Yeah, if you navigate that.
$88.
The pre-split.
That's how much it's rallied.
Yeah, and I read somewhere last week, over the last 30 days, it gained $1 trillion in
That's my
market
favorite
cap,
chart, 20-day, 1
which
hour.
is more than what most companies are worth. That this Berkshire Hathaway, which has been 6 decades in the making, it gained more in market cap than that stock's worth. I mean, that's pretty spectacular.
I mean, the range today is probably borderline almost as much as Intel's worth, just the $5 range. So, I mean, it's getting to this point now where you can sell me on the fundamental story all you want. Things get out of hand, and I think you can make an argument that NVIDIA's gotten out of hand.
Market gets overbought, they get oversold.
Yep.
Oh, come on, you freaks.
Now people are starting to equate.
I disagree.
Okay, now that they've cut their price, it allows them to maybe potentially get into the Dow Industrials now, and that could be another leg up for the stock.
If it goes to $88, I'm gonna put all my whole life savings in it.
We're going to get some forecasts for the economy, and I think that's going to be important, and that's going to be the takeaway from the Fed meeting.
Yeah, SEP, and I think it's interesting too, after hearing last week the ECB raised their inflation forecast and raised their growth forecast and still cut rates. So there's precedent now that you could see more. It was sort of last time we got SEP, there was an increase in growth, an increase in inflation forecast from the Fed, and they were still kind of, waxing dovish. So the same thing could happen here with the Fed, but I would say that I think the expectation is that you will see, that 3 cuts that was still barely priced in on the dots, probably closer to 1. It probably maybe end up 2, but leaning 1. But we'll see what happens there. That could bring some volatility, but it's going to be the words of Jerome Powell. How much does he want to push back on this market, and how much does he just want to, let it continue to work towards, potentially NASDAQ 20,000?
Yeah, and due to that jobs number, Kev, we talked about it on Friday, Citigroup, JP Morgan basically took July off the table when they were both stating that we were going to get our first cut in July.
Well, the data was moving in their favor, right?
The jolts and the ADP. And
you had data going in your favor. You had
SPY trending water here.
From the overall market in terms of economic data.
We got a head and shoulders, and it's squeezing.
Lower, the U.S. consumer is showing signs of some fatigue, but then we get payrolls, kaboom, and the wages data. They can't. Remember, Jerome Powell's legacy is this inflation problem. That's his legacy, and he can't screw it up. He's got to get it right.
Rising wedge.
Nothing in the economy. The S&P at a 21.1 PE going forward. What would make him have to lower rates?
Well, nothing right now.
Nothing.
There's questions that they didn't go far enough.
Yeah. Now, the market, as I've said, is a petulant
It didn't go far enough.
It will want some, but if it goes from, like Alex said accurately,
Gotta be kidding me.
It was, very close to being 2 rate cuts, but it was actually is 3. Whatever goes to 1.
The Fed has been behind the curve. If they'd have just left everything alone, it wouldn't have mattered. But they made it more difficult by raising these frickin' rates up so fast.
To be over 3% year over year in the headline and core.
Yeah, I think if you're looking at those numbers, those are the headlines, is going to be what you're going to see.
They raised it up just 1 point, that would have been plenty.
Change, and then the annualized based off the recent data. Look, I think that the jobs data, while the headline again was strong and a beat, there's a lot of concerns still under the surface. Household survey is pretty bad. The growth or the increase in unemployment is not great. A lot of part-time jobs, hours worked is down. Labor part.
That's it. People are working 2 jobs.
Growth, and they're looking at.
I know a lot of people that are.
Super core services, and those are not giving them the roadmap to lower rates. So even though they clearly want to, because they are concerned about things, be that commercial real estate, be that refinancing, be that the frozen real estate market for consumers, they don't have the game plan now to be able to do so because of what they've laid out for the market. But we've seen the ECB kind of throw that out. And
Jimmy alerted Apple.
Are better, essentially, so we can just somehow let our inflation targets go up. But
We got a sideways Darvis box after the snake.
We mentioned that last week when Lagarde
We
came
go
out
make some
and basically
coffee.
said, well, our forecasts and our
I'll be right back.
projections are that we need this rate cut, even though they probably didn't. And, you know, you come into question a lot of their tactics and whether they've been right in the past.
No, they haven't.
This conversation's going, because now we're getting into the things they don't say, which is, are there a lot of refinances coming up? Are there a lot of companies that need to refinance and restructure debt? And do they need lower rates to soften that blow for it to happen? If that's the case, okay, just say that, right? Say it's probably better to hurt savers and the elderly to help out business that needs to refinance some of their debt, and they need to do it at more reasonable rates. Oh yeah, we're growing and the economy's great. Well, why are you cutting?
Yeah, but this is an interesting conversation, though, Kev, because if they do that, essentially they're saying the market sets rates, and the market's telling us they need lower rates, so what are we doing here? And so they're always going to have to do it from this veil of control. But you talk about Fed funds futures. Fed funds futures determine largely where the market goes and what the Fed does. Now, what they're priced in for December of 2025, who knows if that's accurate or not? Who knows if September is accurate? But by the time we get to that, it's very rare that the Federal Reserve just looks at the market and say, oh, you know, actually, we don't care what you're saying. We're just going to do this thing over here.
If Alex Coffey went into that ECB meeting and said, why do we need you? There might be awkward silence if they try to figure out a reason why they're needed.
They'll look at their notes and go, well,
because it says we're
All out of the SPX.
Yeah, and you know,
I got a calendar invite.
I'm curious to see what Fed Chair Powell says about the jobs data with the unemployment rate at 4%. And starting to see maybe jobless claims tick up a little bit. The JOLTS number continues to move down. Will he say that? Because I think the market's going to like it if he does.
So last thing, if I could, you guys both talked about how yields are higher and dollars stronger, yet the market's been liking that recently.
Yeah.
So to me, if he comes out and he's worried about the labor data, he's worried about the economic growth, does the market actually not like that? Because it seems that good news has been good news lately. If he comes out and he's concerned, I don't know if that's a necessarily a good thing for the market either.
Yeah, it seems like it's flip-flopping every other week now. Good news.
All news is good news.
Yes, exactly. All right, let's take a quick break. When we come back, we're going to take a look at Tesla. The EV maker shares are down nearly 30% so far here in 2024 on slowing sales ahead of that shareholder vote on Elon Musk's compensation. Stick around. Fast Market's coming right back.
Oh shit, 1080. Uh-oh. $1,100. $1,100. Any SPY options? Washboardjim today seems very unknown for me unless you see something different. What I see.
Every morning, every trade, always live.
And I'll say it again. Since the NVIDIA split, this market's ready for more. I hate to say it. I was real bearish when we were at $1,200, but I'm not no more. Damn, Mike. Wow. Look at Mike's score there. I'm going to smooch. Mikey's going to get a smoochie.
Tesla's stock, so at least one of the overhangs could potentially be solved for on Thursday. As you said, that's the shareholder meeting. Obviously, the $56 billion pay package is really the big point of contention here. And yes, there's a lot of mixed commentary from analysts about what's going to happen, and then there's mixed opinions on if Elon Musk should be paid this $56 billion in pay package that was already approved. I think that's important to note in 2018. But Musk did tweet on Saturday that roughly 90% of retail shareholders voted in favor of his compensation package. But of course, he needs buy-in from institutional shareholders as well, and we know he won't be getting that from Norway's $1.7 trillion sovereign wealth fund. Over the weekend, it said it will vote against ratifying the pay package. It's concerned about the size, the structure, dilution, among other things. That's Tesla's 8th biggest shareholder, and they, of course, voted against it in 2018 as well. Also, California's public employees retirement system opposes it as well. That being said, longtime Tesla bull and shareholder Ron Barron wrote an open letter not too long ago in support of Musk. He thinks he earned it, he deserves it. We're getting mixed opinions from analysts, as I said, about the outcome as well. Bernstein, who the analyst there, has an underperform rating and $120 price target on Tesla shares, puts it into perspective. But he thinks it's unlikely to pass shareholder vote and that investors may be underestimating the risk that it's actually rejected. Says around 25% of eligible voting shares are held by either passives who are likely to follow the proxy advisor's no opinion, or institutionals who have publicly announced their decision to vote no. Points out that Tesla has never seen more than 63% voter turnout in any shareholder vote, and says even assuming that's higher at 75%, Tesla would need over 73% of the unaccounted for voters to vote yes for the pay package to pass. So, it did talk about the impact if it is rejected. Says Tesla stock could be down 5% or more amid fears that Musk might actually walk. Now, Dan Ives is more bullish, says he expects the pay package will be overwhelmingly reapproved, but does admit that there are overhangs to the stock, and says that, Elon Musk has to be crystal clear that autonomous and FSD is key to Tesla's future. He needs to recommit as CEO for the next 3 to 5 years because investors are really questioning the balancing act. Can he do all of these things at once? So there's a lot of opinions floating around out there. Tesla shares under pressure ahead of this shareholder meeting, down about 1% today, and as you said, down about 30% year to date.
Yeah, Caroline, 2024 has been a horrible year for this company, and frankly, the news flow that I follow a lot has been pretty negative on this name for quite a while. Here's something they don't talk about. #1 selling car in the world. Is it the Toyota Corolla? Is it the Toyota RAV4? Nope. Tesla Model Y. #1 selling car in the world. And it's an EV. It's not even an internal combustion engine. And that said, this company is working to lower the prices to get down to that 25,000 level that they keep working towards, with everything else they have going on. All these things, this has been a horrible chapter for this company. Is there anything positive that we should be looking for? Is it energy generation and storage? Is it AI expansion? Is there anything positive here other than, oh, by the way, they make the #1 car in the world?
Yes, but they have to keep pace with that growth, right? And they're starting to run into challenges there, both here in the U.S. and in China, and competition is only heating up. There are more and more car makers entering the market, so yes, Tesla certainly has the lead. That's a positive, but there are other car makers hot on its tail. I think that I'll have to get back to you on Thursday to try to figure out the positives here, because I think the big issue is that Tesla's future, Musk's future, is really uncertain at this point, because if this pay package gets voted down, of course they'll have to figure out a way to compensate Musk. They'll have to vote on that again. But Musk's reaction is very unpredictable. He's always unpredictable, but we don't really know what he's going to do if that's the case. Keep in mind, Tesla is priced like a technology company, right? Not a car company. Musk says it's an AI and humanoid robotics company. And if he takes some of those projects to some of his other companies, what does that mean for share price? Musk has said he wants 25% of voting control to keep his AI projects at Tesla. You know, I think that there's a lot of question marks about what could happen if those projects start going someplace else. So, you know, definitely a lot of uncertainty. I think the positive is that we'll at least get some questions answered on Thursday, but maybe that's just me taking the easy way out.
Yeah, and that's not good timing. You know, just because the stock's already been compressed, that's not good timing. Sales have started to slow because people are still turning away from EVs. So,
by the way, the individual that brought the lawsuit in Delaware owns 9 shares.
9 shares. That's what happens. All right, great stuff. Thanks to Caroline Wood, senior markets correspondent.
That's a bunch of shit.
Tesla. Alex, let's bring you back in here. And I think that's what gets overlooked a little bit.
How can somebody that owns only 9 shares bring a lawsuit? Ain't that? How can that happen? How can that be?
About the shareholder meeting.
Yeah, I think if you're a long-term investor or have stock shares, these are issues to think about. But if you're looking at like a 1 month, 45-day trade, couple-week trade, I mean, I don't know. I think it's reflected in volatility. I don't know that BYD selling more EVs is really going to make that big of a difference in a Tesla, you know, strategy personally in the short term. But what I looked at was post-earnings, the stock's traded in about a $40 range, high to low, from about 158 to 198. With the elevated implied volatility around this event and all the macro things that we have going on, you could go out to July 12th, do a $5 wide iron condor. That was the 155 and 200 short strikes for $1.50 credit. And that brings your break-evens to 153.5 and to a 1.5. $350 in risk, chance to make 150 over the next few weeks. I chose July 12th because I believe the earnings was like July 17th, or that's like the slated date on the calendar. So that next week, which is the monthly I would typically go to, reflects that and has the earnings in it. So to stay ahead of that, I went to the farthest out I could without having to deal with earnings, and that's what this strategy looked for. Look, this is just again, if you kind of follow my logic of thinking, which is this isn't that big of an issue short term. It might move the stock a little bit, but if it sells off, our buyer's going to step in. It's a really actively traded name with a lot of people who like to have exposure to it. The rally is up on the news. Is that a selling opportunity on a stock that has a declining fundamental picture and is still a pretty premium stock? So I see it as just an opportunity to use a strategy that naturally sells rallies and buys dips.
Yeah, Kevin, let's look at this one. Selling the 200 strike call out in the July 12th weekly cycle. So you've got a few weeks. You've got 32 days in this position. Sell the 200 call, buy the 205 call, and then on the put side, sell the 155 put, buy the 150 put, $1.50 credit. Alex mentioned $350 in risk per spread, and that's below 150 and above 205. But you got a nice wide range, and over the last month, we haven't traded outside that range, and there's an actual market maker move right now because of the higher implied volatility.
$45 wide is where Alex's strikes are, and if you line up the July 12th expected move, $22.50 in either direction. There it is. For our viewers, if you need help or guidance picking your strikes, that's what Alex used right there to figure out where his short strikes should be. Then, how wide do you want your strikes? You want them $2, $5, $10. You can do it as wide as you want, but those are where the short strikes are for that time period, 32 days. And then you hedge the risk and you judge the risk. How much risk you want to put on. That's using the tools on the platform help you with strike decisions.
Yeah, and probabilities of finishing out of the money, the 200 strike call, probability of finishing out of the money right now, about 82%, and the short 155 put, about 78% on this one, Alex.
Last thing I'll say, guess what the 3-month range, the last 60-some days of trading days, this stock has moved? Down 1%. It's way inside this, $45 wide range. So although this is a noisy stock and it moves a lot back and forth day to day, on balance, it's basically been going sideways for a quarter.
Yeah, there's been a couple times where it's traded outside the recent range, but then pops back, and as you noted, pretty much unchanged over last year.
And how you can deal with that tension of a position going against you is risk definition.
Yep. Looking at the short iron condor or neutral strategy on that one. Good look at that. And thanks to Alex Coffey, senior equity correspondent here, helping us break down markets and Tesla. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion on Carvana and the sentiment data on the stock moves. The used car stock has rallied over 100% so far this year, and is just named a top pick in retail by J.P. Morgan. Stick around. Coming right back.
Unbelievable. So they're calling out an iron condor on Tesla?
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying, and we would experience turbulence.
Honey,
I would
please, would you quit talking about that one flight? It was just a mishap. It wasn't my fault that I had the shits. Rising wedge on the SPY, yes. With a two-headed snake. We're getting ready to squeeze. I think we're going to come down, but yeah, come down to 534.28. So we'll set the alert right on the bottom of that there candle. It could have. You Asians love cabbage, I know. good for your health. I think I'm going to go run on that treadmill for 10, 15 minutes while I'm drinking this here hot tea. I loaded up on tea this weekend. Oh, I don't got my lid. I went and loaded up on tea. Got Paradise green tea, got some ginseng green tea, and I got some chai tea. Right now I'm having some chai. $31 for all that. Still got the rising wedge. We could come up and triple top by the end of the day, right around 535, 22 something. But I'm out of the trades. $22.79 I have next for GME. Yeah. I wonder if people still think he's a genius. That's going to take some getting used to. Yuck. Ugh. Smells good. Sure tastes like sourdough. Watch my face reaction here. What the hell is he drinking there? Looks like he's drinking whiskey. Yeah, I'm in love with Roaring Kitty. Probably his money I'm in love with. I wonder what he's doing today, though. I have a feeling he's probably doing this right here. No.
At Wash Stock Talk. But actually today I'm Charlie Sheen. Breakdowns on stocks. Man, this looks like a good one, guys. I'm really a winner here. This is looking good for me, man. The tiger in me. Oh boy, come on, go up, go. Oh no, don't go down. Don't go down. No, please, it's going down. I gotta sell. I'm almost broke. Come on, I'm gonna sell, man. I'm freaking out, man. My tiger blood's gone. I can't take it. Oh, I feel much better. Come on, go back up. Stock's going up. Oh, no, it's going back down. Oh no, it's going back down. Oh, panic. Freaking out, man. Where's my dog? Here. I'm freaking out. Oh, help me, Lord. It's going back down. Oh, it's come back up. I'm a winner. People's gotta love me. I know I can do it. Oh, the Charlie Sheen incident about got to me. This is Wash at Wash Stock Talk. You'll never get in a stock that you can't get out of.
Nvidia boom. See, I'm having panic attacks. Now what the hell happened here? The option is down and the stock is up. What's wrong? Look at this. What the fuck? Oh, that was the SPX. Oh. Never mind. Jimmy's tripping out on LSH. Still, it's gone down. It shouldn't have. For you people on YouTube, go back and watch this video that Vegas
Hey
and I
guys,
did.
Taylor Family Center Farm and Home in our Dad's Day sales.
Shocked that it's up this much, even after its earnings. So we're going to go to an article here, article number 1, and talking about NVIDIA's press release. And
Yeah, I can't do that right now. Them dings would kill us.
was up 18% from Q3.
So it'll bring in more traders, which will bring in more volume. And I just think with the momentum behind this stock, trade CNBC, Schwab, SMA on the hour, which gives you inverse head and shoulders. And if that thing pulls, going to be much, and it's going to probably go ahead and bounce off that chart pattern, which is called an inverse head and shoulder. We all know that this is going to give more opportunity for people that have a little bit of money to get in this trade and start positioning themselves long. And I think any pullback on this stock is going to be a strong buy. But we're going to use the 9 EMA for right now, come Monday on the daily. Let me find that daily. For support, and that's right around 115. Got a little gap up there, so it could hold that gap or drop right down to 116, 115.
Damn you.
And still be very, very bullish. The thing's going to be bullish no matter how we look at it.
So that gap on the daily.
That's about it. So our target resistance to break is going to be 124.58 with a low support of right around 112. And then try to keep that 9 EMA as support, and we'll still go ahead and come up and break the double top and start to move up to the 130, 135, 140, 145, and then hit that 150 target for some consolidation. And I think that's about it, Vegas. I really, really enjoy this right now.
Yeah, you know what? I think this will be exciting for people that are not in NVIDIA because a lot of people missed the opportunities. So definitely opportunities this week to get some shares because this is not going to go downhill. They have so much cash flow, so much growth, so many customers. They have a backlog, so much growth. Is growing, and so still great opportunity. I'm so happy that they did a stock split because this is just so untouchable at the price points where it closed on Friday.
It's that gap right there on the video, and I mentioned this gap. That was our first support to hold right there, or they're going down and hit this one right here. So if we draw a price line at the body of that gap, gaps are fun to trade. It's either going to be the top of the gap where that body is, or the bottom of that gap. And I'm going to color that in. And that keeps it above that 9. So it came down right about in here. Then it retested that gap right there. Snake breakout pullback to the top of the gap. That's right where that 118.22 is. So you got snake breakout pullback, boom. Snake breakout pullback to the gap, boom. And the resistance was on that daily. It was on the daily, or what that time frame did I pick that up on? Hourly? Yeah, the hour. See where we, all that morning, each one of these represented an hour. So we hit that, the 3 bodies hit that trend line. If I went with a wick, I'd only have 1 wick, 2 wick, 3 wick, 4. But with the body, I got 3 confirmations. at 124.58. And if we break that, I think it's an easy shot to 130. I'd almost go ahead and do leaps on this. Always Clean Janitorial. This is a recorded line. May I help you? Oh. Why'd you hang up on me? Brandon? Why did you hang up on me, Brandon? Brandon, you interrupted me. So you got 6,000. In the video, you got 6,000 calls. We got 4,000 at the 130. This is August 16. Gosh. November 15th, you got 136 strike. See, when I listened to the guy on Schwab, he says, the further you go out gives you more time to make a decision, when to add and when to take out, and your losses ain't that big. July 19, we got 22,000 strikes at 130. They had a low of 228, so that would have been a good trade to take maybe. $22,000 contracts. $23,000 now. Let me see that. That's a month out. That'd almost be worth taking a call right there. A couple of them. We're going to watch this one right here. Is it true? Oh man, that's a low blow. That's a low blow. I do listen to my videos though after I do one. I mean, I'm not gonna lie. If I was ever a movie star, I'd sit there and watch all my movies all day long. And I think I could have been one. Also could have been the President of the United States. And I also could have married Pia Zadora. I had a girlfriend come over one time. She said, "Jim, I can't live here." I said, "What do you mean?" "You got a picture of Charlie's Angels on your bedroom wall. Farrah Fawcett sitting on a bale of hay." I said, "Well, yeah." Woo! Back then, I didn't know Nancy. I probably would have. Then she got searching my bedroom, and in the closet she found a pipe, and she says, "Oh my God, what have I got myself into?" A cannabis pipe. Morgan Stanley downgraded AMD and Company to equal weight from overweight. How dare you? Idiots. It's a buying opportunity.
a forward PE, I mean, it's astronomical as far as like its valuation goes. But I guess you're really banking on that growth because that's what DraftKings right now is operating in a market where people are betting that continued legalization, it continues to expand.
Another example of being positioned and investor sentiment around you being the leader in a space. DraftKings alongside FanDuel are sort of seen as these two horses that are out in front in this space of online sports gaming, and really beyond that includes horse betting as well as traditional gaming as well. They also have some brick and mortar locations as well. But seemingly it's everywhere, right? You go to a game, it's in your face now. So
I mean, that was beautiful.
10 years ago, to even be hinted at by announcers was almost cheap.
Jimmy said we'd hit the 9 in the NVIDIA video. Jimmy said we'd hit the 9. We got the gap. I mean, this was a beautiful call. I was predicting the next move. So you got the gap. I mean, that's just perfect. Perfect. Use that 9 EMA. That's called a gap fill. Then you got the 9 EMA. Where in the frick did you go? Now what the heck? Thought I had that thing up here.
to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you...
You remember when we were fishing down at the Blue Hole and you threw the line out and you said, Jimmy, see that stump over there? Watch me hit it. I said, you can't hit that. So he took his line, he threw it out clear across the river. It skipped a couple times and bam, he hit that log. This guy worked for everything, and he deserves everything.
Schwab Network's like, no.
And now he's working at Schwab. He was, every goal he hit it. He was an all-star football player. He had all the girls. We have approximately 9 more minutes before the fat cats come back.
In just 2 weeks, I lost 36 pounds. I have more energy, better mood. I feel attractive again.
Hello, I'm the walking mummy. Screw all the veterans that are behind me. I'm Mr. President. The guy's in serious pain. Now watch this. This is when he shits his pants.
Distinguished guests, please welcome the Honorable Lloyd J. Austin.
Boom a chick.
example of a trend up.
That's too embarrassing to watch the rest of it.
I know that it's the first day of NVIDIA's trading on the split adjusted basis, but I am so not used to it. I keep thinking I'm looking at the wrong chart when I look at these prices. So yeah, psychologically I'm all thrown off, but as far as like some big picture levels here to watch, because I mean, analysts have some lofty expectations as far as like continued upside in this name. What are you watching big picture here?
Well, the idea of continuation more likely than change, right? You expect to see that pattern that we have been seeing continue to play out, that being that trend up environment. Let's just take a look here at another chart. I've got NVIDIA with a 50-day moving average, 200-day moving average. So this really just speaks to the strength. Again, longer term, you want to see something start to establish here a little bit more horizontal and establish value, basically, similar to what we saw in this area here. Again, we're talking February, March, April, into that high conviction trade we saw to begin the month of May. So the bulls are looking for something along those lines to establish itself at this upper level, mainly because, again, that determines acceptance of the most recent run-up. Again, we've traded all the way up to this 126 level, again, up and through 1,000 convincingly with this stock prior to the split. So here you can see this is what we want to see. We want to see this hold, we want to see acceptance. Lastly, I do want to point to some of the strength we've seen in the RSI, because this is a significant move up here that we're seeing. And again, look at this, very well-defined trend up off those April lows. And you want to see both relative strength index and price exhibiting conviction to the upside along the lines that we have. Basically everything. I mean, this one's checking off all the boxes here, guys. It's hitting
Tesla's at the low support channel.
Yeah, and I think that that's sort of a good way to look at things. I know his name has been the trend that no one could predict that would continue just ripping to the upside. But hey, it's been good, I guess, for the overall market. So now, when we trade this name, Alex, how do you think about looking at NVIDIA today? I think it's kind of fun just because, again, it's just more approachable.
It is a little bit more accessible for investors who were a little bit skittish around the big $1,000 price tag, and upwards of $1,200 if you look at it where it is now. But we also talked about analysts like it. We know the fundamental story around AI, the technical story that Ben just went through. Not a lot bearish going on that front either. So then we factor in my kind of story around, maybe you see money flow out of NVIDIA or out of AMD into NVIDIA just simply because of the accessibility conversation. I looked at something that these two trades will pair together in some way. We're looking at a neutral to bullish strategy in NVIDIA, selling a put vertical below the market. The July 114.109. This was much more of a function of pricing than it was like a technical level or anything else. I looked at a $5 wide spread that was trading for about $1.25 credit. So at the time that I was looking at these, that was the 114.109. So you take $375 in risk. That's a 3-to-1 ratio to the 125 max profit. 112.75 based off those strikes. That credit is the break even. So this is the neutral to bullish look. We're going to look at something flip-flopping it, Jenny, with AMD coming up after Ben's charts.
So now, yeah, to shift gears here and look at AMD, which is moving completely inversely to NVIDIA today. We're down about 3.6% on the session. Ben, walk us through this chart here because, well, it's not, I mean, we're well off of lows.
I'm good at ignoring.
Like 74%. It is just not been, we're so sideways right now.
Yeah, and well off highs that we saw recently as well. So this is a stock that's kind of stuck.
I've had so many rookies pick on me here, Yoko. I'm used to it.
Down here, take a look at a couple different time frames and try and establish what's going on, because I think a bit of a bullish pattern still playing out here as long as we hold key levels. So first and foremost, wanted to start off again as we have been with our examples in the past, taking a look here, starting off with a more granular, work our way up to a longer term chart, and I think that's kind of helpful in terms of understanding the determining trend and then trying to figure out opportunities that lie within it. So starting off here, hourly candle chart, and going back to when the stock was trading down around that 141 level, rallying all the way up to right around 175, and it has been and continues to be consolidating. Jenny, last week we had a little bit of time to talk about not only how to establish trend through looking at these areas of value, the two separate phases of price development, but also looking and talking about how to position yourself to try and take advantage of some of the trend that's, in this instance, very prevalent, easily identifiable to the upside. So the idea being that you establish these areas of value, and as you kind of trade around, in this instance, this value zone that's trading around 166. There's opportunity that lies within the lower tests thereof. So in a trend environment to the upside, if you want to position with the trend, you're really not even thinking about short-sided opportunities, right? You're looking for longs.
The SPX hit the
waiting
200.
For when price reaches that favorable opportunity. That favorable opportunity in an uptrend being a test of the lower extreme of a range that you're in that fails. So at that point, if you do get that fail, you're looking for the trade to work its way back to 166, and then you get energy through the middle of the range. You look for a retest of that upper extreme of the range, continue the trend to the upside. Sorry, I had a bit of a mouthful there to get out, and then eventually break out to the upside and resume that trend up. Now, the other thing that you're watching is that last area balance that formed, because again, in a trend up, you don't want to see the market taking out those key areas that were established on the way up. So that's an hourly candle chart. Let's take a step back here. Let's add a little bit of time on. We've got a daily, and so you can understand why. Again, as I mentioned, not what the bulls wanted to see coming off those highs from earlier this year up around 227, but you mentioned, Jenny, that we were coming off recent lows as well. So just kind of pointing out how we're kind of stuck in the middle here. Take a look at that time frame. I kind of just took a bigger picture look at this one and tried to establish, looks like maybe a bit of a range around this 190 level. So again, if we could continue to hold this upper range, continue to establish balance here, get back through 190, well, you open up a door for a retest of 227. This is a well-defined trend up, going all the way back to the lows that we saw back in end of 2022, beginning of 2023. Let's add a little time on. So now just kind of looking at this trend up as mentioned and going all the way back to 2019 now, lows that we saw around 20 bucks, briefly back above to that 227 level. That was back in March as mentioned, but look at this. We are balanced, we're forming value, and basically accepting this most recent range here right now. So again, there's not a lot of conviction one way or the other when you're in this range, but it is a form of acceptance, right? And that's what the bulls want to see, because that sort of solidifies, that validates the working assumption as we're consolidating. And even within that range, there's a fair amount of opportunity that presents itself to kind of, if you wanted to, for example, trade around a long position, a net long, where you're trying to remain core long in this trend up, but yet you can kind of sell a couple at the top of the range, buy a couple back at the lower extreme of the range, and then again, kind of hoping for that breakout to continue and propel that net long position to continue to pay off. But this is a good example here of a chart, a product that's in a trend up environment. Again, not a lot of conviction right now here in this range, but trend up environment, and one that's been rewarding the longs for sticking with it over this longer haul, over this longer period of time.
Yeah, to your point, I mean, like, it looks really lackluster as of late, but it is still up about 10% this year. So it's not like, you know, we're lagging that significantly. Yep. Just, it's a brutal comparison, frankly, when you look at it next to NVIDIA, as we just did. But appreciate the breakdown, as always, Ben Lichtenstein, our chart master, and of course, the host of Futures. So now, when we look at trading this name here, Alex, walk us through the other way of thinking, obviously, because AMD has been a completely different story than NVIDIA.
Yeah, as promised, we're looking at sort of the inverse trade here in AMD, almost like a cross-product iron condor, looking at selling a call vertical above the market, Morgan Stanley downgrading it, maybe flows coming out of AMD into NVIDIA. What we're looking at here, call vertical, same expiration, the July monthlies.
Don't give up on the AMD.
Same $5 width, same $1.25 credit. So looking for a $1.25 credit here. Max profit would be 125. Max loss 375. Looking for sort of again a lot of the same. There is a cushion though for both of these strategies, both in NVIDIA and AMD, where it doesn't have to go the direction of the trade for it to be profitable. Got a little cushion in case they move in the same direction, but really looking for AMD to underperform, NVIDIA to outperform.
Yeah, and as you were speaking and we're just watching AMD continue to sort of creep lower, I know it's not like selling off by any means, but still down now about 4% on the session. But really interesting comparison between those two names, as it was at one point seen as the two-horse race, but I guess right now it's the clear one-horse race being NVIDIA. But we will leave it there for our Chartmaster segment. Now coming up next, it's time to talk a name that's having a fantastic day, and that is Southwest, pacing for one of its best days in almost 4 years after Elliott Management disclosed a $2 billion stake in the airline.
Empower your portfolio portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
TikTok, we were talking about this earlier, the algorithm serves up content that it thinks you will like, that everyone will like. It's prioritized on engagement and wants you to stay on the platform as much as possible. So if a lot of people like these Abercrombie jeans all of a sudden, and it's the craze and it's selling out, somebody's getting revenue from that. So it's making the younger generation realize you're going to spend money on these jeans. That might be an indication of who's getting that revenue. That's a public company. You can participate in that as well.
Join Caroline Woods and Option Plays Jessica Inskip for the latest Market Overtime. The pair discuss social media's impact on investing in the future of women in finance. Market Overtime airs every day at 4:30 and 8 p.m. right here on the Schwab Network. So now welcome back to Next Gen Investing, and we are looking at our FOMO name today, which is Southwest Airlines, having a pretty stellar day, actually pacing for one of its best days in almost 4 years after some activist investor news. So here to break down that news for us is Caroline Woods, Senior Markets Correspondent for the network. So Caroline, walk us through this story. I mean, I think it was about time that we had some good news in Southwest.
Yes, this isn't a stock that you'd likely have FOMO for previously. It's down more than 50% over the past 3 years, trading below the March 2020 stock price. But that's changing today. As you said, shares up about 7.5% on news of some activist investors. Elliott Investment Management has built a nearly $2 billion stake in the airline, $1.9 billion to be exact.
Oh, really?
Now making it one of the airline's largest investors, and Elliott is pushing for changes aimed at reversing that underperformance that I spoke of. It highlighted its stronger Southwest plan in a letter to the board, which includes leadership changes, including replacing CEO Bob Jordan with an external candidate with immediate effect, board enhancements, which includes getting rid of Chairman Gary Kelly, and then a comprehensive business review. Said in that letter, while Southwest has a proud history, that history is not an argument for supporting poor leadership and sticking with a strategy that no longer succeeds in the modern airline industry. Went on to highlight its outdated software, a dated monetization strategy, antiquated operational processes, and said poor execution and leadership's stubborn unwillingness to evolve the company's strategy.
That's okay, man. You can pick on me all you want, brother.
For shareholders, employees, and customers, highlighting that employees have lost tens of thousands of dollars because of the stock price.
Geo says spy 1, 2, 3.
Southwest can return to being an industry leader. They say the stock can be $49 per share within 12 months. So that would have been 77% return in that time period before seeing today's gains. And a Southwest spokesperson has responded,
saying, "We were first contacted by Elliott yesterday and look forward to better understanding their views on our company." But they did say that their board is confident in their CEO and management's ability to drive long-term value for all shareholders. So, expressing some optimism in their CEO, which we know Elliott wants to replace. But investors clearly seem upbeat about this news. Shares up about 8% right now, now officially positive year to date, but had been really trailing behind their biggest competitors for quite some time.
Caroline, you talked about the 3-year underperformance of down about 50%. This is the type of situations where activists step in. So it's not a secret there's been struggles at Southwest. How does the street, I saw Barclays weighed in, how do they feel about Elliott management and what they had to say?
Barclays weighed in when it was still just a Wall Street Journal report, didn't change their equal weight rating on shares, or $26 price target, which Southwest is now trading above. It's now trading around almost $30 a share. Said the activist engagement at Southwest could bring a breath of fresh air for the storied, once low-cost airline, which today is facing structural margin headwinds as the U.S. industry evolves past the company's dated strategy. But it does say that Southwest appears to have several strategic shortcomings compared to the other large airline competitors. So not getting bullish or changing the price target, but says it could breathe a breath of fresh air, which we're definitely seeing in terms of share price today. Melius Research kept a sell rating and a $22 price target, similar to what you said, Alex. Said it's not surprising to see activist interest, but they were talking about the opportunity to push for a more concrete view that the airline won't grow the return on invested capital until it exceeds the weighted average cost of capital. So nothing that made that analyst more bullish. And in fact, if you take a look at the breakdown, 60% of analysts are in the hold camp for Southwest, despite the fact that it has underperformed. So I think when it comes to profit margins lagging behind competitors, based on what we're seeing with share price, it seems like investors are confident that maybe Elliott can execute in terms of that strategy. But we also have to remember that Southwest is really kind of plagued by Boeing's delays as well. They exclusively use Boeing planes, and I don't necessarily think that that Elliott's going to be able to change that, and that's a pretty big headwind for Southwest shares as well.
That's a really good point, too, because, I mean, like, the narrative doesn't change just because they've invested $2 billion in the company. I think, obviously, cash doesn't hurt, and I agree with the argument of, like, they need some fresh blood, basically. Like, their board right now is just basically a lot of these grandfathered-in executives. So I can understand that rationale, especially when you look at some of these executives that have been at the company for, like, 30-plus years, which is insane. So I understand that rationale, but you make a really good point, too, and that's that the Boeing headwind still very much exists, and that will not change just because Elliott management has now decided to take an interest. So I think a really good point, and we appreciate the insight. As always, great breakdown. Caroline Wood, senior markets correspondent for the network. So now when we look at trading this name here, Alex, I mean, Caroline made actually a great point in the sense that Southwest has not deemed the FOMO type feeling over the last few years, but today definitely is.
Yeah, this is actually a sector that Warren Buffett, I think, at one point basically said it's the worst sort of business to invest in because they grow really fast, they require a bunch of money to plow in, and then they give you kind of little back in return. So maybe you have that fear of missing out, but you want to keep it relatively short term, more of a trade. And so what we looked at here was an option strategy that would take advantage of upside while this momentum might be behind Southwest. What I looked at was a call vertical spread, a debit spread, going out to that July monthly cycle, buying an in-the-money 27.5 call, selling an out-of-the-money 32.5 call. For a 250 debit, you'd risk 250 to make 250 with a $30 break even. What are our sort of loose guidelines with this strategy, Jenny? Equal risk to reward, break even near the current share price. Well, at the time, the stock was trading like right at $30. It's a little bit below that now. So it kind of hit all of those guidelines kind of pretty much on the nail.
Yeah, and I would say we'll have to see this momentum continue because obviously it's getting a nice lift today, but that doesn't mean that it all is clear for Southwest as shares have been basically cut in half over the last 3 years. But we will leave it there for all things FOMO and our discussion on Southwest. Now I'd like to welcome in, though, Kevin Green, senior markets correspondent, to discuss the latest with Apple and WWDC, which is now underway. And I saw some headlines, Kevin, so walk us through what you're seeing so far.
Well, we are seeing the shares down about 1.4%, and they continue to slide here, Jenny, just because the products that they're offering or they're talking about right now really is not capturing the imagination or the attention of a lot of investors. But they did announce some pretty cool technology, to say the least. But from the AI front, we had not heard any type of partnership with OpenAI yet, or an update with Siri, which is two of the things that I think a lot of investors are looking at.
AMD under 150,
yep. Vision OS 2, which is going to be the updated version for their Vision Pro headsets here. And one of the big things that they did focus on is this spatial photos. So basically taking existing photos that you have already and then being able to utilize machine learning in order to make those photos more of a 3D experience while using the Vision Pro headset, which I thought was actually fairly cool, and then also maybe a little bit scary, to say the least here. Now, they will have this available for free in the fall with a software update, and they're also bringing the Apple Vision Pro to 8 new countries, including China, Japan, and Singapore. They also talked about a lock-in app feature, so basically you can lock apps on your phone in the event that somebody else has it. If they're looking at your photos, they can't go through other areas of your phone. Once again, something that's not really changing the marketplace, to say the least. And the other update that we have so far is that they are going to allow their users to utilize satellite capabilities on iPhone 14s and later versions to connect to satellites and be able to send messages that way. So if you're kind of off the grid, or if you're hiking, you can utilize that particular service to communicate with your family members and friends. So once again, we haven't heard the big stuff yet when it comes to the AI front. We kind of would have expected that we would have had that to start off the event, and that just is not the case. So the shares continue to slide, now down about 1.5%.
Yeah, so Kevin, so now to shift gears here, because I think that, with Apple, it's sort of like, that is the news, and we'll sort of wait for more, but I think great breakdown on everything that they're doing as far as like the AI push. But walk us through a different story here now with Occidental Petroleum and Berkshire Hathaway, which it's been a while since I've actually said those two words together, but tell us about that story.
We continue to see Berkshire Hathaway accumulate shares for Occidental Petroleum here. Now, they did purchase a total of 2.57 million shares that were bought between June 5th and June 7th here, increasing the overall share count for Berkshire Hathaway up to 250.6 million shares. Now, they control around 28% of the company at this point in time. There's always been some speculation that Berkshire is going to fully take over the company, but that just is not the case at this point in time. They can continue to accumulate shares. Now, this is actually not a big surprise, Jenny, because Occidental and Berkshire Hathaway actually did announce last week a joint venture in order to extract and commercially produce high-purity lithium compounds. And this is a project that they're working on in order to provide sustainable energy, especially when you're looking at the EV space here. And so this is, once again, maybe a little bit of a confidence type of purchase, if you will, because they are going to go into business in some other areas and try to shake up the EV market as a whole. So that is kind of what we continue to see when we're discussing Occidental. It has not been able to catch a bid like some of its other integrated players within the space, but Berkshire has some optimism that they're going to be able to turn this business around, really reduce the debt load for this company, and then be able to expand margins. That's the hope, and that's why they continue to accumulate shares here. It seems like on a quarterly basis at this point.
It does, and I remember when there was whisperings of a potential takeover that obviously hasn't accumulated yet. And I also remember when Occidental was one of the best, I think the best performer of the S&P 500 just a few years ago, and since has not been the same performer like you just sort of laid out. So we are up now about 1% on the year and about almost 2% on the session, but great insight on both of those stories. Kevin Green, Senior Markets Correspondent for the network. Now coming up next, it's time to look at the S&P 500 rebalancing, and most notably CrowdStrike is getting added to the S&P 500 finally. I mean, with this rally, but we'll also talk about the other names getting added, which all at all-time highs today. We'll dive more into that story with Anita Young coming up next.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back. It's rebalancing season for the S&P 500. For more on what names to expect in the index in the near future, we have Renita Young here in studio, senior markets correspondent for the Schwab Network. That's my intro, Renita. I mean, that kind of sets it up. What names are on the verge of becoming S&P 500 stocks, and which ones are we expecting to get the boot?
Well, we're looking at CrowdStrike, KKR, and GoDaddy. Those are all touching all-time highs today. They're expected to go to the S&P 500 when rebalancing happens on June 24th. And of course, we know this happens to make sure each index is more representative of its market cap at that, or market cap range, I should say, and then allowing these stocks to be part of the S&P 500 gives them, you know, access to being part of ETFs and other funds that track the S&P 500 as well.
CrowdStrike. We were halted.
Cancer test maker, Grail, that's going to happen. But what were the stocks? Where will the stocks go? In the S&P 500, Illumina is going to replace GoDaddy in the S&P Midcap 400, and Robert Half and Comerica, they will replace Anywhere Real Estate and Adtran Holdings in the S&P Small Cap 600. Meanwhile, what's one of the notable stocks that are not going into the S&P 500? Palantir. Another one is actually
laundry.
Pardon me. Dell. Thank you so much.
I had pulled up. I was ready.
Thank you so much. No, but people have been wondering why these two haven't been added yet. And
CrowdStrike.
Investors in particular are pretty upset. They thought that it would have been added.
It's going to be one we're going to watch.
Rebalancing, but it didn't happen. However, at least one analyst had something positive to say about it, saying that, oh, it might be good, it may need another 3 months anyway, Palantir specifically.
Join the S&P.
So that they could allow a little bit more institutional accumulation on this stock, and also more price stability above $20.
GoDaddy, I mean.
Around that level lately, and this analyst seems to think that 3 more months, it'll be a little bit more stable.
Yeah, Dell really surprises me because I know that this is, you know, not only prestigious, but there's actually like criteria they have to meet. And also Palantir, I didn't realize has been now profitable on a GAAP basis for 4 straight quarters. I thought we were still in the unprofitable, at least like the more choppy phases, but no. Palantir and Dell both impressed me, so I can understand why the market's disappointed by that. But this also, like you said, doesn't mean that they won't ever be added. I was reading about this, and it's very likely still that they will, just not part of this June 24th, I believe it is rebalance.
Right, June 24th. And, you know, to be eligible to rebalance, just a couple of these eligibility notes: market cap of $15.8 billion or more, a listing on either the New York Stock Exchange or the NASDAQ, primary listing in the U.S., of course, also trading volume criteria applies as well. So, you know, it takes a little bit more to be added.
One thing I thought was interesting, you talked about some of those names kind of flip-flopping into the mid-cap index, the mid-cap 400, S&P 400. That index has notably underperformed over the last 3 years, only up about 7.5%, where you have the S&P 500 up almost 27% in that same time frame. So if you're just one of those names that's getting dragged along by the index, you'd much rather be in the S&P 500, given the outperformance over the last few years.
I'm pretty sure.
And that, I mean, gosh, that's drastic for an index.
Yeah,
so, I mean,
3
that's
times
like
more.
not even comparable, right? I know that the S&P 500 is the prestigious.
Now, you could be Russell 2000 and be down 13%.
That's
so there's
true.
always that.
That's true. It's all relative. You could always be the Russell, which is also, actually, now we're higher in all 4 of the major indices. But we will leave it there. Great breakdown on the S&P 500 rebalancing, which we can expect, of course, June 24th, just in a couple of weeks. But coming up next, it's time to talk Krispy Kreme, of course, the greatest ticker ever. We'll dive into some analyst optimism and why this partnership with McDonald's is being perceived still as a very good thing despite some underperformance as of late.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It is time for Under 30. Today we're looking at Krispy Kreme, and joining us for more is George Tillis, Senior Markets Correspondent for the Schwab Network. George, stock ticker is DNUT, rightly for Krispy Kreme, the donut maker. Nice last week of trading, or 5 sessions or so, but it's been a rough go at it on most of the time frames you want to look at.
Yeah, I mean, if you look at most of the time frames, one of these you'll notice on Krispy Kreme, at least from a chart standpoint, is they had a gap higher in March, and that was associated with this this new deal that they have with McDonald's to essentially sell product in multiple locations around the world, up to about 12,000 McDonald's restaurants. Eventually, this is essentially what the contract holds, to actually sell Krispy Kreme's donuts in their stores. So this is basically a profit-sharing agreement. It also, would help Krispy Kreme essentially sell more product without actually having to sell product in their own stores, which again are quite expensive to do so. This is essentially like a third-party, agreement that they have with McDonald's. But the thing is if you look at McDonald's stock since March, it's been down. So I think what's happening here is, Krispy Kreme stock is actually moving in sympathy with McDonald's, which we know is facing some challenges because of inflation and having to raise prices. And, some of the customer loyalty elements behind McDonald's are fading, at least because of some of the inflationary components to what's going on in terms of affordability. But if you look at Krispy Kreme, looking at some of the analysts, Truist increased their price target to 15 from 13, and they actually moved it to a buy rating. And they actually see the partnership as manifesting the potentially in favorable conditions over $300 million, which is actually quite a bit of the total $1.7 billion in revenue that Krispy Kreme generated at least last year. So I think there's some positive notes that the analysts are providing here. associated with Krispy Kreme. I think the partnership with McDonald's is actually going to, cause a shift in sales. And if you look at earnings in 2025, they are expecting, based upon these projections, to earn about 44 cents a share, which puts the stock earnings multiple at around 23 times earnings.
So, George, really quick before we go, I have to ask. This analyst also mentioned some of the impact of like the Ozempic, the GLP-1 drugs. I mean, I'm such a doubter on this whole phenomenon, but walk us through that thinking, because I can't imagine that it's that massive. It's impacting sales, but I guess it is.
Well, that's the thing. My thoughts are that because people are taking these weight loss drugs, that they're going to continue to participate in bad habits. So, whether it's a guilty pleasure to eat donuts, I don't think that's going to change. I think at the end of the day, people are going to eat what they want to eat, and so I don't necessarily look at it as an impact per se. Because if you even look at some of the surveys, people are still indulging in these guilty pleasures, irrespective of them being on Ozempic and all the other competing drugs. So those are my thoughts on it. Like I said, I don't necessarily think it's going to be a substitute for bad habits. And people are going to continue to consume, as they please, not necessarily as much, obviously, because they're not eating as much because of these drugs.
George, real quick, I mean, who's going to McDonald's and now suddenly, like, I just need a donut? I mean, maybe they are, but, like, what if this partnership is kind of a lose on the McDonald's side? I don't imagine they're just going to keep doing this into perpetuity if it doesn't have return.
Well, that's the thing. McDonald's needs to see a return. I mean, they'll have these agreements in place. If they don't make money from it, they'll just 86 it. So that's a risk you have to consider, and I think that's something to be mindful of. Right now, Krispy Kreme has about 11,000 global locations. They're expecting at least 12,000 total units installed at McDonald's between now and 2026. So that's quite a bit. So there's a lot riding on this deal.
Yeah, there is a lot riding on this deal, and I have to say, there's nothing like that conveyor belt. That's like how I imagine Krispy Kreme, although it doesn't sound so shabby to have a Krispy Kreme donut while you're also at McDonald's. I'm a fan of that whole concept, but we'll leave it there. Great insight as always, George Tillis, and that'll also do it for Alex and myself for Next Gen Investing for this Monday. Coming up next, we have You Watch List with Nicole Pedalides.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. I'm Nicole Pedalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in.
I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Stocks have turned into a green. It's the first day of the trading week. We have a busy week ahead and a great show ahead. In fact, the president and CEO of Norwegian Cruise Line Holdings will join us to discuss the latest performance of the company and its outlook and the focus on sustainability as well, some of those initiatives. Of course, it's May. We're going to look at the Charles Schwab May Stacks report. Just came out. We'll look at the big movers, what people have been buying and selling, some of the broad market trends. And our panel is ready.
Damn, nice bounce off the 200.
Our panel will be discussing summer travel trends and assess some
nice
stocks
bounce
that
off the
could take
200.
advantage of increased summer traffic. In the meantime, as I mentioned, stocks are back in the green after hitting record highs last week for the S&P and NASDAQ. Right now, we're up 1/3% on the NASDAQ. The S&P's up 1/4%. The Dow is at 38,829, up 30 points, and the Russell up almost 0.2%. In the meantime, oil and gold are higher, 77.62 for oil, 23.39 for gold, dollar 105.12, and Bitcoin 70,465, up 1% on the day. For some of the big stories in the markets, Kevin Hinks is with us, host of Fast Market here on Schwab Network. We had the jobs report and more, all about labor last week, and this week a lot of focus on the Fed. Give us a rundown of the week, what you're watching.
Yeah, it's going to be a big week for the markets, and what last Friday's jobs number did, Nicole, was kind of change the tone of the markets, right? From lower yields and lower dollar to higher yields and higher dollar. And now we get into a week where, you're right, you know, the Fed is going to have to talk about those higher wages and firming inflation. They're going to have to deal with that. We're going to get some data. Then we'll get CPI and PPI on Wednesday and Thursday. The number one look at inflation from a large picture of the inflation picture right now in the U.S. will come from that CPI data, right? Jerome Powell, we get the Fed, and then we'll get PPI later in the week. We'll get consumer sentiment on Friday. So a big week for interest rates, which will lead to movements in bonds, notes, yields, and the U.S. dollar. So a big week. Not a lot for earnings, a couple good names, but really this is about the Fed and it's about CPI data, Nicole.
Yeah, looking forward to it all. It's going to be busy and exciting. Of course, over the last hour or so, we've been learning more and more about Apple. The Worldwide Developers Conference is here. It's underway. It's much anticipated.
Damn, Jim.
What are some of the things that have stood out to you?
Stock down about 1%, although it just rallied slightly off some of its lows. It was down more than that. Apple making announcements. Not a lot of discussion so far about AI. I mean, it's not over, so they can still come out with things, but they announced the Vision OS 2 for Apple Vision Pro. It's something that they're looking at. They say there's now 2,000 apps for the Vision Pro. They actually also talked about the Apple Vision Pro arrives in new countries, China, Hong Kong, Japan, and Singapore. That's coming out beginning in June 28th. And then they said the iOS 18 to have more customizable features. You can move the apps around a little better. And then satellite texting for iMessage, coming out with every phone, iPhone 14 and later is going to be able to have satellite texting in iMessage. So some improvements there, but still, Nicole, I think the stock is a little lower because they really haven't, as of yet, as of me coming on the air, announced anything really significant about AI, even though they can make the case that all those apps they're talking about AI, they're all going to be on your iPhone, but nothing real sexy yet to talk about AI. So stock a little soft as we get to the 2 o'clock hour.
All right, we're going to watch for all the continued updates, all things Apple, and of course, you know, Dan Ives has still been very bullish as you've been watching and seeing. I saw you as a 275 target. I think Tony Saganaki is still under 200, maybe 195. So we'll watch it. Right now it's at 195. All right, Kevin Hanks, thank you so much. Let's turn our attention over to the cruise lines because cruise lines have been seeing an increased demand. Summer travel is here. We want to hear about the bookings, the future, the sustainability of these ships and what they have to go through, just the total environment of cruise life. Harry Sommer is with us, President and CEO of Norwegian Cruise Line Holdings. So glad you are with us. Thank you so much. You recently reported your quarterly report. Tell us a little bit about the big picture and the demand that you've seen in 2024. How would you compare it?
Well, thanks, Nicole, for having me on. Listen, demand for cruising is fantastic. You know, we reported in our quarterly earnings and again in our Investor Day last month that our demand's at all-time high, record book position, record pricing. Consumers are really seeing the value of cruising. We're back in full force with full ships and great onboard experiences.
Record pricing too, so you have the pricing power you need in order to keep that guidance going forward. Do you expect this to continue into 25 and 26?
Yes, listen, we were so optimistic about how things were going. We actually raised our guidance twice in the last month for revenue for this year. You know, we're now targeting a 7.2% yield growth year over year. And you know, not necessarily giving out guidance for 25 or 26, but as part of our Investor Day last month, we announced our long-term goals for 2026, which show above historical price increases the next 2 years, and having our EPS grow by 30% on a CAGR basis from this year through 2026. So super excited about the revenue picture for the future.
And when you really wanted to distinguish NCLH from NCL, right? To explain to folks so they fully understand.
Sure. Thanks for that. Maybe I should have started there, so thank you. So NCLH is the parent company that has 3 cruise lines. We have our contemporary line, Norwegian Cruise Line, which everyone is familiar with, but we also own 2 upper premium and luxury lines. Oceanic Cruises is our upper premium line, smaller ships, destination focus, really, really big focus on food and amazing onboard experiences. And Regent is our ultra luxury line where everything is included. Door tours, business class air, soup to nuts. Every cabin is a suite, has a butler and concierge service, and people are treated like royalty.
Yeah, and so there's the Regent, Seven Seas, the Oceana, the Norwegian Cruise Line. It's just you have a great lineup or something for everybody. At the same time, are you finding pressure how to have a sustainable ship, how to do things, these initiatives? What is it that you're doing? I'm sure it costs money to implement these things, but when you're doing the right thing, I guess shareholders like that too, because we find that a lot of CEOs get those kinds of questions on the conference calls, the quarterly conference calls. What are some of the things that you've been doing?
Yeah, so Nicole, we found that the best path forward to sustainability, certainly for the next 3 to 5 years, is to reduce our fuel consumption. And the technology that's out there is amazing, from how we paint our hulls to having heat recovery systems, redoing our air conditioning systems, how it is that we produce water on board our ships, how it is that we monitor our fuel consumption from port to port, speed controls, getting into things like artificial intelligence on deciding how you get from port, the path to get from point A to point B as we're navigating our ships. And all of these things we believe are going to have a massive reduction in our fuel consumption, which will help reduce our greenhouse gas emissions. In fact, we've committed to a fairly significant 10% reduction in greenhouse gas intensity by 2026 as part of our Investor Day targets, and had previously targeted a 25% reduction by 2030, and eventually getting to zero net greenhouse gas by 2050. We have a pretty good path for the 26 and 2030 goals. 2050 is going to take a little bit more work, but we really see these reductions happening over the next few years.
Yeah, I was looking at a note from Truist where they said, that things really looked encouraging overall, and that their checks in the industry suggest encouraging trends, cruise bookings, pricing power, and the like, and that there was a strong January through March season. And in fact, also talking about you could further monetize with Great Stirrup Cay, something they believe management is more than aware of as well. What is that, and explain that to us?
So firstly, I echo the comments that were made. We see all the same things. They're seeing great demand and also very, very strong cost control. In our Q1 earnings, we reiterated our guidance that we should have flat base costs year over year, which is great, especially in this inflationary environment. In terms of our private island, we have a private island that we visit with the Norwegian Cruise Line brand, Great Stirrup Cay. We call it GSC internally. And we've just committed in the last month or so that we're going to build a two-ship dock there, so we're able to start going there a bit more frequently. In fact, we plan to increase the number of guests that go there by about 75% from this year to 2026. And on top of that, we are going to be building more guest states and amenities, which should allow us to provide a guest experience and also monetize that island a little bit better.
Wow, to increase by 75% sounds huge. That will really
man, that makes
help the bottom
almost
line,
in my
because
support.
Maybe for the luxury liners who are willing to pay up for suites and something a little more private or exclusive, maybe that's in their wheelhouse. Does that sound right?
Yeah, listen, I think it's going to resonate across all three of our brands, but the Norwegian Cruise Line brand is the brand that visits there more often. And these guests love this private island experience. We have all types of amenities on there, from private beaches and villas and zip lines and jet skis and all types of things, even fun things for the kids like swimming with pigs, which you may imagine is really fun for the smaller kids. But we're going to invest further. We're going to invest in other amenities on board the ships, which our guests value and will pay for when they go there, which will allow us to continue to improve the profitability of that section.
If, we're all waiting on Jay Powell this week to tell us about the Fed and what they will or won't do with rates, and a lot of people use credit cards, a lot of people have credit card debt, some are even delinquent and not paying that credit card debt. If he were to ask you your opinion on how the consumer is or how the economy appears going forward based on your bookings or how much they're spending on board or things like that, what would you tell him?
I think we're targeting a slightly more affluent than average consumer in the U.S. And certainly within our target demographic, which I would say is, the upper middle class, lower upper class, they aren't necessarily as squeezed by these interest rates. In fact, on our more upscale brands and with our older clientele, higher interest rates sometimes work in their favor because a lot of them have fixed investments, interest investments, whether it's bonds or CDs that actually benefit from the higher interest rates. So we're not really seeing any cracks in demand. Both our future book positions.
Norwegian looks ready, but I'm going to give it a little bit more chance.
Confidence
we're
in
at
the
a
future,
pivot point.
as I said, remains at record levels, but also current on.
Turn it down some.
So we're seeing both in the short term and the long term that the core consumer that we're targeting, that more upscale demographic, remains very confident about
The cruise lines are doing very well. I know people that do it for a living, they almost live on them. But they're travel agents, So they do YouTube videos, they get paid for that, and they get paid for working. But they're always packed. They're always packed. Ever since COVID. And it's practically safer to be on a cruise ship than it is to fly anymore. And it's a lot cheaper. And some of them aren't, though. They're charging out the ass now. They're doing a lot of different things to restructure to pay back a lot of that debt. They just opened up a new island for Disney tours. It just opened up last week. Beautiful island. Beautiful beach. Just pure beautiful. But they had some kind of breakout last week. But they're making a lot of money. They're charging out the yin yang, and me personally, I want to go. I'm going to go on one. I'm definitely going to do it. I got to do it. But I love resorts better because they're more relaxing. I'm cooped up with 2,500 people on a little on a cruise ship. I don't know if I can get off on that too much. I love people. But some of the stuff, like the shows, I don't think I'd get into very much. Now, the music, I'd probably get into that. And I definitely get into going on the beach, on the island, but then you're going to put out more money when you go on them little excursions. So I just probably hit the town and walk back around and hit the beach and go back. But I really want to take one. I thought about living on a cruise ship, and then the more I thought about it, I'd just rather go live on an island. Become an island boy. Intel, they're calling a bottom on Intel again. NVIDIA's profit takers are coming in. This is going to be a great trade from here on out, NVIDIA. It'll still have that momentum. We'll be able to catch a lot of knives. They come in the morning, this thing dips, I'm going all in. I'm not going all in, but I'm going to be buying a lot of NVIDIA calls back and forth, back and forth. It's priced now where we can get in here and we can trade this on the way up and build up the momentum and break out. It's going to be easy to read. We had a 1, 2, 3 breakout today. 1, 2, 3, 4. Actually a 1, 2 bits, 3 bits, 4 bits. I think I'm going to go eat me a piece of celery.
So a lot going on here with NVIDIA today. Compound annual growth rate expected to be between 35 and 40.
Any place would do. But it chose to bring us here because of opportunity. If I'd known the way it'd go, I would have stayed in Tennessee. He was a young and handsome cowboy I'd met at the feed shop. I hired him on to help me tie the fence around our plot. I grew to trust that man, I let him in like family. His name was Old Montana and he took it all from me. Oh Montana, if you only knew I'd do most anything for the woman that you stand beside who wears my golden ring. Release her heart and let her find her way back home to me. Oh Montana, why'd you take it all from me? She'd say she went out on the town with her new lady friends, but I saw her at the motel with that handsome younger man. Filled my heart with sadness and a rage I can't explain. He stole my joy and happiness for his own selfish gain. So one night I went out drinking and I had a bad idea. I'd go teach old Montana that his consequence is real. I pulled up to his trailer with my father's 45. I kicked the door wide open, found him laying there inside. Oh Montana, if you only knew I'd do most anything for the woman that you lay beside who wears my golden ring. Release her heart, let her find her way back home to me. Oh Montana, why'd you take it all from me? Late at night, I think about the days our life was good, but I'd shoot that man again 100 more times if I could. I don't regret my choices, though I never will be free. Oh Montana, why'd you take it all from me? Yeah. Oh Montana, why'd you take it all from me? Oh Montana, why'd you take it all from me?
Be ready for AI intelligence by the end of next year. So all their technology is going to be AI compatible. And then they're also building their own chip to compete.
ARM's looking good
in this space. They've got that new partnership with Microsoft. They aim to gain more than 50% of the Windows PC market in the next 5 years with that partnership with Microsoft. So yeah, ARM Holdings, a lot of the other big tech companies were pushing back against NVIDIA buying them for a reason, because everybody needs their technology and license their technology to design those new AI chips. This stock's up nearly 90% so far this year. It's up 16% just in the month of June, and we're only 6 sessions in here, Nicole. So a lot of interest in this one also as that AI infrastructure gets built out and ARM's right in the thick of it. One of the calls, one of the options that was unusual today in the market was in the June 14th weekly series. So these expire in just 4 days. So somebody was out there with really short-term positioning, and this stock traded lower before the open also, and into the open before rallying. We're up about 3%, nearly 3% today. But the June 14th weekly options, the 140 strike calls, trader bought over 8,000 of those early on this morning for an average debit of about 420. Those are already doing pretty well, performing well. So that break even of 144.20 over the next 4 days, only about 3% above the current share price. So some positioning in here into the end of the week where we're going to see some more strength. Call volumes about double normal daily average volume that we've seen over the last week of trading, with the put call ratio down near the 0.3 level. Typically, you'll see a stock trade at about a 0.7 put call to ratio, where calls are out trading puts. But here, calls are really out trading puts because of the momentum to the upside. And yeah, traders continue to pile in the call side here.
Yeah, no, look, exciting stuff. I mean, and we'll get earnings probably in a couple of months for this one, right? So probably, I don't know, maybe 60-something days away. I did see that last week the RSI was showing that maybe this particular stock was slightly overbought, but hasn't all the tech names have all been somewhat overbought, and they just keep on breaking out to new highs across the board. So that's ARM. Let's take a look also at First Solar. I saw Goldman Sachs with a buy. Morgan Stanley also talked
What
about
is the meaning of BSSS?
Extraordinary options activity, most of which, more than half, has been to the bullish side of things. Tell me about some of your thoughts on this one.
Yeah, stock's up, 63% so far this year, Nicole. And this is all based on, if you think First Solar is a solar company, a lot of the gains that we've seen over the last few weeks, and they had a parabolic move at the end of May after the Biden administration announced that they're going to hike tariffs on solar panels come in from China. And that sent the stock parabolic to the upside.
Damn, they're stupid.
Hit an all-time high of about 16-year high of about 286. But this hitting 15-year highs just last week on the rally that we've seen. The focus has been the demand that AI is putting on energy at this point.
So the government thinks they can manipulate the market. They can, because a lot of these fat cats listen to them, but I don't like it. I don't like it one bit. The more we isolate other countries, the more they're going to isolate us. We're not in a good spot right now to be doing this. Not at all. I want to know where the brains come from this administration. Does it come from George Soros? Does it come from Hillary? Does it come from Obama? It sure in the hell it doesn't come from Biden. It's like bureaucrats are running this country. I just don't think we're in any position to be sanctioning anybody, unless it's Iran. I don't even know if it's right to sanction Russia. I mean, you don't want to fuck with them people, though. This push on EV is destroying us. This green crap, they keep pushing it, pushing it. I don't know nobody in my family or any of my friends that will go out and buy an EV car. I don't know a one. They can afford to buy an EV car, to outright afford to buy the new cars these days because they've gone up so high. I mean, I hang around with a lot of lower class, under middle class. I don't know a lot of upper middle class or wealthy people. I know thousands of people. I'm the only one that, out of all my friends, that trade stocks. It just annoys me.
My dad was a hard worker. He used to do side jobs installing windows.
Windows. You think sanctioning, I mean, okay, solar panels. Back when Obama was in office, there was a company called Solyndra. He gave them $600 million. $600 million. And it was gone within a year. Nancy Pelosi was in on that scheme. $600 million, and it went bankrupt. That's just one of many companies that these idiots in Washington invest in, and then they end up spending the money and it's gone and they go bankrupt. Now we got these wars we're paying for. How many people in politics are going to get rich off this? It's going to be all gone. I can see it now. What happened to that $1 trillion that we gave Ukraine in the past 3 years? I just don't think sanctioning solar panels is a smart thing to do. It's just going to raise the cost. They're going to be more expensive than the subsidies that we give to these homeowners. They still won't be out of the water for many years. And then they'll need to be replaced. It's like I heard about the car charging stations. Very few of them are working for these cars. It could be a Debbie Downer, I just don't like it. GM had a breakout today. Everybody upgrades it. General Motors is up. The UAW is helping to make EVs more acceptable. Oh, yeah. Right. That's correct. I never did buy fireworks, Ken. Just a waste of money, I thought. AMD double bottom now. We're going to wait and see if we can get that 150. Apple double bottom. Oh God, look at General Motors. Just, I don't get that. Apple's at the 200 on the 1 hour. Apple might be a scalp here. There she goes, big bounce.
Recovery here after, again, as you mentioned here, Nicole, a little bit of weakness earlier this morning, kind of a slow start to the week in terms of data and focal points for investors and traders, aside from a couple tech names that have been really dominating. But let's keep an eye on how we close out today. We've seen really strong end of the day sessions, and for the most part, we've been seeing some strength here over the last week or so. Let's take a look at the move up that we saw into a couple weeks ago on Friday. You see the rally up. Now this is, I should say, a week ago prior to that non-farm payrolls data. Here's the rally we saw throughout the week last week, and then again the new all-time highs, most recently up to 53.75. Look at this pattern, bottom left, top right, similar depiction as we step away from the intraday look at price activity, add quite a bit of time on, and we're going to a daily candle chart off the October lows. So from 4,100 in this instance all the way up to, again, those new all-time highs, 53.75. Nicole, this is exactly what the bulls have been looking for a while now, holding these upper levels, and simply put, no rejection of this, again, historic level that we saw just recently, as recent as last week.
Yeah, we're going to be talking about silver in a moment with David Trzaskowski. Silver and gold, something he watches all the time. You're watching gold really closely at this point. Some of the thoughts and some of the levels we've been watching and why they stand out.
Yeah, big time gold took a hit, right, with the dollar coming back. That was Friday, and then we saw a little bit of follow-through earlier this morning. Now, with stocks, it's been kind of rebounding a bit here, back to this 23.28 level. But as we take a look again, gold overnight here this morning down to 23.04. Look at this. You can see that we have come back a bit off those lows. And we are actually up on the session, believe it or not, 23.28. But here, look at the left side of the screen. This is the high that we saw just Friday morning, 2,400 down to 23.04, so $100. And then take a look at the bigger picture. You're going to see longer term that this could be just another buy opportunity for that longer term trend that we've seen the upside as we test the lower extreme range that we've been in. Upper extremes around 24.50. That's an all-time high that gold posted, if you remember, last month. And then here you can see again that lower extreme right around this 2,300 level. So keep an eye on it. But again, a similar pattern we just discussed, right? As we just kind of zoom in on this bottom left, top right, gold's been trending higher as well, Nicole.
All right, Ben Lichtenstein, great to see you. Thank you for all of that. Appreciate it. Let's continue our conversation. Look at the markets, the economy, some investing strategies. David Trzaskowski is with us, CEO at Sound Planning Group. Thank you so much for being here. So look, we got the jobs, a lot of jobs news last week, particularly non-farm payrolls. We're waiting on the Fed. I mean, how are you feeling overall about the market and the economy?
Well, I think that consumers are really facing some real challenges that are not necessarily getting picked up in some of the headline data that we get out, like we just saw with those non-farm payrolls. One thing to just
Disney keeps bouncing off that support line.
This information, they said that those were off by 7.
Disney keeps bouncing off that support line. We got Meta breaking 500 today. That was a good call from the bottom off them earnings. Hewlett-Packard, they had a lot of enthusiasm about Hewlett. Carvana just keeps shooting up. I traded a put on this because of news. But the way they've been pumping it, they don't care about it. Always claim this is Jim. This is a recorded line. May I help you? Works every time. TSM had a new high today. SMCI, inverse head and shoulders. Yep. Yepers. my water. Check the water down. Yeah.
To NVIDIA at that point in time. So yeah, there's a ton of competition right now in AI and in these chip makers. We do think NVIDIA is positioned really well, although there's a lot of competition that's coming out here. One thing I wanted to note, and I actually have a prop with me here today, Nicole, and that is that the next phase of AI is going to be not in large language model, but in large action model. And so what does that ultimately mean? What that means is that AI is going to start being able to functionally do something for you in life. And so I have here this little tool. It's called Rabbit AI. And what Rabbit does is, it was like the first version of this. I waited several months to get it. Basically, it's like old cell phone technology. It's pretty slow, but it does have the ability to like order you an Uber by just asking it a question. It knows your location, knows where you want to go. It'll do the whole thing with payment. And so I think that we're going to see, companies like Apple, which obviously have big announcements here today in AI. I think that we're going to be able to see organizations like Apple and Microsoft really, take off and into this next AI revolution, because they're the organizations that have, the Office suite that people are using every single day of their lives. They're trusted. We'll give them our financial information on some level. So we might feel okay with them being able to pass that to different organizations and make payment. And so as we look at AI and we look at the future, I think that the most important thing is that we understand that what we have today is in its very beginning. Where we go tomorrow is likely to have new winners, new companies at the top. But NVIDIA and AI are definitely at everyone's mind's eye right here as we're moving forward into the second half of the year.
Yeah, so we'll watch for more details on large action model in this, the way it's moving forward. I love your Lady Liberty statue.
That news coming out on Apple.
I have one very similar in my home. David, great to see you. David Strzeski, thank you for all of this. CEO at Sound Planning Group. Coming up, it's summer season. Are you traveling? We want to analyze some of this travel trends, the airlines, the cruise lines. But what about some of the entertainment stocks where you go for some music or maybe some rides or things like that? We got a lot. And how are you booking them, right? We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Got an alert set for Apple.
With the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the Watch List. It's time to focus on the summer travel trends. We used to say shop till you drop. Now it's revenge travel. You know, after COVID, everybody just wants to get out there and they're spending their money on experiences and learning things, themed hotels. Our guests have some more details. Dan Ahrens, Managing Director, Portfolio Manager, Advisor Shares. Paul Golding, Lifestyle and Payments Analyst over at Macquarie Group. Thank you both for being here. So, you know, when you talk about this, Dan, you did note, look, people are traveling and such, but the younger generation's looking for cruises, Airbnb-themed hotels. What are you seeing? I mean, what are some of your top picks in the industry based on what you're seeing?
Sure. Well, people are traveling. We've seen statistics that close to half of Americans plan to travel this summer. But we're also in an inflationary period. Things are expensive.
Good job, Mike,
So,
in your SPX trade.
We are underweighting some of the typical hotel chains. We like Booking, for instance. We like Expedia, those booking sites that people use. And some of the younger generation, they are doing just what you said, experiences. The cruise lines. Cruises can be very discounted and affordable these days. And some of the specialty hotels and so on. We also like MGM resorts. So we, in our beds ETF, hotels ETF, we do have those floating hotels. We have casinos. We have hotel REITs. And we think there's some very good picks in there. But again, underweighting most of the typical large hotel chains.
Right, and I saw you had MGM, Xenia, IHG, but your number 1 and 2 holdings were Expedia and Booking. And Paul, we'll continue this theme here. We're looking at some of the bookings, but we're also looking at entertainment. Some of the names you follow include Sphere, you look at some of the parks, you look at Vail Resorts, things like that. Tell me about some of the themes there and which ones seem like the winners, which ones are the buys?
Nicole. Well, in this consumer environment, we tend to prefer the easier travel experiences. So drive up, for example, cruise, there's a lot of drive up cruise optionality in terms of itineraries, whether it's Southern California, the Northeast, New York, or South Florida, or the Texas Panhandle. And the same goes for theme parks. Theme parks can be a drive up experience as well as a destination experience. But for
Jimmy alerted Google this morning.
Experience that you can get from regional theme parks to us cuts a lot of cost out, makes it more likely for the consumer to engage, and presents that value proposition, both in terms of transport and in terms of the overall package.
Yeah, so which ones are actually a buy rating?
Well, we like cruise, so Royal Caribbean is, in our view, best in class in that group. We see United Parks that holds the SeaWorld and Busch Gardens portfolio, ticker PRKS. We're outperform rated on that name as well. And we're outperform rated on both of those subsectors generally, but those are the two best operators in our view in each subsector at the moment. On the other side of the equation, we're neutral rated on Vail, which saw, which had a result the latter part of last week that showed how climate has impacted their operations. Passes for this coming ski season were reported down 5% in units, up only 1% in dollars, and that's on an 8% pricing increase year on year. And the Australian Epic Pass is down 22% in units. So it's on the other side of the equation. It's requires destination travel, has been struggling with climate volatility, and so it's sort of the mirror image of what we're seeing in some of these other travel categories.
Right, understood. You know, what's also interesting to me here, as we looked, Dan, you noted that while people are traveling and all that, 10% down year over year on the hotel bookings. So I wonder, here's my question to you. I think about how consumers are a little trapped, they're a little worried about inflation, they have higher costs overall. Are they staying with a friend? Are they being more frugal? I mean, why is it down 10%? So if the same number of people roughly are traveling, I don't know if that's true, but people are out there traveling, but what's happening and what's evident to you is that 63% of Americans plan to stay at hotels, down 10% from last year. Why is that?
Certainly, and we're seeing a difference in income levels and age gaps. So we do like IHG, Intercontinental Hotels. We also like one of the hotel REITs, Xenia, and they own an awful lot of luxury hotels, the upper end. So when you get into the boomers age and older and higher incomes, those people are still paying up for the hotels and these inflationary prices. But as we already talked about, there's more drive-up vacations. There's more people staying in Airbnbs. So Airbnb and other competitors like it are not traditional hotels. People are staying there. Again, we're talking the younger generation and looking for more of those theme parks, themed hotels, trips to Vegas, trips to, again, these cruise lines. And as was mentioned, we also like Royal Caribbean. We also have Norwegian cruise lines in our top 10 holdings.
Yeah. Yeah, I saw cruise stocks resurfacing as summer demand heats up. We had a great conversation with Harry Sommer, the CEO of Norwegian Cruise Line Holding today. He told us about the demand they've been seeing. It's looking great in the pricing power. Dan Aarons, Advisor Shares. Paul Golding at Macquarie Group. Thank you both so much. Great to see you. Appreciate it. That's going to do it for us here on the watch list. Download our free Schwab Network app in the Apple App Store 24/7. SchwabNetwork.com. Market on Close with Oliver Rennick next.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'll be right back. We got 1 minute to Power Hour.
Mid-30s, a couple of kids, recently went through a divorce.
Johnny.
She had a lot of questions when she came. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
I'll be right back. Here, Apple might be able to get ready.
Ethan! How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon and welcome to Market on Close. I'm Oliver Rennick. I've got stocks in pretty decent shape right now. The main event today is Apple's Developers Conference. Apple shares lower a little bit, so not exactly perfect for what bulls were looking for, but pretty nice little way to start the week off with a switch from red this morning into green as we head into the last hour of trading. We'll see what can hold. Not a whole lot of news, big news to report on the macro side. We got a little bit of a bond auction that created this little spot of volatility for like a half a second. But the second half of this week is when things heat up for the economists. And we'll be talking a little bit about that with Vincent Dillard joining us this afternoon for the macro discussion ahead of inflation. We'll be talking about AI, tech, and big gains in some of the longtime winners of tech with the NetApp CEO joining us this afternoon too. So we got a busy half an hour here to kick things off, and then doing a little prep too for this week to get you ready for the big events. Right now, NVIDIA up about quarter, maybe 1/3% or so after stock split. All right, better than being down, and it was down earlier, like 2%. So NVIDIA dips continue to get bought on the routine and like clockwork, basically. Momentum ETF back working today. You've got the themes that had taken a bit of a break on Friday following the nice jobs report and volatility in bonds. So the return of the Momentum Fund is a welcome sight on a week where bulls are looking for a continuation. Keep in mind we got all-time highs last week, but we just got more kind of like consolidation than we did a real big breakout. So seeing the momentum factor leading us on this Monday is definitely encouraging for those looking for further gains in stocks. Bonds down a little bit, but compared to the sell-off on Friday, it's not too terrible. It's manageable so far. And there was one little tiny tick down when the bond auction went off today, but no real drama there. Tomorrow, when the 10-year notes go off, that could be more interesting. Today's 3-year note auction still was not particularly strong, but not really one that's going to move the market too much. Watch the 10-year tomorrow at 1 p.m. That could be an interesting one, of course. And you're still dealing with the big Friday sell-off there from over the weekend. So the damage was basically done on Friday, and now we're kind of assessing it in the Treasury market. And, of course, so with the Fed and with inflation, CPI and PPI. It's going to be a busy week for this chart, and it looks like it's going to require something surprising, something big to coax bond bulls back into the Treasury market after getting walloped on Friday. So there is a little bit of follow through there from last week. But if you look at the dollar is higher today, but it also has backed off a good bit from this morning too. Dollar was kind of screaming to start off this week, but to see it ease up a little bit helps alleviate some of the pressure that was on some of those higher risk, higher beta, more rate linked trades that we did see get punished on Friday. So the market overall generally is taking in stride higher yields right now. Watch the commodities too, because crude oil is catching a little bit of a bounce. Notice that crude is up on days where the dollar is up. Just a reminder there that that textbook relationship has been inverted for a while. In an inflationary regime, crude oil and commodity prices moving higher, oftentimes being read as an input through to inflation and then the Fed's reaction to it. So if the Fed has to react to sticky inflation, then you can have dollar up and crude up. And it's actually been a much more reliable trade than the inverse one that typical economics suggests. So just a little reminder there to be careful with that if you're expecting the dollar to hit commodities. dollar upside has been a little bit more limiting to stuff like Bitcoin and gold, which is also kind of muted on the day. Let's bring a Jenny to Kevin Hanks. And there's a good bit of green out there, but one thing that is red, Jenny, is Apple right now down about $3.50. So that's not ideal, I guess, for the tech bulls today, but it's a session.
You know, it's just what we talked about this morning, where Apple is showing us they're not reinventing the wheel. They're just sort of right now piggybacking off of concepts that already exist. And so I do think that while this is at least progress, I mean, that we heard from the company, this is just the beginning. But it's a relatively subdued one, I will say. So, like, they did unveil the fact that now AI in the form of Apple Intelligence is here, and we did see market leader ChatGPT will be integrated into iOS as well as some of their other operating systems like Siri moving forward. But ultimately, there really weren't a ton of fireworks. I mean, I was just reading some of the remarks from Tim Cook, who does think that, I mean, obviously this is going to be the next big step in a tremendously exciting new era. I mean, you could say that all you want, but you're about a year and a half late to what is a tremendously exciting era, I think. So iOS is going to have some pretty major updates. One update I saw was a complete overhaul of their photos, and there are actually like really cool features within their Apple Intelligence. Like it will help some of the Notes app, users writing from class notes to like blog posts to cover letters. They will also be seeing, you can now customize some of these emojis, which is cool using Apple Intelligence. But again, none of this is like moving the needle for Apple because
Small fry.
I know.
Custom emojis, like, come on, I'm, like building programs on the other, on OpenAI.
I know, but WWDC, I will say, historically, it's never really like this massive unveil.
Yeah. Well, the stock too, I mean, it's been on a nice run. I mean, to get back to the highs. So it's recovered a good bit. To see it kind of stall out right above the high, I mean, I guess, for one day, maybe we could take this in stride, Kev. If it turns out this is rejection, and this is like the hard ceiling on the stock because of this, then, I mean, that'll take some time to know, but we might get that answer this week.
I think that Apple surged back up to where it was, but they needed something significant out of this conference to...
I think so, too.
To move the needle higher to new highs.
This is their pump, baby.
Sorry. I think that Apple needed something other than AI's coming to the iPhone.
Here's an emoji.
Yeah, right. A new emoji. I don't want a new emoji.
I know. I don't want any. You know what? The problem is we already knew all.
Start my car. That would be cool, right? I need something. I need an oh by the way moment.
Right.
Out of Steve Jobs. We need one of those.
Right.
Apple continues to do these things every year, and the stock firms up and rallies into it, and then sells off right after. It's almost the most predictable thing that Apple stock can do.
Well, if it's downloadable updates also versus new product.
iOS 18.
Right. Does it look like it's going to drive device sales, Jenny? Because that's really the question, right? Is because it's something that's downloadable. It's not going to drive device sales.
No, I mean, we're talking things like smarter email organization. You can now customize the various like background of your phone, which I thought you already could, but
these like AI for babies?
The quality of life improvements, they called it, or like these better messaging experiences. Yeah, so no, this is not going to drive a massive upheaval in, I mean, like a replacement cycle. But I think like the problem is we knew all this. Like there's no surprises anymore. I liked the days when there was like just this massive unveil from Steve Jobs. Those were the really like the glory times when you could say like, okay, Apple is doing something different. Nothing that was said today I thought was surprising or new.
We'll even forget about Jobs for a second. How about like Jensen Huang? They, all the stuff that we've seen from the hardware side is like, giving people this fertile ground to plant this, all these products and services, and it doesn't seem like Apple's there on it. It's a pretty dry, dry basin that they're offering.
Doesn't it feel like they were going all in on cars and had to do a complete 180 and come to this late?
Right.
And so that got them behind, and now they're just trying to catch up. Saying AI, saying we're doing a lot, but AI for dad jokes, I don't really know. There's nothing less, people are really doing some incredible things right now in the field of AI, and this wasn't one of them.
Totally, yeah. Especially, too, just kind of further brings the spotlight onto Microsoft, it seems like, as an investor in OpenAI, when other people are doing deals with them. So, not in-house tech, nothing that's going to drive the device sales down 2%, but...
Because all the of the major updates I can see are on iOS 18, so you don't need a new phone for that. That's the other thing. It's like I feel like these minor changes, sure, they're exciting as an iPhone user, but like I'm not buying a new iPhone.
Like by definition, they're minor changes if you can just download them. It's not something that's going to require new processing.
And it says 14 and later. A lot of this stuff is for 14 and later.
Oh, good. So I make it.
And thanks, Kevin Hayes and Yorn. Appreciate it. All right, Apple shares down. Rest of the market holding on though, trying to process what it learned from jobs last week. Bonds still selling up and not an issue today. Joining us, Vincent Villar, Director of Global Macro Strategy at StoneX Group. I believe still thinks it will be a problem though. Is that right, Vincent?
Always have, and I was very happy to see the non-farm payroll agree with me because we had a bit of a couple of weeks where you saw the macro bears coming out of hibernation, and turns out that the inflationary growth theory is still correct. I mean, we see a very hot labor market, we see a very strong inflationary pressures, and as far as I can tell, we have a monetary policy that's still behind the curve.
So when we see wages a little bit warm, jobs still hitting where they are, do you have any strong view on how the inflation numbers are going to come in this week? Anything in that short term, or is this more just kind of higher for longer? We're not going to be able to cut, and the economy keeps, going.
Yeah, I think every time you have me on the program, I'm just repeating the same thing. But
it's okay when it's right. You've been on it.
Thank you. It needs repeating because the market keep second guessing. I mean, you see the strong numbers, and then immediately after that, the yields start to fall. We start to price more rate cuts. So, listen, next number, who knows, right? I mean, we obviously had, I think oil and commodity prices are the big story on any, if you look at the 10th basis point change, the month-over-month number, that's going to come from oil, and oil has been, fairly weak lately. So maybe we get some relief there. But if we think big picture, which is the only way to make money, you really want to look at your core PCE inflation, which is what the Fed looks at, and you want to divide it into 4 buckets. Biggest bucket, and I think the one with the biggest problem, is shelter. I mean, remember, last year we had all the recession bears and, deflation guys telling us that, there was this lag, but, if you look at, core CPI X shelter, it was already below 2%, and shelter would fall off a cliff, and then we'd have the deflation by now. Well, that theory has been thrown out the window. I mean, shelter is re-accelerating. I mean, every major city we can see, if you look at the Sheila futures contract, it's up by 10% in a year. So what's more likely is that we actually see this, re-acceleration of the housing market, in large part because mortgage rates have dropped, and in large part also because of population growth. We had 4 million people across the border. We had a very similar situation in the UK, in Canada, in Sweden, where we see this link between shelter and immigration. So 35% of the CPI is going to keep growing at more than 5%. That's it. We will make the target. So that was the first bucket. Second bucket is core goods. This is the part that really helped the Fed in the past year, right? Remember, all that cleared in the past 12 months. Things like, fridges, used cars, all of these things that contribute to the spike of inflation deflated. Now, most of that effect is behind us. What we're looking at now is actually some tension building up against supply chains. If you look at the Baltic Dry Index or the cost of container freight from Shanghai, it's actually going back up. So we have a little bit of pressures here. And then the thing that worries me is the November election. I mean, if we really do get a 60% tariff on Chinese import and a 10% across the board tariff, what you'll see is a massive inflationary shock for consumers. That's what tariffs are, right? You just raise consumption prices. No longer a tailwind, possibly a headwind after November. That would be your kind of core services, wage-driven stuff. And this is the area that had me the most worried last year because I was the slowest to move. Now, I must say some things are getting better. Like if you look at, job opening to unemployed people ratio, wage growth has moderated. But again, I would look at the glass half empty here. This is happening because we had 4 million people across the border. Imagine what it will be when we no longer have that. I mean, even with 4 million people crossing the border, we still have more than 4% growth in average hourly earnings. We still have more job openings than we had at any point before COVID. So we had some
above trend.
Correct. Like remember, the labor market in 2019 was extraordinarily tight. I mean, this was, you know, the best and the greatest economy in the world of Donald Trump. We are barely getting there in terms of labor market tightness. So we are still very, very far from having the kind of slack in the labor market that can bring wages down. And I work that as soon as we get the border situation fixed, we will go back to where we were in 2021, 2022, which is massive labor shortages. And then the third part that I wanted to touch upon was the wealth effect. And I think that's something that the Fed has been very reluctant to consider. The Fed seems to be operating in the 2010s framework when it could just inflate asset prices without having any effect on the real economy. And I think we pass through. I mean, just on crypto. I mean, crypto added, you know, more than $1 trillion in market cap in the past 6 months. If you look at some paper, they estimate that about 15% of the gains in crypto ends up in extra consumption. So that would be about 150 billion gain extra consumption just from crypto. And I'm not talking, of course, about stocks, about bonds. I mean, let this everything rally. That will lead to more consumption. And I think until the Fed is willing to acknowledge that its monetary policy tool is not really working, I think the Fed funds rate is not working, and it's very clearly communicated that it doesn't want to do anything more. It's stored on a QT. The only thing that will work in order to slow this overheating economy would be to get asset prices down, and I don't see any appetite for them to do that.
Hey, Vincent, just real quick, I've heard more folks kind of warming up to this idea that if we cut rates, it'll be disinflationary, it'll relieve some of that housing pressure you mentioned. Think that's a gimmick, or would it just shift it over to the demand side through wealth effect and others? Real quick, we got about 60 seconds.
Yeah, I mean, I think the income channel is real. Like, you know, basically we end up, you know, we have 120% debt to GDP and a $7 trillion balance sheet for the Fed. So if you raise the Fed fund rate to 5% from zero, you're actually sending money to the economy. But I mean, I have a lot of sympathy for the MMT guys and all that stuff, but no, I don't think you slow the economy by cutting rates, and that's not how you cure inflation. I think the calls to cut rates in order to like free up the housing supply that's trapped in.
That's the argument.
Yeah, I mean, what it tells you at the end of the day is that we do not have the appetite for tight policy.
Yeah, I think so too. More reflection of the people in the market, right? That just.
And so these people are not serious. This is not the Volcker Fed. This is our Fed.
All right. Hey, Vincent, always great to get your take and the updated view on it. So we will certainly be watching it this week in mind. The horsemen of inflation still riding strong, according to your analysis. Appreciate it, as always. Vincent Blard, StoneX Group. All right, that's the macro setup. When we come back, let's talk some tech. The CEO of NetApp joins us from the NASDAQ, where they're just they're getting ready to ring the closing bell. And the stock is trading the highest since .com, with so much discussion about how AI is as revelatory as the internet. Seems a great time to have the CEO joining us.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Shares of NetApp are on a tear this year, up more than 40%, and the company's team is at the NASDAQ exchange getting ready to ring the closing bell to celebrate almost 25 years as a publicly traded company, and stock investors look like they're ready to celebrate all-time highs. The shares trading just below the .com levels. George Kurian is the CEO, joining us here on the Schwab Network this afternoon. George, thanks so much for spending time with us, and congrats on almost the anniversary.
Thank you. Thanks for having me.
There does seem to be something kind of seminal and appropriate that your shares are so close to the .com levels when many are describing what's happening in AI as equally revelatory. Would you describe it that way?
Absolutely. We are in the age of data, and data is the fuel for AI, and we at NetApp are the creators of the tools that enable clients to use data to fuel their success with AI.
How do you take
Always
into
clean
account
as a
these
gem.
new apps that have been built
This is a
by
recorded line.
OpenAI
May I help
and
you?
others? Do you harness it in your business? Do you try and replicate something like it in-house? What is that relate?
Okay, Apple's pulled back to support here.
Growth, trailing 12 months of sales contraction, small single percentage, but now the expectations are to swing to, based on your guidance, based from analyst guidance, back to revenue growth. So how does that kind of change what was happening post-COVID? Do you feel that that general IT malaise has been fully kind of worked through?
Listen, I think that what we see happening right now is that data and infrastructure are both segments that are growing nicely, and we have an additional tailwind of cloud because of the unique work we've done to enable our clients to use the big public cloud successfully. And so we've had a really strong run in the stock, like you mentioned, through the course of this year, and we are really excited about what the next 12 months holds for us.
So to your point, when you're providing the tools and the infrastructure for businesses to then harness their data to create a product, it's on them to make the product. You're not there making the product, so you can benefit either way. Do you worry at all that this will have any disappointment? We've been through a couple big hype cycles as investors the last of 4 years. The metaverse, to some extent, still exists, but kind of flopped in a way. A couple big companies overspent there. A lot of folks think blockchain has been a total flop. We basically just speculate with the tokens. What are the odds that this is an overhyped cycle? Is it zero? Is it non-zero?
Listen, I think we've been in the AI landscape in the market for many years, 7 years or so. Predictive AI, which is the predecessor to generative AI, where you use data and software to bring predictions and accelerate decisions. It's got real productive use cases across a range of industries. Life sciences, we've got a client here who's talking at our conference with investors about the benefits that we bring to accelerate drug discovery. There's a range of implementations in financial services and others. So predictive AI is well proven, clear business cases and benefits across a broad range of industries. The second I would tell you is that humankind has generally benefited from tools that improve productivity. Maybe all the use cases in generative AI don't pan out, but those that are already proven to improve productivity will see enduring benefit.
Okay. Hey, George, just real fast, because I know you're on a time deadline. Your stock is actually cheaper than the S&P 500 on a forward basis, despite the big run. Your cash flows are strong. Would you consider buying back more of your own stock?
We have bought back through shareholder dividends as well as buybacks the preponderant majority of our cash flow over the last several years. You know, the compound aggregate growth rates of earnings per share has been about 14% for the last 7 years, and we will continue to see buybacks and dividends be the majority of our free cash flow generation spend.
Okay. George, thanks for your time. Appreciate the insight.
Thank you.
Absolutely.
Thank you.
George Kurian, CEO at NetApp. As I mentioned, shares trade at 17.5 times forward, which is cheaper than the S&P 500, despite the stock's big run this year and in the past 52 weeks. George Kurian, CEO at NetApp. All right, coming up, we're going to take a look at some options flows and what's on the calendar this week for those trying to navigate the second order derivative swings at gamma levels and such. Kevin Green going to join me to take a little different spin on the options corner today.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just
Jimmy did? It almost hit my lower support of 2279. Oliver.
Are for market makers, dealers. Kevin Green joining me here for the options corner, taking a look at some of the flows and kind of how we're set up for this week, because it could be a big week, KG. For those that like to watch the gamma levels, as many people do, as you like to watch open interest, kind of where there's a lot of action happening. Let's start there. Like, where's the concentrated trading in the S&P this week?
Yeah, so if we actually look at the open interest side of the equation here, Oliver, we have pretty much three different levels that we're focusing on. The 5350 level, which has been a sticking point for the market for the last week. And in fact, if you looked at Wednesday, Thursday, and Friday, we closed within 3 points of 5335 here. And so we actually have a chart that kind of shows that particular exposure. And one thing to just kind of note, we have a lot of institutions that are really rolling up their short calls to a higher strike price, going from 5350 up to 5,400, and that's actually a bullish sign to say the least. And you can see that with that green bar at the end there. So that's actually relieving some of this pressure that we've seen at these current levels. And even today, we're starting to kind of break through those levels right now. Now on the downside, once again, trying to focus on that 53.35 level for downside risk, but there's not that much downside risk being priced in the market. Basically, there's not a lot of hedging activity going on. The institutions are fairly bullish. The dealers have pretty much bullish positioning right now. So going into this week, it's actually a pretty bullish setup after a lot of the economic data that we're going to have from CPI to PPI, from the Fed, and so much more other data points out there, 10-year Treasury, 30-year Treasury, things of that nature.
Okay, so the open interest, that big green bar, that's the 5,400. Few of the other levels there that you mentioned, 5350 right now, we're about 5359, so it seems like there's kind of a little bit of a guardrail there, but it seems like, I guess there would be a lot of surprise if we started slipping below the mid 53s, because then you're going to get people kind of caught off guard. It seems like that would be one interpretation of this.
Yeah, definitely. So you would say that major support wall, if you will, is 53.35. So market makers and institutions really do not want to see the market go below that level. And if we do break that level on some pretty high volume, Oliver, say 53.25, that's where we could see this domino effect of selling happening in the market.
Similar to 10 to 1, 0.
On Friday, instead of
that'll be good news.
To the upside, where we just had the market push through some key areas of resistance when it comes to dealer positioning, and then everybody just started buying into the market, and that's why we had that exuberant rally at the end of the day there. And so when you're looking at downside risk, 53.35 is the one to keep your eye out on for right now. But if we actually continue to truck higher here and get farther and farther away from 53.50, then 53.50 most likely will then become that key resistance level. As time goes on, we have dealers and institutions really moving their positions up, because over time, in the long term, the market's fairly bullish, right?
Yeah, okay. All right, so generally, it seems like still kind of these Fed-focused weeks, the market kind of has a bias to where it's going to be positive, but it's interesting that this is kind of where that things skew to the upside, given that we saw a little bit of rumblings from the bond market in the last 48 hours. But all right, this is kind of strictly positioning stuff here. In the short term, because I kind of think about these levels as almost like guardrails on the highway a bit, like, okay, we kind of know where we would expect to bounce off of and where not. Does that mean it will be tough to get through that big, the 54? Does that mean if we get through there, it's like melt up
so that's funny.
territory? Is that like our...
On my last video I did, Yabba Dabba Doo translated to English means thank you so much. I never do that. I thought Yabba Dabba Doo said, yeah, let's get it on. The girl says, hey, you mind if I give you a smooch? And I said, Yabba Dabba Doo. That is funny as thing. That's hilarious. So here we go again. Snake breakout to the 63, pull back, higher low, higher low, higher low, boom. Snake leading out with 3 white soldiers. 3 white soldiers is bullish when it comes out of the snake. Comes up and hits a double top at the 63 and pulls back to a higher low. Boom. Oh, yes.
and that demand is going to pick up. And I think for now, if you're looking at a long short game, I'd almost be ready to start shorting it.
Nice. So I like the aggression, basically looking for an opportunity to stab, right?
No doubt about it. You know, trends work, and you know they will get broken eventually. But for right now, like I said, you know, really 73 to 80 is the range we've been in. That 80 and a half area has been, you know, pretty much a line in the sand. So that's what I'd be looking at. You know, especially the big round number of 80. Not that that's really a technical number, but you know the market likes those big round numbers.
For all the talk about sticky inflation is true and accurate as I think that description is, crude oil's been in a downtrend, not just since the spring this year, but obviously still off the highs. But it does seem to like wake up the same time when bonds wake up, and we did get a little bit of a bond wake up on Friday. Maybe there's a way to trade those two against each other, like, because they've been pretty well correlated, crude in the 10-year. Not like a day-to-day, but like, you know, a weekly basis. They do kind of ebb and flow.
SPX, nice.
More macro, but you know, so if you do that, look where the 10-year is right now. We're kind of right in the middle of the range from the 460, 462 high area down to where we traded down to. So you've got 10-year, you know, middle of the range, oil or crude at top of the range here. We'll see where they both move from here.
Okay. Dollar hanging in there today. As I mentioned at the top of the show, though, the dollar hasn't been abiding by that textbook crude relationship. No. It's almost like a tell for the other way around now. Do you think that works, or is it too risky to try and, you know, buy crude because the dollar's up? I mean, it seems weird, but it's been working.
It does seem weird. I mean, that's a tough one. It has been working, you know, fundamentally and obviously over the long haul. That's not going to work. But again, you know, the trend is your friend. So it really depends. What is your time frame here? If you're in a, you know, maybe a half a day or a day time frame, sure, that can work. But I'd be real cautious of it.
Okay. All right. Thinking about the rest of this week, Scott, around the Fed, around inflation data. I mean, what's the macro trade then? You think when we've got so much pressure coming on to the second half of this week?
I mean, it's really unbelievable because, you know, as we've discussed, you know, in hindsight, going back, we see that number, that jobs number on Friday. You know, I would have thought S&Ps could have been down 2-3%, and here we are. So is this, you know, perhaps the straw that breaks the camel's back? If CPI and PPI come in strong, is this going to be the report that finally, you know, stocks break from? Or is the market just way too accepting here of the higher for longer mantra? I honestly, I wish I had the answer to that. I don't really have a gut feel either way because, you know, we're in this period of time here where some good news is good news and some good news is bad news. And the algos take over. And you know, I don't really understand it, to be quite honest with you. So from a more macro standpoint of volatility, I still think vol is pretty cheap. So overall, I'd be buying some vol, looking for a move, whether you're looking at the S&Ps or the Qs or, you know, even in the Russell. I think the Russell may have the biggest swing to be had because of volatility. Just you know, what CPI comes out, just these small caps. So that might be the one, if you want to, you know, play a move in one direction or the other, might be in the Russell.
Yeah, no, I'm with you there, especially when it's inflation linked, the most sensitive to bonds. So to your point, you can kind of be agnostic on maybe what the macro information is going to be, just that it's going to move, and the Russell's going to move the most.
Exactly. That's the way I look at it. So, you know, heading into the latter day tomorrow, I'll probably be looking at some time spreads, actually, the Russell and IWM, to see if there's any sort of volatility advantage I can take a look at, because I do think, like you just said, you can be agnostic about it and just really, you know, from a fundamental standpoint, think that it's going to move the most out of the major indices.
All right.
Meta.
Chat, and I think a good reminder, too, that the Russell is, that's been the one. Tells you, you know, how we're going to respond in the kind of weaker
I'm going to look at Meta.
Rates. So if it's good news on rates, Russell going to love it. If it's bad, he hates it. Like the approach. Smart things. And looking to take a stab in the downside for crude if it gets back above $80. Scott Bauer, Prosper Trading Academy. All right, one sell-off today is notable for those getting ready for November. Renita Young joining us with a developing story on DJT. All right, so seems like they got some audit problems.
Yeah, they do. I mean, after the company's former accountant was charged with massive fraud, they had to get a new accounting firm to do their audit, and they did. Apparently, the company submitted an updated inspection of its finances from the newly hired accounting firm after that last one was charged with the massive fraud by the SEC. And apparently, they're now complying with the established auditing standards, unlike the other company did.
Carvana?
The other accounting firm did. And the Donald J. Trump, or DJT,
Oh,
this
DJT.
company, it says that the latest filing amends a
The
registration
bullshit.
statement from April, and that the company is not going to be offering any new shares. But if anything, this news today shines a light on the curious case of the DJT finances, Oliver, because the company has a market cap of nearly $7.5 billion right now. It boasts that, right? But many analysts talk about how that...
Meta. What's this here? Oh, damn, look at all that freaking news. New Supreme Court to hear bid by Facebook to scuttle securities fraud lawsuit brought by shareholders. I thought I'd see something in here else. When did it come out? Oh, it's a dividend. Dividend 50 cents on 6/16/24 Central Time. So it's a 50-cent dividend will be paid out on 6 and 4 days. So that's probably why people are buying it. So you probably right before dividend payoff, it'll pull back again. Jesus. Always Clean Janitorial. This is on a recorded phone call. May I help you? So Meta's got a payout coming. We could be coming up to a double top. The only reason it pulled back like it did, and we had 3 black crows right here, is because they invested a lot of money in AI. It was just an overreaction, and it lasted 3 weeks with 3 black crows. So resistance will be the Head and Shoulders at 510.93, 511. And if it breaks that, we could double top at 528.55. Now support is going to be off the 21 if it decides to go ahead and pull on back on the weekly time frame. So we've got a 510.93. If that breaks, 528.55. And support will be off the 9 on the weekly, the 9 EMA. For right now, it's right around 481.95, and then a strong buy off the 21 if it does pull back to the 21. I don't see it doing that right now. I see it go ahead and moving on up until the PPI comes out this week. That's on Thursday. So 510 will be our target if it decides to go ahead and move on up this week. And if that breaks, we can move up past 510 and hit this other resistance at 516.79. Now on the daily, same thing. At 510.90, 510, 511 is going to be your resistance channel, 510 to 511. And if that breaks, 516.79. Long, 528.55. Low support at 481.95. You got a yin yang, you got a pivot point, pivot point, pivot point, pivot point, resistance, resistance, and then you got a gap. And if it decides to knife, 461, but I don't see it doing that. I see it holding a 581, 582 area. If it pulls back. As long as you stay above the 9, we're still bullish on the daily. GME over 25. Did you get that, Ivan? We got 7 more minutes left. Alrighty.
Policy, revision outlooks from the dots.
Thank you, Nate.
And we could be getting some fairly longer term. We got long-term implications last week with a big sell-off around the jobs data. But what's interesting is that our curve has kind of remained stable. The 10s to 2s didn't really change so much. They're kind of like moving in sync.
Yeah, they've been stuck at that 40, 50 basis point range for a little while now. And we don't expect that to change until there's clarity that those rate cuts are going to arrive. And that's been our case for a while now, and that as long as we expect the next move by the Fed to be a cut, we think that yield curve will be inverted. And then once those rate cuts arrive, we'll likely see short-term yields fall more than long-term yields, and we'd see a re-steepening, and then hopefully a positively sloped yield curve. One thing we are going to be focusing on, this ties into the dots, Oliver, but are those updated economic projections, because that's how they come up with those dots. How do they see the economy evolving? I'm not sure we're going to see too many changes there. If you look at the unemployment rate, they were projecting the rate to be around 4% at the end of this year and the next two, give or take a tenth each year. Considering we're at 4% right now, I wouldn't expect that to change much. And if you look at core PCE, they were projecting a core PCE rate of 2.6% by the end of this year. We're in the 2.8% area right now, so we're pretty close. So I don't think we'll see too many changes as it relates to those economic projections.
Okay. And as long as the general economic trajectory isn't changing too much, then I guess the strategy from a corporate credit side basically remains the same. High quality, don't get too exposed to the lower end of either quality or like rate sensitivity.
Yeah, that's right. That's been our case for a while now. We've had an up in quality bias, and our main rationale for that is just the tight level of spreads that we've seen across the credit spectrum. We think it makes sense to take risk if you're being compensated for it, and that's really not the case with things like high yield bonds right now, where average spreads or the yield you earn over comparable treasuries is only around 3%. That's pretty close to the cyclical low. It's well below the long-term average. So we just don't think it makes too much sense. Now, it doesn't mean you need to abandon high yield bonds. It doesn't mean you shouldn't consider them at all. If you're a long-term investor and you're willing to take risks, I think that's a key point. Because if you think about high yield bonds, they're issued by lower rated, highly indebted companies. There's a reason they have those low credit ratings, and they can be very volatile, but they offer those high yields. So the all-in absolute yields are around 8%. So again, a lot of that yield comes from just the yield of the level of treasury yields, not necessarily spreads. But again, 8% is pretty attractive. So if you're willing to ride out the ups and downs, we think they can make sense for long-term investors, just in sort of an equal weight strategic allocation. But for most investors, and we think most investors are really looking for safety with their fixed income investments, if you're willing to take just a little bit of risk, we do really like the investment grade corporate bond market. Spreads are low there as well, but I think the risk is significantly less. They have those investment grade credit ratings for a reason. You can get yields of around 5.5% or more. We think that's pretty attractive.
We've heard a couple stories last week really highlight some of the wall of loans that are coming up for some of the riskier stuff, but I guess that's in the category that you're avoiding.
Yeah, not avoiding though, just not overweighting. But that's the risk we're seeing. Is if you look at, say, bank loans, so they're a type of junk debt, but they have floating interest rates, meaning
that's a nice play today.
Coupons essentially reset with short-term rates, and high yield bonds tend to have short maturities, so they're very exposed to a higher for longer policy.
I like how it pulled back to 534.
The Fed holds at its peak level, that's really going to weigh on those indebted issuers. One, because they have a lot of debt, so that really impacts their bottom line, and because they have short-term maturities.
FOMAC meeting starts tomorrow.
We're seeing that rise in interest expense much faster than, say, an investment-grade issuer who has a much more diversified funding base.
Okay, great stuff, Colin. Good chat. Nice platform for us to do our work for the rest of the week and ready to trade bonds here on a busy one. Thank you very much, Mr. Martins from the Schwab Center for Financial Research. And when we come back, little closers panel, bell ringing, a little over 2 minutes away. Looks like we're going to get a good start to the week. With
Woo! Good job, Gio.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. So she had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for
Hitmaker.
No problem. So what are all those for?
Alrighty. Well, today was a very good day. We knew to get right onto it right at the opening of the gate. I went straight to the SPY and the SPX, which tells me that all the other trades will be good too. Always remember that. That's why I always go to them first thing. I want to see how them things are doing. If they're not doing too well, then the market might not be doing too well. I go to my watch list. I look for the lowest, look for the red, and see which trade I can take off the red. I look at the news, see if it's a reason for it to be down. If there's not, I'm going to go ahead and take one of these trades. And I look at all the gainers. I look at the volume high. I want to see which one's moving. I knew there'd be a lot of volume on NVIDIA today. That knife was a perfect catch. 100% gainer. SPY, SPX was a 300%. So remember that watch list, how important it is when you first come in first thing in the morning. You got to have your eyes on that watch list. See what has the highest volumes. Mondays are always the hardest day for me, but they also are the day that tells me what kind of week we're going to have. Maybe we wanted to have a good day today. We were red this morning. And we got first meeting for FOMAC tomorrow. They've got themselves in, they're behind the curve, the feds are. They don't know what the hell they're doing. Let's just say that. They don't. Or we wouldn't be in the third year of this process of rate cuts and rate hikes. They don't know. They don't know. They don't have a clue. The market's not reacting the way they want to. People are out working 2 jobs. If you have if you have a family and you have another person bringing in the income too, it probably helps a little bit. I know my grocery bill has doubled, and I feel sorry for the ones that don't have the money. But then the ones that don't have the money are living up like a king on food stamps. They're always got their little shopping cart full of steaks that I wish I could have, and they're usually sipping on a big gulp, driving in a Cadillac. I was talking to my sister. She's a big-time liberal. I said, damn, you want to borrow more money? Don't you know inflation's up 20%? I'd tell her, she said, well, it's not Biden's fault. I said, you know how much money he's printed in the past 3 years? And how much over the budget they've been? $2 trillion plus the 8-9 trillion that they printed already. Whoa. Market loves that kind of stuff. They love liquidity, but it'll soon run out. Now, we've been given a gift with this AI run. That's been their excuse to take the market up, no matter if we got into another war or not. So always when there's war, the industrial complex makes a big kudu money, and it's also good for the market. And we're going to end up rebuilding Gaza. We're going to end up putting money in Ukraine. And who else knows what? We gave billions to Iran already. They're rich again because we eased sanctions on their oil. So it's a wild geopolitical thing, but I more or less knew we were going to be bullish again today. Kind of the same attitude I had last Friday when we had the big knife on the SPX. We had that big knife down, and then we touched yesterday's low. See what I'm saying? We had the double bottom right here off that 1, 2, 3 megaphone pattern. Then we came up and hit the top of that pattern. So I'm using this whole week. This is a head and shoulders. These are your left shoulder, your right shoulder, and your right shoulder. Now we can go ahead and break out tomorrow and hit this other head and shoulders up here, right around 53.70.22. Or we can pull back and regain respect off this here pivot point. And if we drop on down again, it might not hold this time, and we'd be down here at the bottom of the megaphone pattern. Now, Apple had a conference today. I'm in the understanding that Apple doesn't do too well during these conferences and it pulls back, and then we'll have another opportunity to get into that trade. And that's it. I'm going to get out of here. YouTube, thank you a lot for all your compliments, and keep asking the questions. I might not hit them all the time. I'm usually late to them because I'm sitting here dealing with the room and I got things going on. Today I got phone calls. I'm trying to work on this building. I did my laundry. I got to go pull my towels out. I'm going to go run and see if I can buy this thing to put on the bottom of a door. I don't like being a handyman. I don't have the tools to be a handyman or the brain smarts. It seems like I've been one here lately. So that's it. Thanks for everybody's help. Yoko and Mike, and Magnificent, Jen, Randy, Yabba Dabba Doo says, thank you very much. I know the true meaning of Yabba Dabba Doo. Oh, damn, where'd it go? Yepers. So I'm going to get on out of here. I got a new desert painting I did. Let me see if I can pull it up. I got to looking at this thing. This is my desert painting right here. Old Indian teepee there, and we got them big rocks, a couple of trees and some shrubs. A little trail that leads you up to the mountain. Some nice looking clouds. So we'll get on out of here. Sometimes you might have to refresh your YouTube channels. Where is it?